Okay, Jeff, you're live.
All right. Hi, everybody. Thanks for coming. It's good to have you. We're kicking off our November conference. Welcome. Just a few items of business as we get started. If you have questions, ask them. We'll be monitoring the questions both in chat. You go to webinar, there's a questions button. You can click on it. Just whatever. YouTube, same thing. Just type it in the chat. We'll be able to see it there. It is good to see you. I'm glad you made it today. There you go. Let's go ahead and get kicked off with a little bit of a legal disclaimer. Today's demonstrations are designed to instruct you on using Metastock and the accompanying software plugins. They're not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. Hello, Neil. It's good to see you. Say hi as you come in. It's good to say all of it. A big goal that I have for the event is that you learn something. We have so many great guests today, including our first one. Before we get to him, though, I do want to talk a little bit about our sponsors. I want to say thank you to AAII. AAII has been a nonprofit. They do a lot of things. They do the investment survey, the AAII Investor Sentiment Survey, I believe is what that's called. They do a lot of courses. They have a whole active investor division, which our first speaker is actually kind of, from what I understand, in charge of that. They've been doing it for a huge amount of time. Very well-respected company, organization. And you can find out more about them if you go to aai.com. So a big thank you to AAII for sponsoring. Another sponsor I want to mention has been a sponsor of the Metastock conferences and summits and the events that we do since for 15 years. Great magazine. It's called Stocks and Commodities Magazine. Actually, to be more specific, it's called Technical Analysis of Stocks and Commodities. They've been publishing articles since 1982. They've got 1.3 million subscribers. And if you have a subscription to them, you get access to all of that information, all that good stuff. So you can find out more about them at traders.com. I do also want to mention the Traders Forum. Traders Forum is a live chat room where you can kind of come in, share ideas, talk to other traders, learn about the market, learn a lot about technical analysis. You can do that all for free. TheTradersForum.com. So I would highly recommend that you do that. We, of course, Metastock. We'll be using Metastock, talking about why it's been rated the #1 software in its price category for basically decades now. And we're going to talk about it pretty much all week. So without further ado, though, I want to get us to our first guest. Our first guest is a good friend of mine, Ray Rondeau. The thing that really kind of impresses me about Ray is he really comes off as somebody that really, when he's looking at the systems and the methodologies and the mechanisms that he uses for trade, he probably more than anybody else really dives into the numbers. And I think that's why he does such a good job with it. And that's how I'm going to introduce you today, Ray. Let's go ahead and get you started. Okay, I can see you. I can hear you. Okay. Now I'm going to go ahead and turn off. Yeah. Let me turn off my screen share, and that should allow you to kind of just share your screen, just like we did just a second ago.
Okay. All right. We should be there. Yes?
I don't see it yet.
Uh-oh.
Oh, wait. It's over here. The new interface is messing me up. I can totally
see it. I see it right there, Jeff.
All right. I'm going to get out of the way, Ray. Thank you for joining us. It's your turn. Go.
All right, my friend. Let me start my timer here, and we're going to try to stay off some of the numbers because sometimes I can get a little too quantitative, so we're not going to do a lot of that. But we're going to look at about evolving your approaches to today's investment markets. We're going to look at the importance of technology, system design, certainly, strategies. And this presentation really can be used from novice to professionals. And whether you decide to use these tools or not, there should be a lot of information that anybody can apply to their own systems and tools. I want to thank Kelly and Jeff, of course, with Metastock for having me here today and congratulating them on the release of Metastock 19. I believe it was early in the year they did this. And as you may know, Metastock and AI have partnered. I'm not going to spend a lot of time with this, but one of the benefits of this partnership is we are sharing AI's flagship educational offering, the Essential Investing video course with Metastock customers. And I mention this only because we're going to be giving away a few. If you're first to answer, we're going to give away some free classes here to kind of keep this interactive and interesting. But the course includes quizzes, testings, exams, certification from some of the most influential names in the business. And it also includes full AI membership and access to AI's fundamental-based stock scans with a 60-day money-back guarantee. So if you first answer some of the questions, you can win some free classes. Let's get into some trading here. This is the 5 broad topics that we're going to look at here. Gaining an edge, conviction tools, the systems, how to improve system performance, which can be used on any system, and then some concluding contemplations. We'll have some more giveaways. To be successful, an investor or trader needs an edge. This is pretty obvious, right? I've been doing this for decades, as Jeff said. I've been a researcher, a tool developer, and more importantly, a trader for decades. And as detailed in this Kiplinger article that they did, I think in 2022 on me, I have a few core beliefs. And belief number 1 is to be successful, you need technology. Others have it, you're going to need it. That's why we're here with Metastock. Belief 2, you need proven approaches, proven with certified results. And we're going to look at that, and we do that with all our systems. Belief 3, you must evolve with the markets. I'm going to show you numerous examples of this today. And belief 4, you have to have an edge, right? This is only logical. So there's the 4 right there that I think are kind of some of my core beliefs. Now, my edge is backtesting and letting computers do the bulk of my trading for me. And to save some time here, as I'm talking, you can see an example of me doing some backtesting with a third-party system that I use. Now, a large portion of my finding in the research and what you see here today is evidence-backed. This is a foundation of AAII. To properly develop indicators, tools, and strategies, we have to program sometimes literally thousands of lines of code to properly backtest and get us into the right directions. And we do this over decade-long time periods on hundreds, if not thousands, of issues to establish factors. And then we synergize those factors to create the most efficient systems. And again, this can take months of time to develop a good system, and we're going to look at one of these today. Now, if you're unfamiliar with this process, it's a start with establishing factors, which is critical in strategy design. And here's an example of this right here. And if I could get my pointer out here. There we go, right there. This is backtesting optimization of a new indicator called R reversion, which should be coming out with Metastock shortly. And you can see right here that as bar length increases, we have an open mic, somebody just in the home office, just so you know, we can hear you coughing and talking. In this table, you can see optimizations of bar length for R reversion. And you can see right here, as the bar length increases as we go down, right, we can see all of our metrics, total return increasing, average trade amount, Sharpe ratios, K ratios, which consistent return, get better to a certain point, and then they start to back off and get worse. We call this a Gaussian relationship. And this is one way we can start to establish factors. And we're looking for linear, apex, reverse apex, or V-type relationship. We're not looking for artifacts or cherry picking unrelated chance combinations. So that's just a little background on a factor. And here's just another example of this. And you can see right here the difference in return by just changing a simple moving average to an exponential moving average. And look at how much it improves. This is simply one letter of code difference. And it's similar to Bollinger Band, right? John was right. Simple moving average works better than exponential moving average, even though it may not be logical. The point is here that we can produce evidence to formulate our systems. Now, to illustrate this, we're going to have a little fun. And the first person to type the number of dollars closest to the answer to the next question will win a free class. Okay? And Jeff is the judge, jury, and executioner. And we'll announce the winners at the end. And we'll email you a link so you can get your free class. Again, we want to kind of keep this fun. How much do you think that improving in an execution of, say, 5 cents on 200 shares on a buy would improve your financial situation 35 years later if in the future you could generate an 11% annual return? And we should all be able to do that. Okay, and that's for record, that's the average return of U.S. equities over the last 90 years. So what do you think? Type it in. How much do you think that improving an execution of 5 cents on 200 shares on a buy would improve your situation? How much more money would you have down the road 35 years later if I could just save a nickel on 200 shares on a buy? Okay? I don't want to go too over here, so there it is. The answer is an investor would have an additional $375 for every nickel on 200 shares, every $10 on an entry with the parameters due to compounding. That's $750 on each trade, round trip, 35 years out, an 11% future return. 100 trades, say 4 trades a month, maybe a trade a week for only 2 years, you've now generated $75,000 more in your investment account. Right? In the end, we're talking hundreds of thousands of dollars over the average investor's life. So you need an edge. We don't guess. Nickels and pennies matter. We use technology and we evolve with the market. And this is really the primary theme of this presentation. As many of the commonly used investment tools and indicators were developed 40 or 50 years ago are outdated. And we can see this with testing, and there are better tools and approaches. On this screen, you can see certified results of a large study on every stock in the S&P 500 over a 10-year period between Bollinger Bands, stochastics, RSI, and R reversion. And you can see that right here, that the key line is right here. Look at the improvement of over just about every classic performance metrics. Look at how it improves results by synergizing these factors and updating and evolving to today's markets. Again, this indicator will be coming out, but we're talking a minimum 20% average return per day improvement efficiency. It matters. Okay, so let's look at one of these factors. And the factor that we're going to look at is conviction and how we use it to design systems with back-tested 85% hit rate ratios with a 3.5 profit factor. Really, that's our goal. We start with volume. If you don't know what volume is, it's simply the number of units, shares, or contracts transacted in a given time period. It's a measure of the intensity associated with a price move. And we display this amount on the bottom of a chart. And to keep this simple, our chart will always be a day for today. Here we can see an example of some daily volume bars, and the amount of volume is represented by the height of the bar. And a volume bar can be plotted as a single color or 2 colors, red if price finishes down from the open, and green if price finishes up from the open. And don't worry, we're going to get much more complex very quickly here, but I want to set a basis. An important point here is that volume and conviction, as we'll see, levels are only relevant when compared to each issue's historical level. The levels are not absolute unless we're using them for liquidity analysis, and this is a mistake that some investors make. What's high for Tesla may not be high for GE, or what may be high for GE today may not have been high 3 to 6 months ago. So we're looking for the relativity of the intensity to the issue in its recent history. So now that we have it displayed, how do we use volume? Well, it's believed, and it's logical, that price movements on days with relatively high volume are more important and relevant than price moves on days with lower relative volume. Just think of it like a significant other, a teacher, or your boss, right? The higher their voice gets, the higher the volume, the more meaning and the seriousness of what's transpiring. And we see relatively high volume for a variety of reasons, with new unanticipated revelations about a security. They often cause price shocks, right? The big boys are coming in. They may know something. We can see their footprint. We can see it right down here. Now, another reason is technical events, where we can see this breach of major support in this chart of gold, where gold literally dropped 11.3% in 2 days. Now, technicals have relevancy, and they affect intensity or volume. If nothing else, because of the self-fulfilling prophecy of the patents, and that's how trade is, how we make money and how we make a living. Now, expanding this theory to volume and trends, and then we're going to get to conviction, we're taught that volume expanding with the price move in the direction of the trend is supportive of the continuation of the trend. This is logical. Similarly, we're taught that lower relative volume levels and diminishing normal natural price retracements back towards the trend are also considered to be supportive of the current trend, our red arrows. Again, logical. This makes sense. And it's straightforward. It's been around for a long time, but unfortunately our markets have changed dramatically since the tools that plot and analyze volume were first developed. On this slide, you can see several of those reasons, and they're all legit. And that's what we're going to look at now. Not necessarily a paradigm shift on the analysis techniques, but adjustments to the way intensity is measured and displayed. And we're going to look at some tools to do that, and then take them tools to develop strategies to approach our 85% hit rate, which we'll easily get to. Now, this brings us to the term conviction. And to be clear, this is just a term that we're using. In fact, in its most basic form, conviction is as close to dollar volume as we can get. And both values represent the approximate total dollars exchanged over a given time period. Not volume, but dollars, and this is important. So how does conviction differ from dollar volume? Conviction, again, our term, uses the average of the bar's high, low, close, and open, as opposed to just the closing price as per the dollar volume definition. In this slide, you can see the difference in calculations. Dollar volume uses closing. Conviction uses just the average of the four. Why not use VWAP to get a real accurate representation? It's just not available historically in enough platforms. So that's why we know. Now, this is a key slide. Here we have single colored volume bars plotted in the middle, and conviction dollars with the RCM indicator plotted in the lower plan. And I should point out that RCM stands for relative conviction momentum, and it's one of the tools in the Metastock platform, which you can get. Now look at point A. Here the amount of selling pressure seems to be increasing with the volume bars on this downtrend. And because of this, we would conclude, according to traditional theory, that the downward intensity is increasing and likely to continue, and it should continue downward. But when looking at the actual dollar value, the true conviction at point B, we can see that the intensity is actually decreasing from a total of $100 million per day to about $80 million per day from the start of the downtrend. Yeah, the volume may be increasing, but that's only because the stock prices during this period are now less than half of what they were when the downward trend started. Volume creates an intensity illusion or a skew on large price moves. This is undisputable. Now here's another example with Tesla, where the price drops from $300 to $100 between the yellow vertical lines, and volume at point A is displaying again that increase in intensity illusion. The trend is going to continue, but when we look at point B, we can see that the selling intensity as measured by dollars is not increasing, and hence we see the upward turn in prices. Now the question is, why do so many platforms use volume? Because it's cheap and it doesn't have to be processed. And obviously this works both ways when prices rise dramatically. Here's a long-term example of this with PBF, where prices went from $5 to $50, ka-ching, and RCM at line B is supporting the continuation of the 18-month upward trend, showing supportive increasing intensity. But what do we see? Again, with volume, it's skewing it, displaying a decrease in saying, no, the trend isn't going to continue. Okay, so that's an important concept, and where dollar volume and conviction can be used more to our advantage, and then we're going to show that in the strategies and mathematically or quantitatively. Now, unfortunately, this phenomenon has hurt many investors who have attempted to use volume analysis in this manner. It's not because a trader or investor doesn't know the rules, but it's because of that visual skew that can occur on large prices, which conviction in general and RCM specifically addresses, because we all agree it's dollars that matter. So diving into a little deeper, what exactly is RCM, which is in the Metastock platform again, or what should you be looking for with intensity readings? In this chart of AT&T, we can see this. The primary signals with the RCM2 and Metastock are the dots. And I indicated places the signals and commentary right on the chart to help you. But you can do this yourself if you want to. Green dots show area of potential bullish trends. What do we see? We see the slowing of diminishing prices on less conviction, right? True conviction. The selling pressure is losing steam. We see the green dots, and we expect, not expect, but there's the possibility of a turn here. The red dots show area of potential bearish turns, identifying the slowing of increasing prices on diminishing conviction. The upward trend is losing this. And we're looking for multiple RCM signals along with the flattening of price. Now, intensity readings in RCM can also be used as secondary signal for reinforcing the primary direction of the trend. And these appear as small plus or tick signals with our tools. And our upward price trends, consistent green tick marks are reinforcing of the continuation of the upward trend. And when we don't see them, that is not reinforcing. You could see it right here. We could see the continuation, but we could see here prices going up, but there's a lack of tick marks here. The underlying intensity is not really supportive. Now, RCM not only displays if the security prices finishes up or down, but it also adjusts the intensity of the color to reflect the magnitude of the price move. We want to use technology to our advantage. So brighter green colored highlighted colors right here are larger upward price moves. Brighter red colored highlighted areas downward, larger downward moves. The height of the bar reflects the intensity, the color of the bar, the magnitude of the price moves. Now, why would we do this? Because it makes it much easier to identify important price moves like blow-offs, high volume, large upward price moves, and selling climaxes, high volume, large downward price moves. And we could see this example again with MicroStrategy, where volume doesn't recognize the blow-off top, but we can see how conviction does at point A. Okay, a couple more things on this. Now, if you are going to use, even if you only use primary intensity signals, it's important to remember that RCM or any intensity momentum readings are best as short to intermediate term trend retracement signal generators. Here's an excellent example of this with the Qs, showing RCM clearly identifying shorter term trends, but it's only back to major resistance with the prevailing trends at line A, B, and C. So keep that in mind. It's critical to note that RCM and all intensity-based indicators only display areas of a potential trend change in trend. It's not an absolute. And this is true with all the conviction indicators, and that's why we use 3 conviction indicators. With the same chart and the same thing, we have just another guideline here. If you're going with the trend, you only need one or two marks to be supportive of that trend, but you need a lot of signals for a true trend reversal. Okay, so that's RCM, that's volume, that's conviction, and why you may want to consider using dollar volume as opposed to volume. To me, that's a no-brainer. Our second study for intensity readings in the tools that we have with Metastock is called Optimized Balance Conviction, or OBC. And this is a very impressive tool. RCM looks at increasing or decreasing volume in relationship to trend. But for trend continuation or trend reversal appraisals, there's another way to do this, and it's by evaluating up volume versus down volume, or up conviction versus down conviction in our case. Now, OBV analyzes up versus down intensity like Granville's OBV, on-balance volume, but OBV was created literally 60 years ago in a completely different market environment, in an era where we were using pencils and papers for calculations. As you would expect, OBC is going to be different than OBV. One, it uses modified dollar volume or conviction, which has the same advantages in the previous examples, but OBC does something else that's very important. It proportions the amount of the intensity to the magnitude of the price change to calculate its values. And this is the most complex part of this entire webinar, but I'm sure you're going to get this in the next slide or two. Here's an example of the calculation differences in this table, which I'm really not going to go into, but think of it this way. With OBV, the stock could literally drop 0.1% or 50%, and OBV will subtract the same amount of volume in both circumstances. From another perspective, if a stock finishes up a penny, it would add all that as positive volume, and if it finishes just 2 cents lower than that, it would then subtract all of that as negative volume. It totally disregards the magnitude of the move. It's all or nothing. And obviously, this is not the best way to approach this. We're going to look at statistics supporting that in a few slides. Now, that table showed an extremely simplified example to illustrate the basic calculation concepts. But in truth, the percentage factors and thresholds for determining the percentage amounts of conviction in OBC to be calculated are complex, really beyond the scope of this presentation. But in a sentence, for those that want to know, OBC proportions a percentage of the dollar volume up to a certain ATR threshold, and then it takes a linear one-to-one measurement up to another ATR threshold, and then it will buffer extremely high readings over that threshold to prevent outlier skews. I know, it's complex. But when looking at the data that the computer spit out, it was very clear and straightforward how best to design this indicator. The takeaway here is with this approach, accumulated conviction is more representative of the intensity of the up and down moves, and moves on higher dollar volume and large price moves are given more weight than moves on high dollar volume and small price changes on both up and down moves. This differs from OBV, but there's more. Now here's another math example that we won't cover in detail. You can see the slide later. And this is what an indicator called Chaikin's accumulation distribution. The catch here is with AD, the indicator doesn't even include overnight price movements. I don't know about you, but those count in my account, right? I'm not kidding. A stock could lose 30%, but if the stock closed finished higher than the open by even a single penny, that indicator would say that's all positive intensity. Really? The indicator only measures and calculates from the open to the close. With OBC, it includes the overnight price action as it should, and I think we'd most all agree with that. And we can find these types of issues with essentially all of the first generation common indicators. Enough math. How do we use OBC? Very simple, very powerful. Like OBV, we plot it over price, and its interpretations are exactly the same. In this chart, OBC is in white, and OBV, which is very faint, which is in magenta. The primary signal is divergences from the price action. Now, you won't find many of them, but when you do, they're often very meaningful. For those of you who are unfamiliar with the concept of a divergence, this occurs when price and an indicator are just heading in different directions. An OBC bearish divergence occurs when prices are heading upward or sideways, and OBC starts heading downward. I'm going to show you some real life examples of this. Here's one on KLAC. Right? The intensity of the moves on the up days is now less than those on the down days, which the naked eye just can't detect. So we see prices going up, but look what's happening on the intensity of the days. OBC starts printing and saying, hey, something's not right here. An OBC bullish divergence occurs when prices are heading down or sideways, and now OBC starts moving upward. Here's an excellent OBC bullish divergence on Tesla. Now, unfortunately, most of these are not this obvious, but we can see where prices are heading down on Tesla, forming a beautiful bullish bowl. Here's our break right here. And OBC is confirming this as a secondary indicator. Hey, the underlying price action is supportive of a change. And I'm going to zoom in on this example just to give you a rough idea what's happening here. We can see OBC in white and OBV in magenta again. You can see the lines. In the blue square, you can see we had a number of down days shown as dots on close, but these down days were very small. Here, OBV kept subtracting the full value of volume, propelling the line further downward, but the moves really weren't meaningful. It was just losing very small amounts. OBC only took a very small portion of the downward conviction amount because the moves were so small, and hence this line started heading upward because the large upward conviction-based moves. plotting the correct forecasting divergence, at least in this case. So you kind of see what's happening here underlying. And again, very effective. Here's a chart of the an ETF SPY, the S&P 500 in 2022. And at point A, you could see a significant divergence occurring where, yes, prices are still heading up, the green arrow, but we could clearly see OBC saying something is not right here. And it correctly forecasted a 6-month decline. At the bottom, we can see prices at point B printing a bullish divergence, right? We can see prices still heading down, but see how OBC starts heading up. It shows us something that our eyes can't detect. Like with RCM, if you're having trouble spotting these divergences at first, Metastock has an expert advisor that it can assist you with the analysis. Here we have a chart on Kellogg printing a beautiful OBC bullish divergence in March of 2022 that led to a strong subsequent uptrend. To the left, you can see the commentary reports with more data than you're probably ever going to use or ever really look at. But the important point here is we give you written guidance. It kind of tells you right here, OBC divergent, possible weakness in a downward move. And it also gives you a strength rating, which I believe I'm going to talk to you about right here. And it provides you a divergent strength rating when the divergence is occurring. This is based on the measurement and the observations and logic that larger divergences are more meaningful. So if you have a higher positive OBC value, it's more representative of a possible bullish turn in price from a current downtrend. And if you see a lower negative OBC strength rating, it's more representative of a possible bearish turn in prices from a current uptrend. And we can see these correlations as I showed you with the factors, that larger numbers are more accurate and representative of predicting future price action. If you're going to use up-down intensity indicators like OBC, there's a few tendencies you should also be aware of, with the most important being that bullish divergences are harder to find, but they also seem more reliable. Why? Well, because downward moves typically have more intensity due to fear being a bigger motivator than greed. And when we see the opposite of this, it's noteworthy. So bullish OBC divergences or intensity-based divergences tend to be actually more accurate, but again, they're harder to find. There's some other general elements of OBC that you should understand. To save time, I'm going to skip these, but you can get these classes, again, free from AAII, and there's a lot more in depth. And we go a lot slower. In the end, OBC interpretations are simple. You look for indicator price divergences, with large divergences being more meaningful. And remember that bullish divergences tend to be more rare but reliable due to fear-greed relationships of the market participants. Okay, that's 2 of them. We got 1 more. How am I doing on time? Okay. This brings us to kinetic conviction, our 3rd and final tool before we start looking at the strategies and the factors that make up these strategies. Tell me, which factors I should be looking for in my trading. So let's define the problem. We're not going to spend a lot of time on this. I used to spend a lot of time with math on this. High-frequency trading distorts intensity readings like volume and conviction. We know this. We see all types of, I'm going to call them guesses, really, of how much HFT activity there is. We know there's a lot of it. And we know that this is going to distort, we're going to distort our readings. There's also a second major influence that we have to consider, and that's dark pool activity. Now, dark pools are private exchanges for institutional investors that allows them to trade large blocks of a security without adversely affecting or shocking the market price. They exchange shares where the public can't initially see them. They're controversial with pros and cons, but the point is that we have to acknowledge that they do exist. For our purpose, the key thing to keep in mind is with dark pools that they do not disclose their intentions. So the order books don't show them. You shouldn't trust anything you see here anyway, but that's another lecture. But the results are reported, albeit on delay, after the completion of the dire block trade to the consolidated tape. Now, dark pools account for a large number of total shares traded, with estimates vary again so widely that I'm not going to try to approximate them. Obviously, these elements can distort our readings, so we need to compensate. With the goal here being to increase the sensitivity of the indicators in an effort to minimize the bloating of the HFT activity while including that of the dark pool activity. So we want to see a more accurate representation of what intensity-based readings are truly meaningful and which ones are not. And HFT and dot pools can affect this. This brings us to kinetic conviction. This indicator highlights, it's always been designed to highlight important activity by increasing the relative sensitivity of intensity-based moves by the means of measuring price, volatility, volume, and conviction dollars. You can use volume and turn it on to volume if you want, but I would not recommend it. And it does this by calculating and displaying the difference between the current bar's conviction and its exponentially weighted average conviction differential. KC displays the conviction differential. We want to get rid of that big bottom that's being bloated by HFT. Not the level, the difference from its average, and it's plotted on a histogram, which you could see right here. For instance, in a mathematical example, is the day's conviction is $1.2 million, we'll just say, and its exponentially weighted average is $1 million. KC displays a positive 200,000 above the zero line. And it's easier to view and interpret than explain, but that's what it's looking at. And you have to remember, this zero line is not really a zero line. It's constantly changing because it's an exponentially weighted moving average. So here we have standard volume bars in the lower pane and kinetic conviction in the middle pane. With standard volume bars, it's not always to see if the day's intensity is noteworthy or even if the recent volume levels are above or below average. And this is what kinetic conviction does. We can clearly see this. And not just above average, but it's above its recent activity, because that's what matters. Evaluations are straightforward, as you can imagine. If KC values are above the zero line, they're displaying that the bar's conviction differential is above its conviction differential average. If KC values are below zero line, they're displaying the bar's conviction differential is below its conviction average. And I'll show you a couple examples how to interpret this. KC price moves with intensity values below. What we did here was, KC price moves with intensity values above the upper green standard deviation band, which is hard to see, but it's right here, are considered more relevant and meaningful. Okay, and these deviation bands now are of the conviction differential, again, not conviction itself. KC price moves with intensity values below the lower red standard deviation band, which is even harder to see, but it's there, are considered less relevant and meaningful. Here, the associated price moves are less relevant and could be questioned. The bottom line is, if you see kinetic conviction going outside the bands, take notice. Now, here's an example of how you might use this. This is what how to use on Tesla. This is another example on Tesla. And you can see how we have high supportive conviction on the upward trend in green. We can see it's clearly above conviction. And we can see it's with the upward trend. Then we see when prices do stall for a few months, it's on very low relative intensity. We apply what we were taught, and now it's not, yes, it's a stabilization of the trend, but it's not a turn in the trend. And then we can see prices take back off. That'd be a simple example. KC has an expert advisor, and again, commentary reports with written assessments telling you when something noteworthy is happening. And one key measurement that I do want to point out is KC dollar intensity, and you can see that on the blue arrow right here. A value of 0 represents the conviction is equal to its average. 100%, it's twice its average, and a value of minus 50% indicates that it's half of its average. This is probably the most important single measurement of the conviction indicators for an assessment. Now we've covered all three indicators. This is kind of the money slide here. And this is kind of the recommended setup for a complete conviction view. And this template's already set up for you in Metastock. It's called the AI Conviction Trilogy. On the bottom, point A, we have RCM for classic price trend versus intensity momentum analysis. Is it confirming or not? In the middle pane of point B, we have KC to highlight recent moves or moves of relative significance by plotting conviction differentials. And we have standard deviation bands to help you interpret it. And on the top at point C, we have OBC that measures up, down conviction, and its key signals are divergences showing potential areas of trend. The expert advisors set the RCM, which is best probably for most investors, but you could set it to kinetic conviction for short-term traders. So complete analysis in one window. It's easy to interpret, but how do we know it works? Or can we at least produce some evidence to show that it works? This is where we get to the conviction systems. Okay, Ray, it's a great story. I think most investors would say the tools probably do make sense. We can produce some evidence, but as Grace Hopper once stated, and I use this quote all the time, one accurate measurement is worth 1,000 expert opinions. And story's a story, but can we produce some evidence to show this? So here we're going to look to validate the indicators to reinforce our investment analysis, which we just covered, and then use this information to form the systems to generate trade ideas in Metastock Explorer, or for you to use and create your own systems. Before we start, a little housework. Basically, this screen says don't steal our stuff, although we really can't stop you. 2, this screen basically tells you all the reasons why the material may not be 100% accurate. There are exceptions to every rule, and why the material may not be suited for all investors. And 3rd, this one Jeff required me to put in, so you can ask him about that one. Okay. All of the results are from that you're going to see are from a single 10-year study from 2014 through 2023 on all the components of the S&P 500 at the time of study. When a signal occurred, $5,000 worth of whole shares of stock was purchased, rounding down, and all signals were end of day. We wanted to keep this simple for most investors. Here's the results of the LT scan. LT stands for long term, and highlights are a good number of candidates at 1,766, a strong 2.66 profit factor, and profit factor is just total wins divided by total losses, just so you know. LT generated an average trade return of $215 on a $5,000 investment at 4.35%, with a modest holding period of under 11 weeks. This resulted in over a 20% non-compounded annual return. Remember that for our quizzes coming up. And an incredible maximum consecutive win rate of 48 in a row, but on a negative, it lost 13 times in a row. But this is a ramification of a long-only strategy holding it through the COVID drop. Here's the equity curve. It did have a minor drawdown again during COVID, but held up well through this bear market in this area. Probably appropriate for investors and traders with long-term time horizons while focusing on total return, including dividends, and looking for a system to identify potential positions to assist. And then you can look from there and kind of refine the securities down. And I would add that this may be better a system for option players due to its longer holding period. Now here's the results for the ST scan, which stands for short term. Highlights here are the number of candidates at 1873, and it really has the most balanced approach. The ST system generated an average return of 2.24% with a modest holding period of only 31 days. Not bars. Okay, 31 days, that's important. Negative is it had the lowest profit factor, although it respectable at 2.5 to 1. A lot of people shoot for 2 to 1. It had 9 consecutive losses at one point in a 10-year period, but max consecutive wins at 35 helped offset that pain. And here's the view of the system. This is the realized equity curve of this system, and these are exact from the program that anyone can replicate. You can replicate these by performing a backtest. These are not hand-drawn lines. The realized equity curve shows results after the closing of the positions and not on a day-by-day closing price valuation. This is a beautiful, consistent equity curve with no signs from the COVID crash and fast acceleration after it. I would say this is probably appropriate for investors and traders when it's an intermediate term time horizon looking for a system to identify a list of potential positions. And for optimal performance, you would probably want to refine this. I'm going to show you some of the things to look for in our last section on how to refine this. And here's the results for the profit. This is the profit factor scan, PF. And this had extremely impressive results. We're now at an 82% hit rate and a 3.73 profit factor. But on the downside of this, it only generated 3.5 trades per month. What's happening now is we're aligning these factors and they have to be so perfect that it's becoming so particular to generate these higher returns. Here's the realized equity curve. The system is so selective. Again, it didn't have any losing years during a 10-year period, and it never even lost more than 2 consecutive trades over 10 years. And I wouldn't expect that to continue. That's unrealistic. I would say this system is probably best for investors or traders with a short-term time horizon who prioritize risk and consistency of returns and who are willing to scan a larger universe of stocks from potential positions. Again, there's trade-offs with this. Now we're getting so refined with the factors, that we're getting very few. If you're interested in a conviction system, we provide each conviction user extremely detailed performance reports for all 3 systems so you can make an informed decision. And I can give you these if you like, just for attending the event, even if you decide not to use conviction. We give you system parameters, hit ratios, projected returns, popular ratios, transaction entry, exit efficiencies, and drawdowns. So we want to make sure you're aware of performance in the worst of time and make sure it matches your risk profile. Okay. One thing that's important, and I'm not going to spend a lot of time on this, it's a big bugaboo of mine. Anybody can say anything in this, even though we give you the system performance reports and you can look trade by trade to confirm them. We had all 3 of our system performance reports and results certified by an independent third-party company called QuantKey. QuantKey is a leader in system design development, appraisals, and evaluations. I believe they've been in business for about 18 years. Okay. But this is going to actually get better because I'm going to show you now in the next segment, in a few slides, how these reported results are very likely underestimated and how you can easily improve these results by making just a few modifications. I'm hamstrung, and I have to stick to a very rigid set of standards to develop these performance parameters. If you have an interest in these tools or systems, we give you manuals for each tool. You can see it here. You get onboarding emails with tips and suggestions. And of course, you get the full education classes with testing, certification, and credits. We're trying to help you every step of the way. This offer, which includes a significant show discount, which I'm sure Jeff will expound on, also includes 1 year free AI membership and a 30-day money-back guarantee. And I just want to mention this quickly. I got about 20 minutes left, maybe 15, and I am on time here, that this package also includes AAI's Prove. And what Prove does here, it volatility adjusts how many shares of each security that you should be purchasing and rebalancing to as portfolio prices changes over time. It's, I think, a very valuable tool. So what it does is it proportionalizes the risk. The position, it gives you the position size in shares in dollars for each security so that you have an equal end effect on your performance on a risk-adjusted basis, basic statistical arbitrage, right? For instance, you would say, you put in any amount, I want to lose $50 on an average down day for this security with its current volatility, so how many shares should I buy? And you can also use this tool to help you determine how much to hedge your portfolio with any given security. And you can also start to extrapolate this out for delta neutral and equity market or neutral strategies. It's a very powerful tool, and you can even mix mutual fund stocks and ETFs in it. And it proportionalizes everything by factoring in volatility, which is the missing link. Don't buy equal dollar amounts of each position. Factor in the volatility. Take a mathematical approach to this. Okay, our last section. And this section is, we have 2 sections actually, 2 5-minute sections left. In this section, we're going to look at 6 methods to improve the performance of these systems, or really the performance of any system, investing or trading approach. For our purposes, our goal is to kind of hit an 85% hit rate with a 3.5 profit factor goal. And in this section, we're going to show you how to do that because we were just slightly short of that with the profit factor system. Our first method to improve performance, you don't have to do anything at all, right? The conviction studies don't include dividends, which would greatly increase your returns. Studies show that what? 40% of the total return of the S&P 500 are dividends. That was our study group. All you're looking at is the appreciation on price. We didn't even factor in the dividends into that. You obviously would. That counts as total return. So now you can see how we're getting up there. when you add in back in the dividend amounts, not only will this increase your returns, but many of the conviction systems reported small losses. I mean, look at how small these are, 0.01, 0.02, 0.04. When you act in the dividends, these losses, quote reported losses, would then really be gains because of the dividends that you receive. This gets us to our 85%. Number two, there's no market timing mechanism, which is absurd. The systems that I've designed and that are in Metastock take or show entries even in obviously bad times, and you probably wouldn't be doing that. So you can help override this, right? You don't want to fight the tide. Our third way are the technical elements, of course, and this one is the one we really want to drive home. I'm only talking about conviction today and not the best setups and the best way to day trade. But right, scans are built from systems that are designed for research purposes and to identify factors. Right? From an execution standpoint, scans purposes to identify securities that meet the criteria and to reduce a large number of securities down to a manageable size for future or further evaluations. Even someone with modest trading or technical skills is going to be able to filter out the maybe not as good setups, and you should be able to improve your system performance significantly. Again, the purpose of the scan is to alert you to securities that have shown with these set of factors to be highly probable. But don't be afraid to layer in a technical element. You use your support resistance, your relative strength, and the things that you favor, your other oscillators, etc. Fourth, these systems then incorporate fundamentals. Anyone who gets the conviction package will also get a complimentary 1-year AI membership, and they include some excellent fundamental scan tools. This video shows some of these scans, and they're based on some of the philosophies of some of the world's all-time great investors. My favorite here is the My Screen scan, and what this does, it shows you the individual stocks that appear in the largest number of fundamental-based systems. For some investors, the integration of fundamental stock selections at some levels is an area that, again, could improve your performance, especially when using the conviction long-term scan. Number 5, this is the big one. Compound returns on the profit factor system back-tested to well over 40%. But for professionals who like to be more aggressive, integrating options is a consideration, as these systems target very quick, high probability executions. Obviously, the effectiveness of this method is dependent on the skill of you as a trader or investor, but I would not rule out using options if you're experienced and comfortable using them, because the systems are designed for high probability, short, brief, quick moves. Number 6, money management. Last one. We do not compound returns for the systems, which is ridiculous. Reinvesting profits would have greatly enhanced your overall returns. And additionally, you can increase returns by incorporating money management techniques like moving stop losses to assure profitability and scaling out of your positions and continuing to let some of your profits run, increasing your overall returns. Here you can see 2 conviction trades where profits could have been extended by simply staying with the upward trend. Yes, it did a great job grabbing these quick moves as it does, but again, you could have taken half off the table, moved your stop up in here, minus gapping, secured an overall gain, and then just let it run. Don't be afraid to use the systems and the tools as a base, but then incorporate some of the other skills that you think that you're proficient at. Okay, for those of us who stayed to the end, and I hope it's most of you, I want to just reinforce the focus of this presentation. We're going to do a couple more quick giveaways, and I am right on time. So, Jeff, I deserve a gold star after for this. We're going to see who's been paying attention. So get ready to type your answers. And this is just a fun segment. There's only like 5 slides left here. Here's the question. How much money would a couple, Shane and Shanna, bequeath their newborn son at their son's retirement at the age of 70 by investing $1,000 per year for only the first 18 years of their son's life? I'll let you think about that. Somebody's going to take $83 a month, right? $2.76 per day, a cup of coffee, and they're going to invest $83 a month for a total investment of $1,000 a year for 18 years. That's it. Okay? How much money could they give their newborn son at the age of 70 if they just did that at an 11% annual return? How much money do you think they would be able to give them? Okay? I just want to make sure. Take a stab at it, right? You can win a free class. Okay. Here's the answer. It comes out to over 12 million in today's value dollars. Today's value dollars to their son at their son's retirement. All for sacrificing a cup of coffee each day and only for 18 years. Investing works. Investing is a way to build significant wealth. And Shane and Shanna, they were both members, and they worked together with this in conjunction with an advanced group of professionals and traders investors that used to meet at MIT. I used to lead this group, and they developed this strategy. And they developed this strategy so Shane and Shanna did not require a change in lifestyle. They didn't require any extra effort. And believe it or not, they developed this strategy, and they didn't even have a penny to start investing. And if you'd like to learn how they did it, and how you can apply the same principles, this topic is covered in detail in the first 2 classes of the Essential Investing course, which you can, again, order right here. Jeff, you can order it right from Metastock. Jeff, if you could post the link, or you could go to the AAI site. Again, Metastock will get credit for this, again, because we've partnered with them. It's a great class. It looks at 25 key investing revelations that all traders and investors should know, and it develops this strategy that anybody can follow to build significant wealth. Now, obviously, education is important to building wealth through investing, but there's another critical related element, and this is our last quiz. If Shane and Shanna could generate $12 million for their son's retirement at 11%, how much do you think they could bequeath him if they generated an annual return of 14%? Don't be afraid. Type your answer in. Hopefully somebody's typing it in. I can't say. Okay, just 3% more. I can improve my return percentage just 3% more from 11 to 14%. How much do you think that it would be? You would now bequeath just 3% more? The answer is over $66 million. Look at this. A key point here is percentage returns or increases in percentage returns are not linear. A 3% increase in return from 2 to 5% only amounts to what? Another $300,000. Look at the 3% increase from 11 to 14%. Right? We're talking, I don't know, another 50 million plus. This is an important point. Playing it safe down this area is not always the most prudent. There's a supply-demand imbalance, and the mathematics don't support it. This is where we want to be, up in this area, if we can get there. An investor's percentage return is the cornerstone of building true wealth through investing. And naturally, that return is directly linked to the investor's strategies and its effectiveness. Don't skimp here. Strategies are key. If a 14% return can grow into 66 million, you can extrapolate the numbers yourself when you can start to getting to by following strategies and systems with 20% plus returns. And this is where the Conviction Plus system came in, and the very tools that we kind of discussed throughout this presentation, and the ones that I'm assuming that Jeff is going to tell you about, because I am on my last slide. My sincerest hope is that you learned something in this presentation that you can use to improve your trading and investment returns. Follow your own systems and follow your own instincts and use your analytical strengths and weaknesses to be successful here. Anybody can build wealth through investing. Please remember we have reversion coming out within Metastock in spring of 2025. That indicator backtest to better than any other indicator is a single indicator for buy-sell directions. And my name is Rondeau, which I think you know that. I'm an investment strategist and senior technical analyst with AI, and I truly thank you for your time. Jeff, I'm handing it back to you, my friend.
Right on. I want to congratulate our winners today. So with your first question, Neil won. Our second question, Dennis won. And our third question was Ahmed. So I'm going to go ahead and send those over to you as soon as I have a few seconds. But congratulations to everybody that won. Thank you, Ray.
No questions. Not even one.
No.
Am I out of time?
Well, let's see. We did have a question about how about Tesla, and if you have any. I don't think you have time for this one, but like, if you had any, how does this work on Tesla? Was the question that came up a little bit earlier.
Yeah, I used Tesla in a number of the slides. I kind of wanted to use the same one. One thing that I think you would agree with all is Tesla tends to be a heavy news related stock, so you see lots of shock prices where it's really erratic, etc. And for that, I would probably use for trading Tesla more support resistance, gapping, and things of that nature, and really how the market prices are reacting to the news. We're looking for them classic divergences here. One of my favorite tells as a trader, where I'm looking for positive price action on negative news. And we can extrapolate that, but we see, I'll just finish with this, Jeff, because I'm going to take one question, where we kind of see, we see two negative earnings release reports, right? And we see the stock get hammered, and then we see a third negative earnings release report, and price stabilizes or starts to creep upward. And then we look deep and we see that the insiders are filing Form 144s to start to buy this issue. To me, this is a classic tell. It's one of the things I looked for as a day trader or a swing trader. And so for Tesla, I would tend to maybe use more of those types of strategies. But again, conviction back tested very well on Tesla, and you can do that yourself.
Great. Do you, another question we get a lot is, will this work with international markets? Does it work with commodities? Do you want to speak to a minute for just a few seconds? I know we're over time, but do you just want to speak?
I'm at 11:01 a.m. I'm right on time. You started me.
Yeah, no, you're great. I'm not throwing shade.
Oh, you can, my friend.
You're
the big honcho here. We know who the boss is. So the answer to that is, if you understand technical analysis, go way back to John Murphy's book, Technical Analysis of the Financial Markets, right? I mean, where a lot of us started. Yes, it's outdated. I agree. But I mean, we believe that technicals work for a number of reasons. Certainly the self-fulfilling prophecy of the patterns. We believe it's because of high frequency trading and all the number of computers that are looking for the same exact patterns. And then there's the psychology component. But the bottom line of this, when we look at these elements, right, we say the market's a fractal, where patterns repeat within themselves, and we tend to believe, within reason, that these laws are applicable over commodities, ETFs, stocks, international. It really doesn't matter. We see this even with a good example with the buy in May and the 6-month seasonal cycle. That's not just U.S. based, where stocks outperform November to May. That's international. It's small cap. It's large cap. So we see these relationships being reinforced throughout. So I would say yes, absolutely.
Awesome. Ray, big thanks. Thanks for spending some time with us today. I appreciate it. Great job as always. And thanks for the prizes. We love prizes here. So there you go. Thank you very much.
Good luck to your trading, and I'll see you at the next session. Thanks, guys.
All right. See you.
Bye, Jeff.
All right. Let's go ahead and just talk a little bit about Conviction Plus. I love it. It's a unique approach for volume, volatility, a lot of the volume tools. And this is something that kind of stuck with me. A lot of the volume tools were developed a really, really long time ago, back in the 70s and 80s. This one's developed for a more volatile marketplace. Ray's put such a lot of work into this in his Conviction Plus add-on, which is a system that's available for Metastock that you can get right away. We even back it with a money back guarantee. So in terms of, we'll just talk about it pretty quickly because of the time. It does have the indicators, the optimized balance conviction, the kinetic conviction, and the relative conviction momentum. As part of this, Ray specifically designed 3 methodologies, the LT, the ST, and the PF. And one of the things that I really like about it is he talked about the fact that he sent these all to QuantKey and had them all verified and all that kind of stuff audited. Can't remember the exact terminology for it. But the LT system stands for the long-term system. And then when you trade it, you're going to get an average trade hold of about 82 days. Our shorter term one is perfect for an intermediate to short-term trader. with a trade length of about 35 days. And then the PF is a very, very selective. With this one, you're going to need to do scanning because it just doesn't return. It's very, very selective in terms of the stocks that it returns. You run a big scan, it's going to have an average length of about 27 days. And one of the things that Ray did as part of this is he kind of went in, he did all the system testing, he kind of got it all audited, he got it certified, all that kind of good stuff. Of course, with Metastock, one of the things we're going to talk about all day long is how much I love scanning. I love scanning. I think scanning is one of the things that we do best. With this, you can actually go through and scan any of the systems. You can find what has an opportunity. And that's, I think, one, Metastock's such a huge tool, like I said a little bit earlier, and like I'll say all this week. It's been rated for 32 years in a row as the best software in its price category. But one of the things I've been using at it for almost 3 decades now is the ability to go in and just eliminate all the noise. Show me what stocks I have an opportunity. Let me focus on those. And you can do that with all 3 of his systems. Just go in and actually identify which stocks that have an opportunity and trade those. So as part of the methodology, you have 7 indicators, 4 different explorations, 6 expert advisors, and templates to put it all together. As part of it, Ray mentioned this, you get the detailed training courses, you get the year of AAII membership for free, and you get all access to all of their learning research portals as well. So normally, just by itself, the add-on is $14.97 as a one-time cost. At the event today at the conference, we're going to do a special $747. If you don't have Metastock, if you haven't tried out Metastock before, we're going to give you a 30-day money-back guarantee to evaluate it. You can do that. You can give us a call, 800-882-3040. If you have questions, you can chat with us. It's metastock.com/sales-chat. You can also go to metastock.com/conf-promo for that. So there you go. I do want to say, again, real quick, special thanks to AAII for sponsoring the event today. Very well respected, well reputed. I'm not sure if that's a word, but I should check. Very good organization. We're proud to be sponsored or partners with AAII for the event today. If you want to find out more about AAII, their training curriculums, their sentiment surveys, their research reports, all that kind of stuff, you can find them at AAII.com. So with that being said, all of the specials that we're going to talk about today, including Conviction, including a Metastock extended trial where you buy a month and get the second and third month for free. All of that can be found at metastock.com/conf-promo. If you have any questions, we would love to talk to you. You can chat them in. If you're in GoToWebinar, just ask them in the questions box. If you're in the YouTube, ask them in the chat. If you want to get some more information about Metastock, or if you want to talk to one of our sales guys, metastock.com/sales-chat, or give us a call, 800-882-3040. So there you go. Let's go ahead and kind of keep the conference moving today. Our next presenter is another good friend of mine, Vince Vora. With Vince, what I want to say about Vince Vora is he is great. To be more specific, we've worked with him for a number of years. He's a very, very good system designer. One of the things I really like about Vince is kind of the ability to really keep things very straightforward, very simple, very understandable. And I think that's why I've learned a lot with Vince over the years in terms of the way to kind of structure and manage a trade. So without further ado, Vince, let's go ahead and get you started.
Good morning, Jeff. How are you?
Good morning, Vince. How are you doing?
I'm good. Just going to turn on my camera. There we are. Can you see me? How are you?
I can. Yeah, I can see 3 different time zones too.
I don't even know if they're accurate anymore, but anyway.
They were at one point, right?
They were at one point. Yep.
Can you share your screen, or do I have to stop sharing mine first? I'm not sure.
Absolutely. Let me try to do that. To share. Let me know when you see my Metastock platform.
It's up. I'm going to get out of the way.
Excellent.
Your turn.
All right. Thanks, Jeff. I appreciate the invite once again. As Jeff said, we've been working with Metastock for many, many years, and it's just a great team there. from top to bottom, from management to the sales team to the programmers, everybody there. If you've been using Metastock for a while, you know how good they are. But if not, you should know they are a great team. Anyway, today I'd like to talk to you about our victory system. And actually, I didn't even launch our slide here. There we go. All right. So I'm Vince Vora. I'm the head trader here at Trading Wins, and I've been at this for almost 40 years now. But throughout, I've developed several systems and strategies. For many years now, I've been focusing more on coaching. We have a great team at Trading Wins, a great group of members that I'm going to talk about as we go through this presentation. But what I want to spend the bulk of the time on is the Victory 2 system, which we created back in 2019, late 2019, and have been using it ever since. This is our second version, and it's been great for us. And I hope to show you how and why it's been so great for us throughout the next hour. Before I get started, just a quick reminder, trading can be risky, so please don't trade with real money until you're completely comfortable with the system. One last thing I'll say about myself is I'm probably the most conservative trader out there. I absolutely hate risk and will do anything to avoid it. Very, very early on in my career, over 30 years ago, I took a big loss thinking, I knew a lot more than I did at the time. And the market taught me a lesson. But it was that loss that really has benefited me later on in my career, has turned me into the trader that I am today. And, you'll see it within the Victory 2 system. So let's get to that right now. What you're seeing on your screen is Victory 2. And now there are a lot of different arrows and little dots here and these CPs. I'm going to explain what it is, and then I'm going to go through how I use Victory on a daily basis. All right. So first of all, obviously, green arrows are, a good place, or might be a good place to initiate a long position. Now, the reason why I say might be is we have a set of rules that goes along with this, and I'm going to share that with you. It's an 8-point checklist that if you can check off each one of those 8 different pieces of criteria, you're about to enter a trade where the odds are in your favor, highly in your favor, to make you money. Now, obviously, this is not a perfect system. There isn't such a thing. I've been looking for one for 40 years, haven't found one. But what this will do for you, or should do for you, is not only provide you with more winning trades than losing trades, but your winners should be much greater than your losers. The one thing I like most about this system is that when things do not go our way, it gets us out immediately, keeping those losses small. That is the key. I'm sure you've heard this if you've been in this business for a while, that keeping your losses small is key. And I'm here to tell you it is the most important thing. Keep those small and you'll be in this business for a very long time. So green arrows or red arrows, there are 2 types. There are the smaller, lighter ones here where, and actually anything you hover over will give you a box explaining what it is. So here you'll see a long, right? And then here, which is a bigger, darker arrow, you'll see HPB. Now this is part of the version 2. The only difference between this and this is we've added a couple other layers of confirmation, and what HPB stands for is high probability buy, high probability buy, and you might see a high probability sell when you run into one of those bigger, darker red arrows. Okay, either way, you can look at them the same. Green arrows, good suggestion for a long, red for a short. Now, the reason why I say might be, for example, all of these red arrows in here, we would not be shorting these, and you'll understand why in a minute. but you definitely would want to be exiting your long trades. If you see these dots, green and red dots, what they mean are, it's what we call reentries, okay? Long reentry, short reentry, okay? Basically the same criteria that came together to populate the arrow has come together again. But since we're already in a trade, we just mark it as a dot, so that if you missed the first opportunity, you can now get in. Or if you're a little more aggressive, for example, a trade back here, once you get in, you can add at each of these new dots, okay? What I want to make sure you always do, though, is on any change of color, you exit the full position, all right? So, as you'll notice when you get long on a trade, all the bars are colored green, okay? If I were to take off the indicator, some of these bars would be red, some would be green. The red one's definitely on the pullback, right? The reason why we keep everything consistent is to help you remain disciplined so you don't get scared out of a trade. A lot of times, trade starts going your way, feels great. As soon as you see one or two red bars, you start to doubt yourself. You start to think, am I about to give back profits? And a lot of times it leads to you getting out of the trade early just to watch this thing then continue and go to new highs. So we try to keep things consistent. While you're in a long trade, while the system is in a long trade, all bars will be green. While the system is in a short trade, all bars will be red, okay? But any change of color means you need to exit whatever position you're in fully, all right? These TPs stand for long take profit, for example. They're just suggestions for where you might want to take some profit, okay, along the way. And, so for example, here, if you got in here, you can add some more here. You take some profit there, then it changes colors and you're out of the full position. If you're in here, you can take some profit there, you can take some profit there, and then you're out, for example. We can never control what the market does. And the reason for these take profit suggestion levels is in case we run into a day like this, right? And this is the monthly. So, in case you run into a month like this, you would have already taken profits. And that way you come out of the trade usually making money, or it'll reduce whatever loss you have. Okay. Now, lastly, or not lastly, second last here, we have this blue line. If I hover over it, you'll see that this is simply a 20-period simple moving average. Okay. You could use exponential weighted, etc. We've tested this over thousands and thousands of trades. The 20-period simple works best, and I've been using this for over 3 decades. Okay, what we're looking for from this blue line is to judge the amount of momentum behind the trade. So when we come to an area like this, where the system is suggesting it might be a good area to buy, we want to look at the slope of that line. Not only do we want that line to be sloping in the direction of the trade, but the higher the degree of slope, the better. We can use any degree of slope we like. Any slope in the upward direction for long is a good thing, but the higher the degree of slope, the more buying pressure there is, the more momentum there is behind that trade. And it's a very, very important piece of the trade. Okay. And lastly, we have these ribbons at the bottom. Okay. These ribbons always default to the 2 higher time frames. Now, they are a template. I'll show you here on the weekly, on the daily. The daily time frames, what I use most. And so what this does is it'll tell you what the color of the bars are on those time frames. So if I'm on a daily time frame and it's flashing a buy, okay, I mean, we've gone from red to green here. I want to make sure that the weekly is currently in a long on the victory system, as well as the monthly. If I was trading on a 5-minute chart, right, we have a template for that down here. So we have templates for the 30-minute, the 5-minute, the hourly, etc. You just switch to those templates, and it would give you the 2 higher time frames from that time frame that you are using. So For the 15-minute, it would give you, sorry, the 5-minute would give you the 15-minute and the 30-minute. But what you want to make sure of is that you're trading in line with the two higher time frames. Okay. If I were to, just move to a weekly, for example, it's just going to show me the monthly. There is no other higher time frame than the monthly that we look at. And the monthly, you're going to see basically the monthly time frame. That's it. But if you're day trading, you can switch to one of those lower templates. You can also completely customize this. If you right click anywhere on your chart, you go to Expert Advisor and then Expert Properties. Okay, just click Cancel here, and you'll see this is where all these symbols are. Okay, so the long, the short, right? The high probability buy, high probability sell, etc. The re-entries, exits, and so on. I like to clean my chart up a little, so I like to remove the take profit from here. But you can, if you're focused on one type of entry, again, you can totally customize this yourself. Okay. Now, let's get to how I like to trade this. And I always like to take a top-down approach. So I start with the monthly chart, for example, and I look to see what the market overall is doing. So what I look for is I look at the chart of the Dow, the S&P, the NASDAQ, and the Russell 2000. That basically covers everything. And if we're all in green mode here, then we know we're in a strong trend on the highest time frame, right? And then I go back and look at the weekly, and then the month, and then the daily. Okay. So in other words, if we are above this blue line and green on all three time frames, the daily, weekly, monthly, and on all four index charts, the Dow, the S&P, the Russell, and the NASDAQ, excuse me, then we know we're in a very strong uptrend. That is the best time to go long, obviously. We still have to make sure we can check off each one of those eight points that I'm going to go over with you in a second. But when you're trending like that, in a very strong trend, it's difficult not to make money, honestly. And I will tell you from my experience, not only trading myself, but in coaching thousands of people over the last 8 to 10 years, I can tell you that it's us. We, the traders, make it difficult on us. It's our emotions, I'm sure you've heard this many times, that get in the way. Now, you always hear, you have to remove your emotions out of trade. It's almost impossible. We're human. We have emotions. We're going to bring them in. We have to try to keep them to a minimum. And that's what, the programming here does for you. Okay. Again, keeping all bars green while in a long trend and not seeing those red candles helps us, right? That's why we set it up this way. But when things are in a strong uptrend, you can pretty much buy anything and make money. And it's the same to the downside. If the Dow, the S&P, the NASDAQ, and the Russell on the daily, weekly, and monthly time frame are all below the 20 and red, and the more slope you have, if we have a strong degree of slope lower, then we know we're in a strong downtrend. And anything mixed, in other words, if say the Dow is below or red on a daily, but green on weekly, monthly, and everything else is as well. Any mixed combination means we are not in a strong uptrend or a strong downtrend. And we should be going in with half size. So when we have a strong uptrend or a strong downtrend, we can enter our orders full size. When it's any mixed combination, we should reduce the size of our trades. That is one of the ways we make sure we don't get hurt during those tougher trading environments. Okay, but with this indicator, comes a couple of training classes we're going to give you, and we're going to go over in detail exactly, what the money management rules that you should be using along with this. Okay, but for now, let's focus on this. Let's bring up those that 8-point check. Actually, I'm going to do one other thing before I go to the 8-point checklist. There's another feature here that was a great addition to Victory 2.0. And that is this multi-time frame view of the market. So if you right click on your screen and you go to add templates, okay, obviously they're in alphabetical order, so anything for me, Vora, is at the bottom. You scroll down, and this is where you will find those templates for the ribbons down here. But also, we have what we call a market overview. Okay, and we also have a market overview multi-time frame here. Once you select those, this kind of window will pop up. Now it'll take a little while to load because we're bringing in data for all of these different symbols on different time frames. Now you can change it. I have daily, weekly here, but you can change it to whatever time frames you like. Okay, and what this is showing us is whether victory is either green or red on that particular symbol for whatever dates we have plotted here. So as you can see, I have the Dow, the S&P, NASDAQ, Russell ETFs. Then I have the ETFs for all the different sectors, okay, communications, energy, financial, healthcare, etc., on the different time frames. So the idea here is to take a quick glance. Okay, now this is older. This is a picture. I was just trying to save time. But excuse me, if you look to the right side and it's mostly all green, you know you're in a strong uptrend, right? If you're mostly all red, you know just about everything is selling off and you're in a strong downtrend. And again, you can do it by any time frame, but it's a great one snapshot view of the market. So you can tell when we were trending lower strongly compared to when we're trending higher strongly. The other benefit here is that usually what you'll get, even during a strong down period, for example, if you look down this row here, it was just about all red, right? But look at consumer staples. They were green. Okay? So whether you're in a strong uptrend or a strong downtrend, right? You want to mix in your portfolio. So if we're in a strong uptrend and say we're going to take 10 trades, right? Sure, you want 7 or 8 to be long, obviously, but you always want 1 or 2 to sort of balance things out and be a bit of a hedge for you. Well, you can identify the areas where you want to go and look for, those 1 or 2. You identify a sector that is doing the opposite of the market and go look for 1 or 2 candidates to trade there. Okay, so a very, very handy addition to Victory 2.0. All right, now let's talk about the actual rules for entry. And please, by all means, enter in the chat whatever questions you have or whatever symbols you want me to use throughout the next half hour or so. I want to look at as many charts as possible with this. And so if there's any charts you want to look at to see how Victory 2 would have done on there, please enter them. Now, let's go to that 8-point checklist. Here it is. If you can check off each one of these boxes before entering a trade, long or short, you have stacked the odds in your favor. Doesn't guarantee a profit, but, and like I said, the odds will be highly in your favor, which means most of your trades should work out very well. At least they have for us over the last several years using this. So the first thing here seems basic, but is one of the things I would encourage you to use to build your original watch list before taking any trades, and that's cleanliness of a chart. Now, what do I mean by cleanliness of a chart? Let me show you. I'm going to go to XLC here, which is the communication sector ETF. And you'll see why I'm using that in a second. I'm going to go to the weekly chart just as an example. Okay, here it is. This is what I mean by a clean chart. It is very obvious, very predictable what the trend is at the time, right? So here we're in an uptrend, here we're in a downtrend, here's an up. What you'll notice during a strong trend is the size of the bars from high to low each day. Okay, and it works the same whether you're on a 5-minute, a weekly, a daily, it doesn't matter. But the bars are very similar in size throughout, okay, very uniform. When you hit a period of volatility, that's when the bars start to change in size. So for example, nice steady uptrend, all bars similar size, etc. Look at here, we were dropping, right? They're all similar. Suddenly, we start getting all these different size bars. That's a period of volatility. That's when, the sellers were battling the buyers. It was in the process of making a bottom. We may not have known it at the time, but that's what was happening. But you can see the increased volatility. And if you want to see, a messier chart, let's see. Zoom comes to mind. I think it may have cleaned up. No, there you go. So have a look at this, right? Very messy. Look at the size of the bars from day to day, all different sizes, all over the place. Can you really see a clean trend here? You cannot, right? So my point is avoid messy charts like this. Reason being, your chances of getting stopped out are going to be much, much higher, okay? And build a watch list of very clean charts. So if you have time on a Saturday, on a Sunday, anytime, go through as many charts as you can and build a watch list of those nice, clean, trending charts. That should be your basis for finding trades. It'll really, really help you. Okay, so that's point number one. Point number two is your reason for entry. Obviously, we use the victory method. If you have a different strategy, you can do that. But we want to see an arrow or a dot signaling that it's a good time to enter that trade. Then we want to see the slope on the 20 MA, right? It's got to be, should be sloping, but should be significantly sloping, okay? So if we go back to here, let's use one of the more popular stocks recently, Robinhood. How many of you have traded Robinhood? And thanks, Neil. I'll get to CCJ in a second. So Robinhood, here we are. So let's look at a trade like this one here, near the start of this trend. Okay, and I'll let me actually zoom in a little so you can see it a little better. There you go, right here. Okay, so we have a clean looking chart. We have a reason to enter. We have an arrow, and we have the 20 sloping higher now. Okay, so 3 boxes we can check. Next is the distance from the 20 and where the bar closes. So the actual bar that's associated with that arrow, how far away is it from that 20? It should not be far. When we move far away, we tend to snap back. So the last thing we want to do is buy far from it and then watch it go against us here. All right, so we want to buy near the 20. And secondly, is where's the close on that bar? So is it in the top half, top quarter of the bar? Is it near the bottom? We want it to be in the top half, preferably top quarter of that bar. The higher it is, or like the closer the close of the day is to the high of the day, the better. Reason being, if you go and look at any bar that closes near the high, we tend to follow through. Okay, so it just increases the odds of this moving in the direction that we want. Okay, so far we have everything. And then we want to look at support and resistance, the higher time frames, and earnings. By support and resistance, what we mean is if you look to your left and there's a lot of activity over just ahead of where you're entering the trade or planning to enter the trade, it could run into a wall of resistance and pull back. We want as much open space as possible. So if we look back, this was the prior all-time high, right? And so there wasn't a lot of activity here. If we draw a line from where we were planning to enter backwards, right? Okay, remember, to the right of us, none of this existed. It was all back in here, right? So look at how much activity is below that line and compared to above. Very little overhead resistance, right? Which is exactly what we want. If we're about to move into new all-time highs, like here, for example, if I draw that line on this particular trade, right, and we look above, there's absolutely nothing. That's ideal. That is 100% the best thing to look for. But as long as there isn't a lot of activity, we know we have a clear path ahead, okay? And then we confirm whether or not the higher time frames are aligned. Weekly, monthly in this case, because I prefer to trade on the daily, right? Yes, they are. They're both green. When's the next earnings date? Reason I look for that is earnings can cause a gap one way or the other. It doesn't matter how good the company is, how well they're doing, whatever, earnings can cause a gap. I don't want to get caught in that. So I want to make sure that it's far enough out, usually at least 10 days, if not more, away from it. So I can give this trade a chance to play out before getting out the day before earnings, okay? So this particular trade had everything that we wanted, okay? Puts the odds highly in our favor. We move along, it tells us again, this is a great spot. We would go through the same exercise. Now it seems like a long, complicated thing. It's not. You print this out, you keep this beside you. It's really like 30 seconds and you'll know whether you can check off each box. And after doing a few, it just becomes second nature. But the idea here would be you could enter, you can add, you can add, you can add, you can add, and then you exit all. And along the way, you want to take profits along the way as well. Again, during our training class, we will show you exactly how we do it. There's a few different methods, or you can just put those TPs back on your chart and take some profits there, okay? That's exactly how you want to do this. Now, there's another piece to our money management strategy that I can tell you will guarantee you never take a big loss, okay? Again, I took a huge loss very early on in my career, developed that set of trading rules. After that, I've never taken a big loss since. And if you follow it, it's just five points to that money management plan. You will never take a big loss. I can guarantee you that if you follow that plan. Okay. Now let's look at a few charts here. Neil wanted to look at CCJ, chemical. All right. And please, if there's charts you want to look at, let me know what time frame. I will obviously start with the daily, but we can look at anything. Okay. Again, here, my eyes immediately go here. Now, sure, you'll say hindsight's 2020. Of course it is. I'm just doing this for illustrative purposes to show you the types of trades we look for. We can look at the ones that don't work, etc., the ones we don't want to take. But here's another one where, it was a pretty clean looking chart, right? Pretty predictable. And we had a reason to enter. The bar is very close to the 20. Sorry, it's this one here. I'm going to go over this one as well in a second, though. Okay, the bar is here as well. It closes near the top half. We have slope. We have an actual very high degree of slope. Higher time frames are aligned. If we look to our left, lots of blank space. Earnings, I'm not sure here, but it doesn't look like they were any time soon. And so what we do next, once we check off all boxes, is we look at the high of that day, okay? In this case, 52.61. So any trade, one tick or 1 penny above that, we can enter. We want to make sure it follows through. If that high is not taken out, okay, we do not enter that trade. In other words, if it opened lower the next day, we do not do it until we cross above that. Now, I usually give it a couple days to see if we can break that high, and then I'll move on to other trades. But generally, you'll see a follow through immediately, and then it just becomes a matter of managing that trade. Where are you going to take profits along the way, and when are you going to exit? The exit is simple. when it changes color. You're out completely. Okay? That's simple. Now, if you look at an area like this is a consolidation. Okay? This is what you want to avoid at all costs. I don't care whether you're using Victory or any other system. This is what you do not want to trade in. Okay, at least to go long or short. Yeah, if you're an options trader, you can use a strategy like an iron condor to get out of, to take some profit in that area. But this is where traders get chopped up. You short, you get stopped out. You go long, you get stopped out. You go short, you get stopped out. That's where you're going to lose all your money. So you want to avoid it. So if you look at the 8-point checklist, it's going to keep you out of these. Why? Well, most of the time the 20 is more or less flat. Okay, and so that one rule alone will get will keep you out of it. But a lot of times during these, the ribbons are not aligned, or there's one other piece of that is not aligned, and it'll keep you out of here. Okay, now there are instances, and I know many of you want to try to get in as close to the bottom as possible and get out as close to the top as possible. I'm going to suggest you change your mindset and focus on the middle 60%. If you can grab this middle 60% of a move, you're going to do very, very well, and you're going to be in this business for a very long time. But if you can't resist the urge to try to get in near the bottom, one of the things you can do is add two rules. Look for two rules. So obviously we're not on this buy going to be able to check off all 8 of these boxes. Why? The slope on the 20 alone. Look at the slope. It's negative. It's actually sloping lower when we're trying to go long. It's not what you want. Okay? So the only way you can enter this trade, if you get a victory here that does not have all those 8 points, is if the close of this bar is above a prior high. Okay, in this case it is right here. In many cases you will not be. Okay, but if it closes, not trades, but closes above a prior high, you can take that trade. The other one is if you retest the 20 period moving average. What I mean by that is, and let me try to find a better example here. Yeah, right here. So you see on this one, we did not close above a prior high. The prior high was up here at this point. But what did it do? It moved from below to above the 20 and then came back and touched it and moved above this high, right? So we move above, we come back, we hold support at the 20, and we bounce. So on this bar here, when we take out this high, that's where we could enter, okay? So those are the two conditions you can look for when you're desperately trying to catch a move as early as possible that doesn't have slope, etc. But especially if you're just starting out, I would highly encourage you to ignore these and just take the ones that have slope and the other 8 criteria. Trades to the downside work exactly the same. They're just opposite. In this case, this would not be a good trade here, this dot. Why? 20 is not sloping, right? But if 20 was sloping lower, okay, we were near the 20, closing near the low of the bar, the ribbons were both red, there's very little support, lots of blank space here, etc. Far enough away from earnings, you just look at the opposite, and that's where you are for a short. Okay, and again, it doesn't matter what time frame you're on, whether you're trading a 5-minute, a weekly, a monthly, a daily. It works on anything. It works on equities, ETFs, futures, crypto. Right? Let's look at sorry, that's BTC equals, I think is, yeah. Let's look at Bitcoin, for example. Okay, and it doesn't really matter what it is you're trading. It's the right time to trade. Now, if you ever see one of the the time frame's blank like that, it usually means we don't have enough history to plot that ribbon. Okay, Bitcoin hasn't been around for too long. But in here during this mess, okay, is this a clean looking chart? No, it's not, right? So you want to avoid it because your chance of getting stopped out are very high. Okay, don't get married to a particular issue. Don't listen to all those forums and worry that you're going to miss a big opportunity. When something starts to trend strongly, you're going to know it. A good example recently, Micron, right? Have a look at Micron. Here, so nice and clean, right? And again, if you missed it here or you missed it here, you can catch it here. You can catch it here. You can catch it here, right? They're all over the place. And this is what you want, safe and steady. I mean, look at what the market's been doing recently, and look at Micron. It's been completely ignoring it. And it's just going higher. Why? Look at the degree of slope. It's almost vertical. That's what you want. Why? There's a lot of buying pressure. We don't even know why. We don't even need to know why people are buying. We just need to know if they are or not. And they definitely are here. And that's what this does for you. Let's look at a few other examples. Let's see. So, okay, we have several questions. Gary says, can you run it on MCK? Absolutely. Let's look at MCK quickly. I'm going to try to rush through this because I'm starting to run out of time. Here we are. So, perfect example. So, MCK, throughout here, right, a good portion of this, we either, what time frame am I on? Daily here, yeah. You can tell when something's kind of moving sideways, right? Or building a top or trying to form a bottom, etc. But again, all you have to do is look at that 8-point checklist and ask yourself, can I check off all 8 boxes? If you can, great. You can move ahead with the trade. If you cannot, you don't, because the odds are not in your favor. But let's say they were, and you can. What you'll notice throughout a lot of these is that when it starts going against you, it gets you out immediately. So even if you say you shorted here, when I know you definitely would not have been able to check off all 8 boxes, but let's say you did, right? Starts to move against you immediately, boom, very small loss, right? You enter long here, boom, very small loss. That's what matters. And then when you have the ideal trade with slope, everything trending strong, the ribbon, nothing but blank space overhead, which is one of the most important things here. Boom, then it has room to run and off it goes. So one of these trades will wipe out dozens of small losses. And I can tell you from experience with this, trading with this since 2019, you can ask Jeff, a few other people on his team, they also use it. You should have way more winners than losers. But if you keep your losses small, even one win will overcome many of them. And the thing about trading into blank space, into an area where there's no support resistance, is one of the most important. Let me show you, for example, Lululemon here. Okay. Now this was to the short side. And I'm going to show you on the higher time frame so you can appreciate this. And this is another reason why you want to start with the higher time frame and move down to the lower time frame. You see all of this mess? This was a consolidation. That was a very wide range, but it was a consolidation. But what happened when we broke this? Okay. With our members in our group, we started talking about this right around here, right around the 280 level. Okay. Because it had broken down below all of this. So if it had broken to the upside, again, there'd be nothing but blank space. That'd be something you want to look at. Here, there's a lot of activity here, a lot of activity in here, very little in here. Okay, this was a sharp rise. Would have been a great trade to take here. But my point is there's a gap in support and resistance. And it should have an easy way to move through that if it breaks out of that consolidation zone. And that's exactly what we did. We've been playing it short ever since. There was another one on Biogen. Okay. If you look at Biogen, and it works the same to the long side as to the short side. Okay? Look at all this mess, all right, on Biogen. Now, oops, let me try to draw a line here. Okay? There. Okay? Once it breaks, okay, where's it going? Well, most likely, where's it going? Right here. If you attach these highs, there you go. So that is the distance. That is where we're planning to go. Let me extend this out a little here. There we go. So, and we're not talking a small move here. We're talking about going from, it was around 188 at the time here. Where is it now? 155, right? Over a 30-point move so far. And that's after this retracement. It went down as low as like 110, right? From 188 to 110. Nice and easy. You don't sweat those at all. Let's look at a few others. Yes, it works for Forex as well. Who was asking for that? Forex doesn't matter what it is. All right, I'll show gold in a second. Let me go to Apple. Somebody wanted Apple. Reg wanted Apple. I'm glad you brought it up. There's something I want to show you on Apple. I'm going to go to the daily time frame here. All right, and there it is. Now, what do we see here on Apple? So we have a reason to look at this, right? We have an arrow. In fact, we have two, which I'll cover in a second. Well, we have one, right? First of all, is the chart clean? I'd say it is. Is there slope? Yes, and significant slope, right? Is the bar near the 20? In my opinion, it is. Now, what I mean by near, this isn't just a visual thing where you say, is it near that line? You want to assess the amount of risk you're about to get into. So since, if we're going to get into this trade, we want to take a trade above the high, right? We want to see a break above the high tomorrow on this in order to get in. So if the high stays around 268, our entry would be below, our exit would be on a move below the 20 for sure. So coming down here, it's like, what are we, 263? So if it's about a 5-point move on a $268 stock, that's fine for me. It's got to be fine for you. You have to decide what amount of risk you're willing to take, right? So as long as it's not a huge risk. If it is, you just move on to another chart. There are dozens every day that you're going to find here. Your main job as a trader every day is going to be to identify the short list of trade candidates and then compare one to the other and pick the best of the best, 1 or 2 max every day. You want to spread your trades out. Okay? You don't want to jump in with 8 trades in a day. If the market drops tomorrow, you're going to find yourself in a huge hole right off the bat. So we have the ribbons here. We have nothing but blank space overhead. This is the prior all-time high. So we know there's absolutely nothing overhead, right? Earnings have passed. That's not an issue. We have a green light here by the looks of it. Now, one thing I've noticed in the past is when you get multiple signals close together like this, if it does trigger, it's usually a good trade. So again, this is not a recommendation. I'm just showing you this is one of the ones that myself and our group are going to be taking a close look at. So Apple looks great. If you want to look at, how is it done from the start, and go look at the monthly on an Apple, for example. There it is. I mean, you can go back. You remember Apple when it was down here in the $12 range or so, no one cared about Apple and no one was talking about Apple. And then suddenly off we go, right? And from there on, I mean, it's been basically nothing but upside. Incredible trades on Apple across the board here. Let's see. Someone wanted to look at gold. Sure. Let's look at gold. Right? Here it is. So on the monthly, again, you can clearly tell when it's trending and when it's consolidating just by looking at the 20. Is the 20 flat? Right? Is the 20 flat? or is it sloping higher? That's really what you need to know. And the other thing I want you to look at, regardless of any of whatever system you're using, it doesn't have to be Victory. Here's one technical analysis tip. When you come out of a lengthy consolidation and have a move up, you generally then go into another consolidation, okay? And then you have another move up. So you want to see commonalities on your chart, but especially on the higher time frames, when you go through a very lengthy move on the monthly, okay? This was years. This was from 2013 to about 2019, almost 2020, okay? 6-7 years. Then it broke out, and then we went back into a consolidation, okay? And that here, once it broke from there, nothing but blank space, and off it went. Now, you don't have to wait years in these. You can look at the similar pattern on a daily or a 15-minute, etc. But that's one thing to look for. Let me see if there's any other question. I want to show you a couple other quick things here. I know I'm running late on time here. I apologize. I think there are some new questions up here. Oh, you want to look at a 5-minute on gold? Sure. Let's look at a 5-minute chart on gold here. There it is. So it doesn't matter whether you're on a 5-minute, a weekly, a monthly. You're looking at the setup and you're looking at the same 8-point checklist. If you can check off all 8, off you go. You have a green light. Okay. In here, look, do you not agree? If you tried to trade in here, you get stopped out over and over and over and over again. That's where you lose all your money. Right? During the trending times, these trades, the majority should make you money there. So that's what we have here. That's what we do every day with Victory. Now, there are a couple other pieces to this indicator. I can't spend a lot of time on it because I'm almost out of time. But if you go to view here at the top, click on expert commentary, there's going to be some commentary on myself, on Trading Winds, on Victory, etc. But more importantly, you're going to see this little triangle to the far right. It always defaults there. What this does is this kind of holds your hand throughout the life of the trade. So you can move that arrow over any bar by clicking on it or by using the arrows up here in the expert commentary box. And basically, as the trade develops and you move from bar to bar, it's going to highlight a stop loss number for you. So if you can't sit in front of your screen, if you have to go to work and so on, but you don't want to just leave it without a stop loss, it'll give you a stop loss, and it basically trails it for you. You'll see that number change as the bars move higher, etc. Okay, so this is a great way that once you're in it, it will help you figure out what to do throughout the life of the trade. And also, if you're an options trader, give you some suggestions on what kind of option you want to buy or sell during that time. Lastly, there is, if you go to the Power Console up here and the Explore tab, a great scanner. Okay, in the interest of time, I won't show it, but this will allow you to scan whatever time frame you're looking to trade for Victory, and it even filters out the ones that just have slope. Okay, and it'll go through a long list of charts in seconds or a couple minutes max, and you'll have a good group of trade candidates to look at. Okay. Lastly, before I go, I just want to mention that we do have a pro membership group at Trading Winds. If you try out this indicator, not only will you get those training classes, but you're going to become a member of our group. And for our group, we send out videos 5 days a week, every Sunday to Thursday evenings, recapping what happened in the market, where we think things are going. We give trade ideas throughout that. And we also have, my favorite part is we have meetings, regular chats with our members 3 times a week. Then The next one is an hour from now at 1 p.m. Eastern. We meet Mondays at 1 Eastern, Wednesdays at 10 a.m. Eastern, and Fridays at 1 p.m. Eastern. Live over Zoom. Our main thing is to look for trade ideas, but it's the best place to get any of your trading related questions answered. So if you have any questions on victory or any other part of trading, come on, ask me, and we'll cover it. If you can't attend live, you email us your question. We cover it live. You get the recording immediately after we're done. And lastly, we also have a Teams chat where throughout, when we're not meeting, we're keeping in touch. Here, we're posting ideas. There's trade ideas here, news that I post and other members post that we think are relevant, books and other resources. Anyway, we've been doing this for a very long time. It's a great group of experienced traders and beginners alike. I hope you'll give us a shot. But I'm going to pass this back to Jeff. Sorry, Jeff, I'm right to 12 p.m. I apologize. But if there's any other questions, I'll be happy to stand by for a couple minutes and answer them for you.
Oh, good. You did a great job of keeping him up with them. And I'm next. So it's not a big deal. Let's see. Vasilis says, thank you, Vint. Al says, great webinar. Jay, and you covered this just briefly, Jay asked, what can I use a scanner? What can you scan for with Victory 2? I'll go into all of the scans and what they do as I go through this, but I'm going to eject you, Vince, just as part of kind of like our tradition of not shutting down the room. So I'm going to go ahead and eject you, but I do appreciate you being here, and I appreciate all the work you've done over the years. This has been an awesome add-on for Metastock, and I appreciate it.
Thank you, Jeff, again. You and the team. Appreciate it. Take care.
All right. Prepare to be excused. All right. Let's do this. Okay. Go ahead and share my screen real quick. I'm going to make sure it's the full screen as well. Okay, share. All right. You should be able to see that. All right. Very cool. Let's go ahead and just talk a little bit about it. Here's a Victory 2. Yeah. So it's the second version of this. We released this right around 2020, right before COVID. And interestingly enough, the market was already starting to get more volatile. And it certainly hasn't returned to kind of less volatile, to say the least. It's been a very, very popular add-on. So in terms of the stuff that we added, it took us a while, many years to actually add new features to this because it was so good we weren't sure what to add. But in terms of stuff that we've added to kind of make the new version better, we added the high probability buy setups, the suggestions to take profit, that market dashboard that shows everything in the thing, the multiple time frame increments. Those are all new. Of course, it has market scanning. I love the fact that he talked about the expert advisor. I think that does a good job. And then it does have system testers as well. So we did another update. This is just a free update. We add a lot of people that were asking for broad market stuff for India. We added that. Australia as well. We added some new templates that incorporated and allow you to do 1 minute and hourly with a higher time frame view. And just made some changes to the template as well. So this is the broad market overview. It'll kind of, by default, it gives you like daily, weekly, monthly. You can see there's a D, a W, and an M. You can actually look at this in any time frame. So if you wanted to look and see how things were shaking out on like a 60-minute chart, you just click on that M, change it down to 60. It'll grab all the data and load it up for you. And there you go. So we showed plenty of charts, showed plenty of how things work in here and that kind of stuff in terms of scanning. So there are a number of different scans. You've got the Vora Victory. With that one, that'll just scan and find all of the signals for you. If you want, you can find the filtered. The filtered actually was developed and designed because I was looking at the slope of like what Vince's recommendations were. And I'm like, well, hey, I put this together. It just basically gives you all the long end cells that have a positive slope. So that's part of it. You can get the re-entry and then the re-entry filtered, and then the high probability trades, which is brand new for the Victory 2. So very, very cool add-on. Been very, very well received. Vince did talk about how it has an expert advisor that'll give you expert recommendations. The commentary I love. So here in this example, gives you the soap, tells you what's going on with the soap, tells you their song. If you're kind of entering a new trade, it's going to tell you exactly kind of some suggestions in terms of what you could look at for that. All of those kind of things are kind of just included. It's kind of like having Vince kind of giving you some advice in terms of what you could do with a trade while you're looking at it. System tester, Metastock. We're going to talk a little bit more about this next, but Metastock has a fantastic system tester that'll allow you to go in and see how things work well. Here's just how a system test turned out. So when we decided to release Victory 2, we decided to include some of Vince's systems as well as part of it, just for free. So when you buy Victory 2, you're going to get his very popular winning momentum strategy. You're also going to get his very, very popular veracity. Those both include expert advisors, scans, everything that you need to run them. And those are just included for free. The other thing that Vince does is he'll sit down. He talked about his group. He talked about his Teams chat. He talked about all that kind of stuff. You're actually going to, as part of your purchase, you're going to get a year of that for free. So that's normally you can go up to their website and sign up. It's about $97 per month or $11.64 per year. As part of it, you get daily trading ideas, weekly training sessions, on-demand technical training, options trade ideas. A number of us here in the company actually go to this and watch it. Our customers that have the access to the Trading Win service absolutely love it. They go to all the lives. Very, very good service. Very well worth like $97 a month. But if you buy the Victory 2, it's going to be included for you as well. So we can go to the next one. We did record an instant access. This is available to you, just a boot camp where Vince sits down and kind of goes through a bunch of stocks, talks about them. I give some tips and tricks for using Metastock that's available. It's available instantly as part of the package. So you're getting a lot here, and I'm kind of just spitting it out real quick. But and then I'm going to cough as well. As part of the offer that you have today, normally Victory 2 would be $2,000. That's a normal cost for Victory. Veracity, it's $2,000 as well. The winning momentum strategy was $97. That year of membership is $11.64. Total value for all of that is $5,657. As part of the Traders Conference today, you get all of that. All three systems, the year of support, the year of membership. Actually, you get unlimited support with Metastock, but you get the year of the Trading Wins membership. All of that's just $997 as a one-time cost. It's not a subscription. It doesn't automatically rebill. You can, and I would encourage you, and I think you're going to want to, you can continue to subscribe to that Trading Wins membership, but you'll own Victory, you'll own Winning Momentum Strategy, you'll own Veracity. Those are lifetime purchases that we also back with a 30-day money-back guarantee. So the total cost on that is $56.47. As part of the conference offer, $747 is the price that you're going to get. It's going to give you that boot camp class, Vora Victory, the Trading Wins membership, Vora Veracity, the Winning Momentum strategies. If you don't have access to Metastock, we're going to talk a lot about Metastock. Metastock's been the highest rated software in its price category by the readers of stocks and commodities, and it's won that award 32 years in a row. We're going to talk about how you can test ideas with it to see how they work. There's testers for Veracity. We're going to talk about system scanning and how that works. All that stuff we're going to talk about right now because it's almost my turn. But to take advantage of this, you can go to metastock.com/conf promo. If you have questions, you can give us a call, 800-882-3040, or you can go to metastock.com/sales chat. So there you go. Give it a go. There's a reason this has been so popular. It's been one of our most popular. The year it was released, it was our most popular add-on. Just people love it. They love the included memberships, the included services. Give it a go. If you decide you don't like it, you can return it. It's a great risk reward. It's a great value for everything that's included. I mean, just 3 methodologies that have been winners, proven winners in our database. and access to the membership for a year, free trial to Metastock if you need it. And basically, you should try this out. So to do it, you can go to metastock.com/conf-promo. You can call us 800-882-3040 or metastock.com/sales-chat. So just going to kind of check here. My questions are, I think we got them all. Welcome, Vasilis from Greece. It's good to have you. All right. Very cool. And I don't see, Jay, hopefully that answered your questions about what's available in the scan. If you have if you want more information or you have more questions, well, let us know in the chat, or you can give us a call. Happy to help you with anything you need. Happy to talk to you as well. So as we get moving on, I do want to say thank you to one of our sponsors, Technical Analysis of Stocks and Commodities. Stocks and Commodities magazine has been a very great magazine. It's a magazine that's been publishing since 1982. For about 27 or so years that I've been here, I get a copy every month. I love it because it gives you kind of some ideas in terms of just things you can pick up on. I think in life, you're either getting better at things or you're getting worse at things, but there's not like a lot of middle ground, especially in trading. I love getting Stocks and Commodities magazine because it has a bunch of really good articles and things that you can learn. Some of them you can implement in your trading. Others are just going to give you more context. Anyway, you can get a subscription at www.traders.com. So, oops. And then I clicked on it and the link does work. So let's go back over here. Oops. And then, of course, we're Metastock. Any of the offers that you can do today, we're going to talk about Metastock now. Any of the offers that we talk about today, you can go to metastock.com/conf-promo to get. You can also, Greg, you're in the dark. You can
I'm beg your pardon. I didn't mean to interrupt, but I did accidentally hit my mic and the camera button, which for some reason is not working. However, since I have interrupted you, you were coming in really hot, and I was waiting for you to bring me on, but it's really bad. I'm wondering if you've done anything since you were on last hour.
No, I haven't touched anything.
Okay, will you really quick go to the mic setting? Again, my apologies to everyone.
Settings right here.
For the audio settings, and where it says audio settings, make sure that you are, I don't normally say this, but make sure at the bottom that you have automatically adjust my mic volume checked.
It is checked, actually.
Okay. Also, you're kind of leaning in a little more. No, I don't. Because we've discovered that it's pretty smart. Maybe just since I don't know how to set the volume on your particular mic at your particular setting, unless you do really quick, you might just want to move it away from you a little bit. And I don't know how much, but why don't you give that a try?
How's that? Does that work better?
Well, you're going to have to give me a little more audio. Like, hey,
hello.
Tell me why I should buy Metastock right now, and do it in sort of an excited fashion.
Well, it's because you could scan. You could go in and find setups. Like, how would you like to not look at 5,600 stocks? Maybe just go through and find the ones that have an opportunity. Would that be good for you?
Okay, you're coming in. You're not coming in hot, but I can feel that emotion. And I can feel my necessity to buy Metastock. But it is still a little hot. I'll anyway. I'm sorry. And also, did you need some assistance while I'm here?
Yeah, I actually. You know what I forgot to do, and I feel terrible about this. There's something that I do between every speaker, and I forgot to do it. Do you know what it is? Oh, look, your lights came on.
Yeah. Well, my camera's weird. There's a lot going on here in the South Texas offsite studio. Just don't look, please. Too hard. Like, you might notice this getting a little barren. We are moving the South Texas studio to more northern Texas up in Houston next week, so we got a lot going on here. So I apologize.
All right. There was a question about what's the difference between the 997 and the 747 offer. The 740, it's the same offer. It's just a bit of a bigger discount, and I forgot to update one slide. That's all, Stephen. So get it now because it's only 747 now, and you still get a money back guarantee on it, and you still get all that good inclusion. So thank you for that question, Steve. All right, we are going to give away this book. You ready?
Yes, Jeff, you're still. It's just I'm surprised you're not getting, and I know it's not just me. It's very staticky, so I expect if there's a way to turn down the volume on your mic that you're aware of. I don't think that knob will do it. I think that's just the mic's preview mode. Isn't there a setting within your audio that you can?
The gain is on the back for this.
Did you turn it down a little bit?
I did.
Oh,
I can turn it
okay.
down more. How does that sound?
A little better, I think. You have to kind of
Okay.
talk a lot. The thing is,
All right.
yeah, go ahead. I'm sorry.
That's all
I'm not
right.
being an audio snob, I swear. It was
No, you're
bad.
fine. We want it to be good. I'm going to talk for a minute, right? Or an hour. Anyway, and all day and all week, and
Oh,
that,
and
which
somebody
is
just
weird
pointed out
because
that my audio is louder than yours.
yeah, Autumn
Um,
says there's no static. Autumn says I'm very clear. I think it might be
well,
you.
then, well, if that is the
Thank you, Autumn.
case,
I feel like I'm
I
defended
apologize.
by Autumn. All right, let's give
No,
away
you
a
know
book.
what? I appreciate our listeners chiming in. Hot audio isn't typically a personal experience; it's usually universal. But if they're not having a problem, then why don't we just move on and I'll get out of your way. I'm sorry. How can I help you with in assisting
All right,
in
let's
the
give away
giving
a
away
book.
of this valuable book?
I'm going to give away this Candle Profit Systems Eliminating Emotion, Steve Bigelow. Steve
All right.
Bigelow is a great friend of Metastock, a great partner of Metastock. Wrote the Candle Profit Strategies, which includes all of his methodologies and systems. This is a very good book. We're going to give it away. What I need from you, Greg, is I just need a number between a 1 and 4631. 1 and 4,631.
Four, one. How about I'm going to do this in my brain? 842.
And that would be Richard B. in the USA with an ATT account. Let me just make a note of that real quick because I don't want to lose it because I'm going to start talking. And then I have to come look at it and that kind of stuff as well. Wayne says my audio is also clear, Greg. So
Okay, thank you. I appreciate the listeners chiming in on that. It must
me
be
too, actually.
yeah, something going on my end. I apologize. Jeff, I'll go ahead and dispense with my normal introductions of you just to let everybody know you're a super awesome speaker. And I know if you stick around, you're going to enjoy it. And I'll get out of your way.
Thank you, Mr. Lewis. All right.
Mhm.
Let me go ahead and do that too. Sometimes there is a little bit of background when I'm talking and I've got a speaker on. So I'll turn this down a little bit as well, just to be sure. In any case, let me go ahead and get started. I want to thank all of the speakers that we've got lined up today. We've got some great speakers all week. I want to thank the sponsors. I want to thank you for being here. If you're watching us on YouTube, I do want to ask you to like and subscribe. It helps a great deal. I appreciate it. Today we're going to talk a little bit about the MACD. So before we get started, I'm going to go ahead and, again, if you have questions as we go, make sure to ask them in the chat, either the YouTube chat or the GoToWebinar chat. And then we're going to practice my audio quality while I read this out loud. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment. I lost my place. Investment advice or the solicitation to buy a security. So what I'd like from you guys is if there's a symbol that you want to look at or a set of symbols. Walter wants to know, how do I discover what my number is? I have a big, huge spreadsheet when you're registered. If you're in GoToWebinar, I'm not sure we really, it's just a big spreadsheet. So I could probably try and find you, Walter, and tell you what your number is. But I'll do that later. Okay. Anyway, I want to talk a little bit. If you do have a symbol that you want to talk about or you want me to look at, let me know in the chat because I don't usually pull a lot of pre-made examples that look perfect and that kind of stuff. It's not really kind of the goal that I've got. The goal that I have today is to actually kind of teach you a little bit about technical analysis. And we're going to talk a little bit about MACD today. And we're going to talk about how to look at different systems and different methodologies. So to give you a little bit of introduction to myself, I've been here at Metastock for, I think it's 28 years. I'd have to look. Yeah, thank you, Greg. Appreciate that. I'd have to look at my LinkedIn. I can say it's been a great company to work for. I love working here. When I initially started, I started in inside sales, which means if you had questions about Metastock, there's a really good chance for a decade there that you would be talking to me. I'd be talking about, okay, well, how's your trading? Where do you feel like you can improve? Like, what can we do to help you? Because there's a lot of tools inside Metastock that are designed to help you. Since then, I kind of started to work in our business development team. I do a lot of the conferences. I'm the director of sales. It's been a really, really good, enjoyable experience. The average employee tenure here at Metastock is about 13 years. It's probably gone up since they looked at that number. But a lot of people come and stay because it's a great place to work. I've had our average employee customer length is about the same as well. It's huge. Some of the customers I brought on 26, 27 years ago. So, and I think the reason they keep using this is it's something that really is truly helpful. Even me, myself, on a daily basis, I go in and I run my scans every day and I kind of decide what I want to trade based on my scans on a daily basis. So without any further ado, though, I hope you had a chance to read this slide. I'm not going to really talk too much about it. When I started in inside sales, we were part of Reuters. Reuters became Thomson Reuters. Thomson Reuters became Refinitiv. Refinitiv then sold to LSEG. We still have a really good relationship with LSEG, and that news infrastructure that was built by Reuters and put together by Reuters and has been so key to a lot of decisions that are made by institutions and hedge funds are still the same news and data that you're going to get when you're subscribed to Metastock. So the other thing I want to talk about before I get started officially is and I'm very proud of this, for 32 years in a row, including this year, Metastock has been rated the best software in its price category by the readers of Stocks and Commodities magazine. So for those of you that have been using Metastock year after year after year, thank you. For those of you that are voting, thank you. Appreciate that. Very, very proud of the fact that we've won that for so many years. So, okay, Ahmed gives me a ticker, and I will look at that. Okay, so today I have some goals for you. Number one, I want you to try out Metastock if you haven't before. So that's a goal that I've got. But while you're here, this is designed to kind of give you, I want to teach you something. So we're going to talk a little bit about the importance of trading plans. We're going to talk about MACD in thoroughness. We're going to go into a lot of detail about how it's calculated, how you use it, that kind of stuff. We're going to talk about testing trading ideas, scanning, and then we do have, of course, a little bit of a special offer that we're going to do as well. Looking at the time, it's 10:22 right now, so let's get started. All right. Here's a little bit of a question I have for you. If you want to kind of guess, go ahead and put in a guess in the chat. I probably won't give a lot of time for answers just because I looked at the time and I've got 30 minutes and I've got a lot of stuff to talk about. So, but what do you think is the best profession for trader? Is it a teacher or an educator? Is it an engineer or an architect, a psychologist or a psychiatrist? Is it a pilot, a performer, an artist, musician? There's A, B, C, D, E, F. If you want to give it a guess, let me know. I think there's some answers here, that are actually pretty good. Over the years that I've been working with different experts and different market gurus, I've worked with a number of people that have backgrounds and similar to this. And so to kind of think just a little bit about some of those, in terms of psychologist and psychiatrist, later today, Jake Bernstein will be speaking, and he was actually a psychologist or a psychiatrist. I don't have him speaking here at this event, but a good friend of mine, Dr. Alexander Elder, wrote a couple of books, always talked about his background in psychology and psychiatry. So I think there is some truth to that. Having a background in psychology or psychiatry can be helpful in the market. The actual answer, though, is pilot. And I know a couple of those. Greg Morris comes to mind as a literal Top Gun and somebody that actually kind of flew around fighter jets. Another person that comes to mind as a pilot is actually Chuck Hughes, who was also a Top Gun. So the actual answer that I'm looking for is, I don't know if I got any guesses. Oh, we did. C from Ahmed, C from Ola, And I think that's a very valid answer. The actual answer is D. So I've put a little bit of thought into that over the years. I think the reason for that is discipline. With a pilot, when you go to take off, there's a very disciplined approach. You have a very clear and specific checklist. When you land, you have a very clear and specific checklist, and you follow that checklist every single time without fail, right? And I think the reason that translates well to trading is the discipline that's involved in trading. If you don't know who Richard Dennis is, Richard Dennis was one of the original turtle traders. He was labeled the Prince of the Pit. I'm going to grab my notes real quick here. You can read them along with me if you want. Richard Dennis was the Prince of the Pit. He borrowed $1,600 from family and friends, and as a trader, turned it into about $350 million in 6 years. Very famous trader in the 1980s. He believed you could teach trading. Bill Eckhart, one of his friends, and the other founder of the Total Traders disagreed. So they actually recruited a bunch of traders, 23. If you're interested in kind of the makeup of the 23 traders, 21 were male and 2 were female. But they brought in these traders. They did advertisements in like Barron's, and they trained them up on their systems, their methodologies, the way they like to trade. And then they just said, okay, duplicate what we're doing. And it was a method. They called them the turtle traders. And it was very, very successful for them over the course of about 5 years. You can see it right here. They made about $175 million in profit trading their turtle trading methodology. Okay. One of the quotes that Richard talks about is he always says, I always say you could publish my rules in the newspaper, but nobody would follow them. The key to trading is consistency and discipline. I think that's kind of important. I think that a lot of times, another thing that kind of pops into my head when I kind of start to talk about this is, you can win. Robert Dill would always say this. Another good friend of mine, the late Robert Dill, he'd always say, you can win 9 trades in a row and still lose all of your money. You need to make sure that you're trading with discipline. And to me, that means following a methodology, a trading plan. But also means position sizing is important. It also means respecting your stop losses is important. And, all of that kind of core stuff. We're going to talk a lot about technical analysis for a minute, but everything I'm going to talk about when it comes to technical analysis is objective. Okay? We're going to talk a little bit about how to use the MACD, Gerald Appel's indicator. Okay? It's everything that we talk about is going to be objective and not subjective. Okay, everything is kind of got a methodology behind it, and if I take my time and explain the rules properly to you, you understand MACD. You'll understand why and how it's calculated. You'll understand the advantages and disadvantages of MACD, and I think all of that, especially the objectivity part of that, leads to discipline in trading, which is the key to consistency, according to this quote. So let's go ahead and get started. Gerald Appel. I keep saying let's get started. Gerald Appel created the MACD. The late Gerald Appel, he developed the MACD about 40 years ago. Okay. Over the course of his career, very, very famous technician. He wrote 17 books on investment, 5 books on photography, and published a book called Systems and Forecasts for 46 years continuously. Okay. MACD is actually kind of probably the thing that he's most famous for. I'm going to show you how it's calculated. I'm going to show you 3 popular methods for using the MACD, and then we're going to test it and see how well it works. Okay? All right, we had a ticker, LRCX. Ahmed, let's go ahead and jump into Metastock, and we'll just talk a little bit about MACD. I'm going to teach it to you on the chart. The reason I like it, again, it's objective. It's pretty easy to interpret, and it helps you with trend and momentum. It helps you figure out what the overall trend is and the momentum, because it uses a couple of moving averages to kind of do its calculations. With MACD, it can be prone to whipsaw, and it is a lagging indicator because it does use 2 moving averages. Now, this is important. The MACD is calculated by subtracting 2 exponential moving averages, a 0.075 and a 0.15. Those don't match up to whole numbers, but they're close to 26 exponential and 12. So let's go ahead and open up Metastock. I've already got it open here. You can see I have 0 charts open. So let's go ahead and do LRCX. I had to look because I'm a little bit, I swear I'm a little bit dyslexic. Let's just go ahead and open up the chart. And nailed it. All right. I have a bunch of symbols on here. Let me just clean up the chart a little bit. I'm going to detach this expert advisor. And I'm going to remove all of the indicators. So we should be back down to a clean chart in just a second. Okay. I'm going to add 2. Actually, I'm going to add 3. Let's go ahead and add the moving averages. It was a 12-period exponential moving average and a 26-period exponential moving average. Right here, I've got a big list of indicators, and Metastock has hundreds of indicators. So I'm just going to type in moving average. I'll go ahead and grab it, and I'm going to basically make it a 12-period exponential, and I'm going to make it, we'll make it blue. We'll make it a little bit fatter. I just think you can see it a little bit better if it's fatter. I know I can. I'm going to go ahead and grab this again, and that was my 12-period. I'm going to make this a 26-period exponential moving average, and we'll leave it red and make it a little bit thicker. We'll go ahead and click on OK. Okay. Now we have our 2 different moving averages that we're going to use. I'm going to grab MACD. There's a couple of different versions in here. I'm going to grab the MACD with the histogram. Okay. We'll go ahead and make this an 8. I'm going to fatten these lines up as I talk about them. So for now, we'll talk about the big red MACD line first. Okay. All right. If I wanted to tell you how to calculate the MACD is this red line, the big fat red line down here. If I wanted to tell you how to calculate the MACD, what I would do is take a shorter term moving average. In this case, the default is 12 exponential. It's actually that 0.075, but 12 exponential, and I would subtract it from 26. Okay, that gives you your core MACD value. And I think it's important to understand that. And the reason I think it's important to understand that is it kind of helps you understand what's going on with price. Okay, if we're looking at the difference between a shorter term moving average and a longer term moving average, that was sorry, Greg, that was a little loud. If you're in an uptrend, like with LRCX, we had a pretty good uptrend here. I think everybody would agree that the stock's kind of headed up lately. Your shorter term moving average is going to come above your longer term moving average, right? You can kind of see that. It's going to give you, since you're subtracting the 2 values, when you're in an uptrend, that MACD is going to be above 0, but it's also going to be pointed up, okay? The faster that you're moving up, we had a very good move up here. The faster you're moving up is the more dramatically that difference is going to shift, because you're looking at the difference between the shorter term moving average and your longer term moving average. So that's pretty straightforward, but that goes into how it looks at momentum. If your momentum starts to wane, the difference is going to get closer and your MACD is going to start to shrink. Okay. If you don't have, let's say that you're in an area where you're kind of in a box, let's call this a box right here, right? Where there's not a lot of trend, what you're going to see is you're going to see kind of a flatter MACD that's closer to 0, because the moving averages are going to come together. Okay. Same thing if you're in a downtrend, which we could call this maybe a downtrend or a temporary downtrend. You can see your MACD starts to go down, and the faster it goes down, the bigger the peak. So MACD, I made this mistake early on, and I was corrected by Martha Stokes, who's speaking a little bit later in the week. But MACD is a measurement of trend, but it's also a measurement of momentum, and that's very important. Okay, so that's the first indicator. It's just a red line. That red line is simply the difference between a shorter term moving average and a longer term moving average. Let me know if you have questions. Okay. The second line we're going to talk about is the signal line. It's this little blue dotted average, or this blue dotted line. I'm going to make it a little bit bigger just because I like you to be able to know what I'm talking about and see it very clearly. Okay. The signal line is simply a 9-period exponential moving average of the MACD. So when you're looking at MACD, you're looking at the difference of 2 moving averages, and then you're smoothing that difference with another moving average. And then Greg sent me a private message, I think, but I don't know where it is. But it does pop up over here. Anyway, I don't see that one. I do see the questions, though. If it's important, Greg, go ahead and pump in or just jump in. Okay. George Appel called this a signal line because he would use it as a signal. The way that you would look at MACD in terms of getting a signal is if you're trending up, you're going to kind of pop up above your signal line. Okay, that's a signal that the price of the security is MACD is going bullish, basically. And so he called this a signal line because when it goes up above its signal line, that'll give you a buy because you're going into bullish zone. If it comes down below zero, that would give you a sell. If it goes up above zero, it'll give you a buy. Okay, and I can kind of more illustrate this if I attach an expert advisor. So what I'm going to do is I'm going to go to the expert advisor right here, and I'm just going to attach MACD real quick. Okay, we'll go ahead and attach this, and then you can see when I do that, there's a little bit of a bullish and a bearish ribbon. If our MACD is trading up above its signal line, then we're being bullish, and you get a buy signal. You get a sell signal here, get a buy signal here, a sell signal here, a buy signal here. Okay. Again, it's subjective. We can see, okay, we can see just by looking at it. I'm going to zoom in a little bit closer. Okay, if we would have bought here, and then we would have sold when we got the sell signal, we would have made some money. That would have been a good trade. If we would have went short here because we're going into a bearish phase, ended up buying again here, that wasn't really that good. And then here, same thing. If we would have then sold that long position right here, that's a break even at best, but we're buying again today. So we can objectively see how well that works. Okay. So I actually, before I kind of talk specifically about the three methods of interpretation for MACD, that's the first one. Are we trading up above our signal line? If so, we're bullish. If we're bullish, we expect the price to go up. And so the corresponding reaction to that is to buy. Before I go into the second and third, though, I do want to talk about this histogram. This histogram was not initially developed by Gerald Appel. It was put together by Tom Asprey. Yeah, I wanted to make sure I was right. It's in my PowerPoint. Tom Asprey, but it's just basically the value of the MACD subtracted from its histogram, or from its signal line. That gives you the signal, or that gives you the histogram here. So if I took the MACD, subtracted from a signal line, that would give us a histogram. You can look at the histogram. When it crosses down below zero, that's when you're going to get your buy and sell signal. Okay, you can use it if you want to. You're just looking at the difference between those two numbers. So let's talk a little bit about how you use MACD. I already talked about the first method of using MACD. Are we trading above our signal line? As you can see right here, when we went up above our signal line here, it gave us a buy signal. We came back down below, a sell signal. We went above, a buy signal, etc., etc., etc. So give me just a second here. There's settings open. Let me just look at chat. Oh, there it is. Okay. Greg's just warning me he has bad internet. I needed to know. Okay. All right. The first method we talked about, the first way you interpret is, are you in a bullish phase or are you in a bearish phase? Okay. The second way we can look at MACD is as a perspective of momentum. Again, we look at MACD, you can look at both the trend and the momentum. Okay. When you're looking at momentum, you're looking at to see if you're overbought or oversold. Okay. Are you extended? Are you likely to have a reversion to the mean type of an event? Okay. And typically you want to be a little bit careful when that happens, because as you know, just because a stock is overbought or oversold, or just because you might think a stock is acting or a market is acting irrationally, doesn't mean that it's necessarily going to correct. So you can use it as a little bit of an early warning signal, but I would never use it in and of itself. Okay. You can tell when we're starting to see an overbought, oversold reading on this chart, because you'll start to see these blue bars. Instead of yellow green and red bars, you'll start to see blue bars. There's one right here. There's a bunch right here. There's a couple right here. There's an indication that the MACD is starting to get an overbought and oversold zone. And in the case of this one, it was great, right? It gave us a pretty big warning right at the very top. But it was also issuing that same warning here and all the way to here. At this point, it's starting to look really extended. It did pull back a little bit before it kind of started to resume. So I think it's important when you're looking at overbought, oversold. You can use it maybe to tighten up your spots. You can use it in conjunction with confirmation, like the price starts to move lower, stuff like that. But I'd always look for confirmation whenever you're dealing with overbought, oversold, not just with MACD, but with every type of indicator you might be using. Now, I would say that I like the way that they worded the commentary. Vince showed the commentary a little bit. I'm going to show you a little bit more. It's one of my favorite things about Metastock because it helps you remember what's going on. Okay, so to open up the commentary, what I'm going to do is I'm going to just go View, and I'm going to turn on the Expert Commentary. And as it happens, today on LRCX, we are getting a buy signal. Okay, so right here, currently the MACD is bullish since it's trading above its signal line. It just crossed over it. It's kind of starting to poke up. We might break this high. We might not. But since it crossed its moving average, the price has not changed because it just happened. All right. Yesterday we did get a sell signal. We could go back then. We could also kind of move this arrow. This arrow is dictating where this commentary is read from. I can move this commentary to any other page or any other screen that I want. So if we kind of moved it over here to this bar where we started to see that overbought or oversold, we can kind of see, okay, we are bullish right now. Since we're trading above our signal line, the MACD crossed above its signal line 3 bars ago. Okay, since then the price has gone up about 2.62%. Oh, in terms of overbought, oversold, this is why we're starting to get kind of these blue warning bars. The MACD is in overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. Okay. And then divergence. Let's talk a little bit about divergence. Okay. The reason I like to talk a little bit about divergence is it's kind of pointed out here. Right here, if we see divergence on a chart, it's going to kind of tell you. But I'm going to want to just go back to a person I mentioned a little bit earlier before we talk about divergence. Let me go back to my PowerPoint here. Oh, this needs to go earlier in my slides. Okay. So we talked to, okay. Overbought, oversold, divergence. Okay. Dr. Elder, in his book, New Trading for a Living, says, divergence is among the most powerful of all technical signals in technical analysis. When prices make new highs and MACD fails to make new highs, this is called a bearish divergence signal. Okay. He only said this part. But let me kind of talk a little bit about how you can identify divergences. You certainly can scan for them in Metastock. Let me talk a little bit about how you can visually look at divergences or look to find divergences. I'm going to kind of teach you the way that I learned from Dr. Elder. Okay. Actually, we might have a pretty good example of one right here on this chart right now. Assuming, actually, I don't know that we've necessarily set a new high. But let's say that we have. Okay. Right here, I want to take a look at MACD. We had a little bit of a peak in MACD right here. I'm going to draw it from right here. I'm going to use MACD divergence or MACD histogram to look at this because that's what Dr. Alexander Elder looks at. Okay, here you have a peak of MACD. You could even call it back here. But we had quite a bit more price movement here, so I'm going to actually use this peak of MACD. Okay, Dr. Elder wants it to cross down below 0 and come up and set a new peak. Okay. So right here, you've got your first initial peak, your second peak. There's actually a little bit of a drop here of about 41%, okay, on those MACD readings. Okay, let's look at what price did at the same time. Price made a new high at the same time, okay? Right here, we've got this, and in this case, between this peak and this peak, we went up about 8%, okay? So we had a new high in price that wasn't confirmed by a new high in MACD. Okay? In other words, the MACD went down while price went up. The price is not supported by MACD. And when that happens, Dr. Elder calls that the most powerful signal in all of technical analysis. He literally uses the words breaking the backs of the bulbs. So this is a bearish signal that you just got on MACD from bearish divergence. Okay, So kind of keep that in mind as you go forward. I want to kind of sum up. I'm looking at the time. And just to let's kind of move on to kind of talk a little bit about and just sum up a few things. We're just talking about MACD, how it's calculated, 3 different methodologies for how to use it and or how to interpret the MACD when you're looking at it with your own trading. One of the things I really like about technical analysis, not just MACD, but technical analysis in general, is everything I just talked about you can duplicate in your own trading. It's objective. It's not me trying to guess what's going to happen if we're 40 days into a government shutdown. It's not me trying to guess what's going to happen if we have tariffs for the first of unusual levels, or if there's a housing crisis, or if there's you name it, right? Like we've been over the years that I've been trading, there's been all kinds of emergencies, and sometimes they cause a huge thing to happen in the market, and sometimes they don't. But what I'm looking at, and a pure technician would say that the study of technical analysis is the study of chart. They'll also say everything known about any particular instrument is built into the chart. But in any case, this is objective. I can kind of say, okay, if we would have bought here because you had a crossover and sold here, I know how well that worked. Okay. If I would have sold here and bought here, I knew that didn't work. Okay. I know this was about a break even at best. If I'm getting a buy signal and buy now, I don't know how that's going to work yet, but I can see from an objective perspective, is MACD good with LRCX? It says, would you refer to MACD for a buy signal, or would you need more information? If you're using MACD, well, the question is like, okay, we just spent a little bit too much time talking about MACD. What I would want to know, in addition to how it operates, is how well it works, right? So what I'm going to do is if I can go in and say, okay, if I bought every time it says buy and sell every time it says sell, how well did that work for me over time? How did that perform over the last 1 year or 2 years? Or with US stocks and the LSEG data feed, you could go back to the 1980s. So for the purpose of kind of just making sure I get done on time, let's talk about just kind of performance testing and see how that works. So let's just I do love our tester. I'm going to go ahead and set up a quick system test with just LRCX. Okay. Now, with the system tester that's in Metastock, I could actually do as many stocks as I want. I could do as many methodologies that I want for the purpose of just kind of giving you an idea. And the fact that I'm kind of don't want to cut into John Bollinger's time and Zoe Bollinger's time, I can kind of keep it a little bit simple. Okay. If I wanted to kind of say how well did that work over the last year or 2 or 20, I could come in here and do this. I could also compare it to a bunch of different securities. What I'm going to do is I'm going to find the MACD system here. We'll do the MAC, and very quickly, I'm also going to just include a whole bunch of systems that I know are included in Metastock. Okay, all of these performance systems. Okay, I'm going to have it go back about 500 days. I'm going to have it take every single buy signal, every single sell signal, and tell me what worked on LRCX. If time wasn't an issue, I'd actually include more systems, but we'll just do this one for now. Okay. For my trade options, I'm going to have it start with a $10,000, and every time it gets a signal, I'm going to have it trade 75%. I don't have any brokerages commissions in here. I don't have any slippage. You can put that in if you need to. I'm going to also have it trade on realistic market prices, which means when it gets the signal, it's going to buy on the next open. Okay, let's just run the test. Okay, this is going to be 81 tests. It'll run really quick. It's done. Let me look at the report. Okay, so on LRCX, what did we do for the back test? 500, about 2 years of data. If I would have traded every single trade on all of these different 82 or so systems that I put in here real quick, our best performing system would have been the cycle eroding system. And over the last, over the last 2 years, it would have traded 100 times. That's too much. But it would have made about 80%. Our next best performing system over 2 years was 76%, but using our back testing method, it traded about 3 times. Okay. I'm very curious where MACD actually came in on this. So MACD, when we're kind of looking at it, actually was profitable, made about 4% over 2 years. So not super profitable, but it did do okay. What I want to understand when I'm kind of learning about indicators is how well they work. Okay. Since they're objective, tell me how they work. And then I can learn about the ones that work on the stocks that I'm interested in, or match up the systems. So we did have the stock band RSI system, the division system, the fractal system, which was kind of based on some of Bill Williams' work. Let's just say that we like 76% in 3 trades with 2-to-1 of the batting average. If I click on view right here, I do have the ability to kind of see exactly a breakdown of all the trades, how many trades I had. 3, 2 of them were profitable, 1 was unprofitable. I made on average for my profitable trades about $3,821, which was mostly this trade lifting up the average. On my losing trade, I made $15. So you can kind of see how this worked over time. I can take a look at the equity. What I want to decide is how well this worked. Is it consistent? And all of those numbers are actually kind of put in here for me. If I decide I like it, and again, I am moving a little bit quicker than I normally would, but if I decide that I like it, I can the next step I would say is to learn about what's in that system. So I just plotted that equity line on the chart here for us. We had a long signal that came in right here on 123. This method was called the Yearend reversal. If I want to learn more about that, I'm going to go back into the expert advisor. I'm going to go ahead and attach that exact expert to my chart. This is the Yearend reversal. We'll go ahead and attach it. We'll try to learn a little bit more about it. See, we've been long this whole time. We were short this whole time. Okay. We do have a little bit of a live mic, just so you know. All right. If I want to learn more about why we got the expert advisor commentary, I'm going to come in here to the commentary. I can go to view expert commentary, and I can find out the Yearend indicator was created by Tushar Shandy as a means of identifying impending trending action or impending trading range. The system enters when 2 Yearend indicators are extremes. So I know who developed it. I know what indicators are using it. I can kind of learn some more by going to the help files. The other thing that I can do, if I like this, is I can go ahead and add it or scan for it. Again, with the scanning that's available in Metastock. Works very, very well. So, there you go. I think we have is MacDV available? Yes. MacDV was created by Alex Spiraglo, Lucian. And there's a download on our site where you can get it. It's not included in Metastock just yet. It's not, but it's just a free download. So if you want to drop me an email, I'll dig up where that's located. But MacDV is available. And I'm just typing in my email address right now. So there you go. Let me send that to you. Okay. All right. Let's kind of wrap up a little bit. Okay. Talked about divergence. Okay. 32 years in a row, Metastock's been rated #1 in its price category. I love it. I use it every day. I'm going to run a scan a little bit later today. And for me, that scanning, I've been using it for numbers of years. Still run my scans every day because I want to be able to find those stocks that are having an opportunity. I wouldn't be able to trade without it. We have 2 versions of Metastock. We have a full real-time version and one we call delayed charts. Okay. Our real-time version comes with, I talked a little bit about LSEG News and their information and the information and news that's provided as part of their Reuters infrastructure. That's included. And that's huge because it's something that the news platform that's available if you're a hedge fund, if you're an institution, there's a really good chance that you've got a workspace turned on. And so we include a lot of the same news and information and data that you get if you're an institutional provider. They literally built it as a competitor to Bloomberg. You also get everything we talked about, all the systems, the ability to look at charts, the expert advisor, the scanning, the forecaster, which we didn't even talk about. We will this week. But all of that's available at about $210 per month. We also have a DC version. DC is a delayed chart version of Metastock. It'll do everything I did today: daily, weekly, monthly, quarterly, yearly. It doesn't have intraday data. It just has daily and higher, but it does update intraday. You get an intraday streaming delayed quote. that's about 15-minute delay that you can scan against. Your charts will update all day long. You don't have to wait till the end of the day anymore. And it's only $75 per month. Okay, there's a bunch of stuff that's included. We've been putting stuff into Metastock for more than 30 years. It's one of the things I love about Metastock is you're not going to outgrow it. If you want to, you can create your methodologies, you can create your systems, you can create your own scans. It's very, very flexible software. I've seen a lot of software come in over the 20 or 30 years that I've been working. It's so much software they charge several $1,000s for, and you just grow out of it. After a couple months, you realize it's a couple moving averages. With Metastock, it's something that we've been adding to for year after year after year. So you're going to get methodology, and I'm scheduled to talk more about this on Friday about the Ichimoku method, but that's included for free. We just started including that with 19. It's a great reason to get 19, by the way. There's a gap identification scan that we put together that'll help you find gaps in the market. There's a methodology called Michael Murmer's ETS. These are just free bonuses that are included with your subscription. Jake Bernstein's coming up in just a little bit. He built with Brian Latta the expansion contraction indicator. That's included for free as well. We do want to make sure you understand it, so we're going to include some training. This training you can go with on your own. It's a home study course. It's got 14 videos that kind of talk about not only our favorite systems, but how to set up your software, how to run scans, how to run system tests, that kind of stuff. Because we understand that this is helpful for you. If this is helpful for you, you're going to keep it. We'll also, as part of kind of your onboarding, we're going to set you down with one of our onboarding specialists that'll walk you through the program. They'll answer any questions you've got. If you've got a specific thing that you want, they'll show you. Otherwise, they'll just show you how to run scans and how to kind of open experts and how to use the software. Again, we want you to use it. We want it to be worthwhile for you. We want you to keep it. And we do offer unlimited access to our support as well. Here at Metastock, we have more people in our support desk than we have in sales and marketing put together. And if you ever have any questions, if you ever need anything, you can call them, you can chat with them. They do a really, really good job. In fact, there's a lot of weeks where they will get a perfect 100% score on their surveys, on their satisfaction rates from people that have reached out. So they're all here in the office. They can chat with you. They can take care of control of your computer if they need to. Any questions you ever have, they're available for you. So let me just kind of recap what the offer is. If you buy a month, so if you're buying the real-time version, that starts at $210 a month. If you're buying the delayed chart version, that's $75 a month. If you buy a month, we're going to give you the second and third month for free. Okay, so if you pay $75 today and get set up with Metastock, the software that's been rated the best software in its price category for 30 years in a row, for 3 months you'll pay $75. That's like $25 a month. In addition to that, right now it's November 10th. I didn't have to check, actually. December, January, February, you'll be running this till February 10th. If you don't feel like it's going to help you with what you need to do with your trading, you can cancel it. There's no commitment to keep it going. But I hope that doesn't happen for you. That's why we're going to give you the support, the unlimited support, the walkthrough, the training videos, all of that kind of stuff to help you get going. Because most of our traders, most of our users have been with us for decades, just like our employees. And if it's helpful for you, it's definitely going to be worth $75 a month. If it helps you decide on better trades and find better trades that you wouldn't have found otherwise, it's going to be worth $75 a month. So $75 will get you started. You'll be running well into 2026, almost till Valentine's Day. If it's not helpful for you, you can cancel. No commitment to keep it. And it's only $25 a month. So give it a go. 800-882-3040, metastock.com/salespchat. If you have any questions, we'd be happy to talk to you. You can also do this at metastock.com/conf-promo. Getting a little dry. Hold on. All right, there you go. Give it a shot. All right. As we kind of move on to, and I'm actually I pulled that together, didn't I? Got that right on time. Give it a go, though. I use it every day. I scan it, I run my scans, decide on what trades I want to do. So helpful, and you'll enjoy it. So give it a go. 800-882-3040, metastock.com/salespchat or 800-882-3040. Big thanks to our sponsors, AAII, Technical Analysis of Stocks and Commodities. I want to talk a little bit about the Traders Forum. The Traders Forum is a live community. It's a partner of Metastock. You can go in there. You can learn about technical analysis. You can chat with other market traders about the markets, what you're interested in, what you like. A ton of free resources are available up there as part of it. And all of that stuff I just talked to you about is completely free. TheTradersForum.com. Go ahead and get up there. Join. We'd love to see you there. I'm in there every day as well, posting my scans, actually. All right. 800-882-3040, metastock.com/conf-promo, or metastock.com/salespchat. All right. I want to introduce, I almost don't need to introduce these guys, but I'm going to anyway. John Bollinger, creator of the Bollinger Bands, been probably one of the biggest experts that exist in technical analysis. I've had the pleasure of meeting John. Actually, funny enough, the very first time I gave a live presentation, it was in front of John Bollinger's students. And I remember on that day, hiding behind the podium, I was so nervous and so worried and so scared. But that was the first time I met John in person, I think, as well. He's going to talk to us now. Zoe is also going to join us as part of that. Zoe is absolutely delightful. She's been working with John for a number of years. And I think what I'm going to do is going to get them started. How are you guys doing?
We're doing well.
All right, I can see you guys.
Can't complain.
Very well.
All right. You guys look great. You're coming in very, very clean. I'm going to go ahead and stop sharing my screen. There should be just a share button. You click on it, and that's all you kind of have to do. Decide what screen you want to share.
Let's do this and see how we go.
Yep. All right. First try, Zoe.
When technology's on your side. Not guaranteed, but it's always nice when it works.
I do see it's not expanded yet.
Now?
Yeah, that'll be fine. And then I'm going to get out of the way. I'm here if you need me, but it's all you.
Sounds good.
All right.
John, kick it off.
So I wanted to start with a little bit of background, a little bit of philosophy, if you will. You know, trading bands have been around for a very, very long time. When I came into the business in the late 1970s, early 1980s, we only had one sort of trading band really that was available to for us to use, and those were percentage bands. But there were other bands coming along at the time, and now we have a whole collection of them. Obviously, I use and like Bollinger bands, but there's Donchian bands, Keltner bands, percentage bands. There's Stark bands. It's an endless litany of bands, some of which are suited for the same purposes, some of which are really useful for very specific purposes. But the thing about trading bands is that they all do the same thing, and that's a really, really important thing. They tell you whether price is high or low on a relative basis, and you can use that as an input into your trading process to identify opportunities, to try to find places where the amount that you have to risk is relatively small and versus the potential gain, which is larger, and the odds are in your favor. So the odds of success, that is, are in your favor. We'll talk more about that a little bit later, but I just wanted to give you that background. Some people think that trading bands are magical or something like that, or that it's you tag the upper band, it's an automatic sell, or you tag the lower band, it's an automatic buy. Really, all they do is tell you whether prices are high or low on a relative basis, and then it's up to you to decide what to do with that information. If after all of the exposition that we're going to give you today about Bollinger Bands and some of the trading systems that relate to Bollinger Bands, you decide that you'd rather have the work done for you. We'll talk about the Bollinger Band system, which is a Metastock product that's been around for a very long time and has stood the test of time. So with that, let's get going. So the essential question here that we're going to deal with today is why use TA tools like trading bands? The real reason is that you want to eliminate emotions from the trading process. You know, back in the day when we were doing charts by hand and such like that, we'd take a piece of tissue paper and trace out the moving average and slide it up and down on the chart to figure out where the upper and lower bands should be. And that was a process that was just fraught with problems. First of all, it was very labor intensive. You had, while you might fit them correctly today, the market might morph over the next couple of months, and you have to do it again. And if you were trading a lot of stocks, then it was really a nightmare. But the real problem was that if you were bullish, you'd set the bands to paint a bullish picture, and if you were bearish, you'd set the bands to paint a bearish picture. So that led emotions into the trading process, and that was really a big problem. So what are we about today? We're going to talk to you extensively about finding setups where the risk and reward criteria are in our favor. And we're going to look at two dimensions there, the number of winning trades versus the number of losing trades, and the average size of our winning trades versus the average size of our losing trades. And we're going to talk about how to deploy all of these trading bands, specifically Bollinger Bands, and some indicators to develop systematic approaches. So this is the basic idea of behind Bollinger Bands. The middle band is an average. We say it's an average of the close for 20 periods. When I came into the business, trading expenses were really high. Both in terms of commissions and in terms of slippage and in terms of the bid-ask spreads, such like that. So there was really no short-term trading to be done by individuals. You had to be a pro, you had to be a broker-dealer, in order to, really successfully beat the expenses down to the level where short-term trading could be possible. So we were intermediate-term swing traders. We used daily and weekly charts. We used to get the old SRC charts in by mail. We called the daily charts the New Testament and the weekly charts the Old Testament. That's what we did. So when I talk today, you'll see that I still have that sort of bias to me. I like daily and weekly charts. I like intermediate term swing trading. I like going for the big gains, the 10, 20, 30, 40% gains, or more if they're going to be delivered to me. But I'm really not about the very short-term trading ideas. It's not that they don't work or they can't do. It's just my personal bias. So the middle band is for me mostly a 20-day average, but it could be a 20-minute average if you were trading a very liquid stock, or it could be a 20-week average if you had a really long-term outlook. And the upper band is set above that middle band by 2 times the population standard deviation. Now, this is actually a misnomer because it's not exactly standard deviation. It's just a calculation that's used for standard deviation. The mathematical term is root mean squared deviation. And we'll talk a little bit more about that later. But basically what we're doing is we're using a market mechanism, volatility, to set the upper and lower bands for us so that we're not caught in that trap we talked about earlier of letting our emotions into the trading process.
And John, I don't think we're looking. Oh, the slide's just updated for us, but I don't know if we're sharing the. Okay.
Let me try, rather than sharing the application, sharing the whole screen, and you'll get a little bit of a weird echo for a second while our cameras are still on, but then that might work better. Let's try.
Yeah, we can totally see you. But like I wouldn't worry about having a screen share because it usually does. Okay, I can see the PowerPoint now, and on the right page too.
Are you seeing the full screen now of the Bollinger Bands?
Yeah. Cool.
Okay.
Sorry to interject. I'll get out of the way. I promise.
No, we appreciate it. We'd rather not go through the whole slide with people being like, what are they talking about?
Submarine by technology again. So here we go. This is the formulas that I was just talking about. The upper band is the middle band plus 2 times the standard deviation, the population standard deviation of the close. And the lower band is the same thing, just minus 2 times the standard deviation. Now, these are up for grabs. You can, some people use very short-term versions of Bollinger Bands, 10-period calculations. Some people use very tight versions of Bollinger Bands, just 1 standard deviation. So it's totally up to you and your application. These are the defaults that we use here. We have tremendous number of years of experience with them and are very happy with them. They suit our trading process, but your trading process may be quite different. So we talked a little bit about this before. I know I'm reiterating, but it's just so important. Bollinger Bands define high and low on a relative basis. By definition, prices are high at the upper band, and by definition, our prices are low at the lower band. When I actually do talks in person, I get everybody to stand up in the room and repeat these things after me, because I think they're so important that people really understand. So I'm going to trust that you're going to do this because I can't hear you. But repeat after me. Prices are high at the upper band and prices are low at the lower band. That's the essence of all trading bands. So again, we talked about this a little bit already, just want to reinforce it. The defaults are 20-period plus or minus 2 standard deviation, but please feel free to adapt to your trading style. I have seen so many variations and versions of Bollinger Bands out in the wild. It's just incredible. One of the reasons I really like to go to in-person conferences is because people will come up and they show me what they're doing with my work. And sometimes you go, are those really Bollinger Bands? They've adapted them, in many different ways. And the other thing is that Bollinger Bands, people think they're just used on price, but they're very useful on indicators. For example, you can plot 50-day Bollinger Bands on RSI and use the upper band and the lower band instead of the levels of 70 and 30. Or more interestingly, if you're keeping track of your equity lines over time, you can plot Bollinger Bands on your equity lines to see when your systems might be performing better than expected or worse than expected. So we predominantly use daily or weekly bars here, but you can use bars of any length you want. But this is the key. The only limit is that there be enough data in each bar to see the price formation mechanism at work. So for a stock like Google, there's virtually no limit to how short the time periods you use could be 10-second could be 10-second bars if you wanted. But for a relatively illiquid over-the-counter stock, it could be quite different. Daily bars might not have enough data in them to see the price formation mechanism at work. You might have to go to weekly bars. So it's based on how active the stock is. The more liquid the stock is, the more active the stock is, the deeper the markets around the stock are, the shorter the term that you can work with. I think that should be pretty straightforward. So this is a big bugbear for people, and we say that we use the calculation for standard deviation, not standard deviation itself, and this is the reason. Stocks indices, ETFs, do not follow normal distributions. So most people expect 95% of the data to be contained by the bands, which would be true if it were a normal distribution. But instead, we find approximately 90% containment, and that doesn't matter, really what we're looking at. Those forex, commodities, metals, stocks, bonds, almost all of them have roughly about 90% of the data contained inside the bands, not the 95% that you would expect. So in order to go any further, I have to introduce you to two Bollinger Band indicators, and these will be fully implemented by Metastock for you and included in some of the systems that we're going to talk about. But, the rest of the talk won't make any sense if you don't really understand these indicators. So the first one we call percent B, and it tells us where we are in relation to the Bollinger Bands. So percent B uses the formula for stochastics. I could have used some statistical measure like a z-score or something like that instead of percent B, but I wanted percent B to be an indicator that was intuitively correct to the market technician. After all, we're primarily market technicians. So I took the formula for stochastics and I adapted them to Bollinger Bands by using the upper and lower band instead of the periodic highs and periodic lows. So percent B is simply the distance from the last price to the lower Bollinger Band divided by the distance from the upper Bollinger Band to the lower Bollinger Band. And you'll find that when prices at the upper band, percent B will be at 1. When prices at the middle band, percent B will be 0.5. And prices at the lower band, percent B will be 0. If prices above the upper band, it'll be a number greater than 1, and below the lower band, it'll be a number less than 1. So the second indicator that I'm going to introduce you to is bandwidth. Bandwidth tells us how wide the Bollinger Bands are. It's a very simple formula. It's simply the distance from the upper band to the lower band divided by the middle band. We call that normalizing by the middle band, so it's always expressed as a percent. And for something like the S&P 500 or SPY, you'll find that over a long time using daily bars, you'll find that bandwidth will range roughly between 5% and 50%. You can see there's tremendous difference between 5% and 50%, a multiple of 10. And that's why we use calculation for standard deviation for the Bollinger Bands, because when the market starts trending very, very hard, the bands are very adaptive because of that calculation. So the upper band will move rapidly to capture price, and the lower band will actually turn down in a very strong trend, widening up the bands. And so that's the basic adaptive nature of Bollinger Bands. So we're going to switch to a section on applying Bollinger Bands, and we'll start with the practical. So far, we've really been talking about the theoretical and the groundwork around Bollinger Bands, but now we're going to switch to actually applying Bollinger Bands. So I'll switch over to Zoe in a slide or so, but the Bollinger Band methods that we talked about were first introduced in 2001 in my book Bollinger on Bollinger Bands, which is still the best reference on Bollinger Bands. And the reason for this slide is very straightforward. People think that if you put something in the public domain, like I did these methods, that the power of them, the usefulness of them will be instantly arbitraged away. Well, 24 years after these have been published, they're all still working exactly as originally specified. And that's because all of this work, Bollinger Bands and the indicators based on Bollinger Bands, are based on first principles, the structural building blocks of the markets, and you'd have to destroy the markets to stop them from working. So with that, I'm going to turn you over to Zoe, and I'll be back in a little bit.
So sometimes for presentations like these, we'll teach things based on the chart patterns and some of the most common and popular chart patterns. And we'll end up doing that today as well, but we're going to do it kind of within the framework of these methods. So there's 4 total, 3 of which were introduced in the book and we're going to touch on today, and a 4th one that was developed afterwards as an add-on. Method 1 is a volatility breakout method. It's based on a concept we'll get into. It's one of the more popular Bollinger Band patterns called the squeeze. Method 2 is a more classical trend following, so looking to catch those longer term up or down swings. And method 3 is a reversal or kind of a mean reversion approach.
I just point out one odd thing in the numbering here. Method 3, reversals, was actually the original Bollinger Band method, but it somehow in the book, because of the popularity of the squeeze and the trend following methods, it got bumped to number 3. But it was the original one that I developed Bollinger Bands for.
So we'll go through that. John will talk about it a little bit, but these will give you kind of a scope to think about some of those favorite Bollinger Band patterns that you may have seen us teach in the past. And also, if you're interested in sort of a more systematic approach to trading with Bollinger Bands, these can provide some nice foundations for that, and you can use them as they are. You can adapt them, add additional rules and filters, and they create a nice framework to think about how you structure a trade with Bollinger Bands. The one thing, we call them methods, not systems, and there's a reason for that. They're not exactly systems. They're not 100% meant to be take every signal as an entry. For some, we do provide within Metastock kind of suggested entry and exit criteria, but they're really to flag and draw your attention. What these are most of all is a really nice screening mechanism, more or less. Jeff Gibby talked about posting some of his screens. These are really nice ways if you're looking for something to trend, if you're looking for a volatility, if you're looking for a mean reversion strategy. These can pull up on a daily basis a really nice selection of potential setups. And you probably don't want to trade them all, but they can be a really beautiful way to grab the couple favorites as you go through them that you then do want to execute. And with all of them, we suggest, and you probably heard John say this before, wait for confirmation. Everyone wants to buy that bottom dip or sell that very top bar. It's worthwhile to wait and make sure that you get that pattern set up and wait one bar to see that it's going to go in the direction that you want it to before you enter. You might lose 0.5% or 1% in your total long-term potential gain, but John brought up that ratio of sort of the number of winning versus the number of losing trades. Waiting that one bar to see whether there's going to be confirmation that it goes in the direction you're expecting really helps you up that win rate. And the other thing is you can use these different ways. You might be a long-only trader. You might be a short trader. We see a lot of people who, and it's true of us as well, who aren't so much traders as investors. So you can use these. A long signal could be a long entry. A short signal could be a short entry, but a short signal could also be something you watch on one of your long positions, and it could be a sign for you to put on a little bit of a hedge or maybe trim some of your exposure, take a little bit of profit. So you can kind of use these as they make sense in the context of your trading. So method 1, this is our volatility breakout, and it's based on the squeeze. So we've talked about bandwidth, where over time the bands fluctuate. They become wider, they become narrower. A squeeze is a narrow point in bandwidth relative to where bandwidth has been in recent times. We usually define it as a 6-month low in bandwidth. That's the default across everything that we've got available in Metastock, and probably what you've seen most commonly. Like everything else, you can adapt these. You know, if you're looking for a shorter time frame, you can change those parameters and look for a squeeze being a lower relative in a shorter time frame.
So, this illustrates my bias towards daily and weekly charts. If you're using some other time frame, if you're using hourlies or something like that, it's 125 period low in bandwidth.
And a squeeze is basically, it's a moment of volatility compression. You've had a certain volatility level over recent times, and you're down at a low point. And volatility it's not trend following, it's mean reverting. So a low point in volatility is generally not an indicator to more low volatility to come. Usually it's an indicator that we're about to see an expansion. We've gotten really compressed and there's room to move. John always says it's where trends are born. The thing with this is it doesn't tell you which way it's going to move. It just tells you that it is likely to make an expansion out of where we are. So one of the things that we really want to look for, and kind of the basis behind the squeeze breakout, is to then see what direction we're going to go and to catch that. So the criteria, we have all of these methods available in the Bollinger Bands toolkit in Metastock. All of the indicators that you need to build them yourself are available in Metastock. And so our criteria here, and you'll see it showed up on a chart in a second, but we're looking for a squeeze, not necessarily at that moment, but in the last 7 periods, because what we're looking for is a squeeze and then a move and then a directional move. So it doesn't have to be squeezing at the time, it just has to be exiting a recent squeeze. And then we're looking, our signal is generated when price breaks either out to the upper band or down below the lower band, signaling that we're ready for a move.
And the thing about 7 periods is pretty interesting because we really prefer a situation where you squeeze and go. These prolonged squeezes where the bandwidth gets down really low and nothing happens for a very long time, just not very good trading environments for this sort of thing. So after 7 periods, if it's not going, it's we drop it from the screen.
And so this is an example with the template for our method 1 in Metastock. So things are a little bit small the way we took these, but you'll see you get these little nice S logos identifying where you've got a squeeze, and the bars turn green as you hit that breakout above the upper band here. This is a chart of Celestica daily over recent months. And we talk about you kind of not knowing what direction it's going to be until you get that breakout. And so they're not always reversals. Often they're continuations. This actually is one of the types of patterns that I really like to trade, where you get this nice, strong uptrend. You come into a squeeze and you continue. You come into a squeeze and you continue. And you can kind of take advantage of these. Maybe there are multiple entries. Maybe you're building and pyramiding your way into a position. And we've pointed out the squeeze here in bandwidth. You get these upper and lower bars or lines that indicate the 6-month high in bandwidth and the 6-month low in bandwidth at that time. You'll kind of see them come down as we get more than 6 months past a prior high, or you'll see them come up as we get more than 6 months past a prior low. And we've got the little orange arrows, those we put in to draw your attention to them. And we included the little red arrow. It's something you don't see the proper squeeze up here on the chart. And this is just a reminder that not every setup is perfect. So technically, this did not quite come down to make a squeeze. Our bandwidth is just shy of that lower level marking the squeeze level. But if you're looking at it on a chart, you still see this reduction in bandwidth and then a break up. So screening like this gets you a really good distance along your way, but don't be afraid to also use your discretion. And if you see something that is 99% of the way but doesn't quite check the boxes for the perfect rule, that's life. It's probably still valid. Not everything is 100% ideal all of the time. And you saw where we cut this off. We were coming into, you get this little B mark, we were coming into a bulge here. Which can be a sign of either the end of a trend or of a consolidation period. So you can kind of keep an eye on it from there.
There's another cute little feature down all the way down at the bottom of the chart, the green and red bars.
It's this guy down here.
Yeah. So it's just a simple trend indicator. Give you some idea what the major trend it is at that time. Green when we're going up, red when we're going down. We always get into trouble if we go to Japan or China because they use the colors the opposite way.
So That chart that you just saw is part of our method 1 template, and this is kind of what will be automatically plotted on there if you use it when you're doing your analysis. So you'll get that price pane at the top, you'll get volume, you'll also get the method 1 expert advisor, which we'll point you to a little bit later. You'll see Bollinger bands, you'll see intraday intensity, and you'll see bandwidth. Along with, and part of that expert advisor is those nice little signals that you're seeing on there that are marking that. So I ran on Thursday, which was about as close to a Monday presentation as I was willing to push things. I ran a method 1 exploration in Metastock, and these 3 charts were a couple of the examples that came up as being in signal at that time. So we got ConocoPhillips here, which was just coming into a squeeze and breaking down. We saw another nice little short-term trade from it earlier where you got the squeeze here and a little run up. These fall into those kind of shorter trades than John traditionally likes to take. He's looking for the bigger swings, but these can be interesting depending on your trading style. But this is exactly that kind of thing that you're going to get when you run one of these explorations. You'll see a recent signal. We're indicating looking at a likely breakdown, and you probably want to wait for that confirmation bar and make sure that it's going to do what you expect. In those, if you were going to take a short here, we talk about that sort of odds of success being in your favor, potential gain versus potential loss. These give you very nice little options. You can put in a stop just above this bar in the squeeze, and if the short goes your way, you can ride it down and pick a profit, and if it doesn't, that's a really nice little easy exit with a minimal loss to go and pick your next setup. We've got a couple more here in that squeeze bulge. That this also came up in that most recent scan because you have this recent squeeze and then a breakdown, so could get further downward action here. But I really included it because I think it's a quite beautiful example of the way a bulge often works. So you had this long-term downtrend that you're in, and you get the bulge, and that doesn't necessarily signal a reversal, like signals the end of that move. And so in this case, we got a nice long sideways consolidation before not quite a squeeze, but a reduction in bandwidth, and then a further breakdown that led into the current downtrend. And we're seeing possibly a continuation of that, and a squeeze and another breakdown here. But I think it's one of the really useful things about a bulge, and one of the potential misnomers. It's exhaustion in the current trend. It's that we've reached a really high recent level of volatility, and it's not necessarily we're going to go back the other way, but we might just take a break. And this has another set of those kind of nice examples here, where we got a set of squeeze symbols here in Home Depot. We hit this squeeze. We got our confirmation bar where we broke down below the lower band. You could enter a short here, and this bulge indicated the end of that current move. And we're getting another little squeeze here. Could be a nice setup to keep an eye on. So I'll let John take over for method 2.
So method 2 is kind of a classic trend following method. The core idea is that strong price action must be supported by strong indicator action if you want a positive result. Another way of saying that is that strong price action and strong indicator action together are a good thing. So the basic concept here is very simple. Long, we're going to look for price to approach the upper band with confirmation of strength from an indicator. And when I say approach the upper band, I mean that. We're not going to wait for a tag of the upper band. We simply want to get up into the upper range of that. The key is probably %B somewhere north of 0.8, maybe even approaching 1.0. And the same on the downside. We're looking for price to approach the lower band. Normally %B will be less than 0.2, could be even lower than that. And we want that weakness to be confirmed buy an indicator. So this is a classic Bollinger Band approach. Percent B tells us when price is relatively strong compared to recent action. MFI, the money flow index written by Kwong and Sudak, is going to be our confirming indicator. So the buy signal is going to be percent B greater than 0.8 and MFI greater than 80. So the method 3 template presents the sorts of things that you need to analyze this: price and volume. BBTK2 is the template that puts all of the signals and such on the chart. Bollinger Bands themselves, and then BBTK2RS. That's an interesting one. I'll get back to that. And BBTK2 percent B. We talked about percent B, but we really haven't talked about RS. So the nice thing about RS is it gives you some sense of whether the stock is underperforming or outperforming the market. So I like this as an additional form of confirmation. So if we're getting a positive signal, percent B is above 0.8 and MFI is 82 or 83, something like that. If you look down and see that RS is upsloping at the same time, it just gives you a little bit extra confirmation. So we found 3 stocks that meet these criteria met these criteria as of Thursday: Cardinal Health, Micron, and HAG, which is an insurance broker. So over on the right-hand side, you can see the big lift off there as Cardinal Health broke out, met all the criteria that you wanted. But look there in the middle. This is one of the things that this approach does so well. You know, it looks like you're in a little consolidation after a short-term double top, and you're just walking along lower band. But method 2 tells you that there's more weakness here than appears, because it compares the indicator action to the price action within the band, so it alerts you further. And then if you look over on the left-hand side of the screen, you see sort of a classic lift-off there. You get up toward the upper range of the band. The MFI is confirming, and you get a nice trade that lasts about a month and a half. Micron, we get another trade in a similar place like that. We get a tag of the upper band, and note that the arrow here, the big green arrow, seems like it's a little bit late. You would have liked to have seen it a few bars before, but the indicator, the underlying indicator, MFI, had not developed enough strength to confirm the signal yet. So it's there's a confirmation mechanism in place here that helps a lot. And then we're currently in a trade with Micron. We got the buy set up back in, what does that look like?
Mid-September-ish.
Yeah, mid-September-ish, and we're still long this position. So there you go. And then AJG, here's this I specifically chose because I wanted to focus on this setup. This is one that breaks down, and here's our stop. So we risked a relatively small amount here in pursuit of that trade. However, over here on the right-hand side, you see one of these setups that works terrifically well. So the discipline here is really important. There's no hope allowed when you're doing this sort of work. If the setup doesn't work, then you get out of it. Myself over here, I would have exited somewhere's in here because it was clear that the potential for this trade wasn't developing. You might wait for the stop if you wanted to give it a little more room, but I myself would look at that and say, it's just not doing what it's supposed to do. And that's one of the key things that we do here at Bollinger Capital a lot when we're managing portfolios. We look at stocks, individual stocks, and ask, are they doing what they're supposed to be doing? For example, a classic one is an earnings report. We looked at a stock this morning, had a terrific earnings report, and it was down on the day. What does that tell you? It tells you there's a lot of weakness in that stock, a lot of sellers who use that positive earnings report to exit the stock instead of enter the stock. So the market's reaction to these things is really important. And here you see a failed reaction. And over on the left-hand side, you see a trade that worked out great. You came up, you got the confirmation, and then ran up and got another signal and continued back up to the highs.
So I'll take over with method 3, which, as John pointed out, was actually the first of the group that he developed, looking at sort of a mean reversion approach. And this is, I think that difference between method 2 and 3 are really nice examples because they demonstrate that that you want to look for that confirmation, because a tag of the upper band could be the start in method 2 of a trend following move. It could be the start of a move up the upper band, or in a method 3 environment with a different kind of confirmation, a tag of the upper band could be a reversal signal telling you that you're getting to mean reversion. So the touch of the band itself is not the signal. You want that confirming indicator action or some other input to help you make that decision of, is this a sign of strength, or are we overextended and it's actually a sign of a likely reversal? So we're using actually the same inputs here. We're using %B and MFI again, but we're looking at situations where you're approaching that upper band and MFI is not showing strength, or you're approaching that lower band and instead of also agreeing that there's weakness, MFI is saying, actually, there's some strength here. So you're seeing some supply and demand characteristics going against your recent price action. So same thing, we ran a set of these explorations on Thursday. These are 3 of the stocks that came up in that exploration as examples. So we see, again, we put some little circles here to help you see the tiny little arrows. They're bigger when you're looking at them on your regular trading screen. But we see a nice set of examples. Starting all the way on the left, this is BMY, Bristol Myers Squibb. It gets out above its skis a little bit here, and we get the reversal signal, and that does indeed take us back within the bands. A nice little short-term buy signal here is we have a tag of the lower band with MFI showing some strength, and that's good to carry you all the way up through the upper bands. And then again, we get a set of early signals here during this big decline where it says, oop, we're out below the lower band. There's still some strength in the MFI. This is, again, where a stop helps you. If you enter here and you make this low or you make this low, you know that it didn't work. You exit with a small loss and you hold out for the next batch of signals, which we see here, that actually do carry you to a nice little gain up to that upper band. Ditto some nice reversals here that get you down to the lower band. And when we ran the scan, we were getting a set of upper band reversal signals that you can keep an eye on if you're interested. This also has that relative strength line that John mentioned earlier that's showing you when BMY is showing strength against the market versus weakness against the market. So when a lot of these losing signals are working, you're seeing that falling RSI providing you with that confirmation. Ditto here, you've got a little bit of rising RSIs, you get this positive move to the upside.
I just wanted to highlight one thing here because this is the sort of thing that I pay attention to. So we get this buy alert here, and let's say we enter the next day or two. We get a little rally to the upside. Normally you'd sit around and wait for a stop here, but when I see these 2-bar reversals at the upper band, like you see here, here's a bar outside the upper band, and the next bar is back down inside the upper band. That's an exit for me. It's the character of the security has changed, and it's exhibiting weakness at the upper band instead of strength.
And while it doesn't meet the criteria for an actual signal in this reversal system, you see another really beautiful example of a 2-bar here, where you have a strong bar that's greater than recent bar sizes have been, greater than the recent average true range, closes positively outside the upper band, and a second one that reverses that, going from outside to inside the upper band. So those are usually a good sign of a change of direction, that you are long, maybe you want to exit. If you're short, maybe you want to address your situation. But it's another example that's got a set of 2 of these little reversal signals. We got some mean reversion from the upside here, where we came out above without indicator confirmation. It led into a nice series of downtrends, and now we're down below the lower band with our indicator turning positive. We haven't really seen that relative strength line turn up just yet. So this is something you maybe want to watch a little more carefully. Keep your stops close, because conditions are good, but maybe not as good as they could be, that kind of thing. And Autodesk, John talks a lot about sort of swing trading. This had a nice set of those kind of up, down. You can make a set of these nice little swing trades in here.
Yeah, back in the day, you had to have big swings or you just weren't profitable.
So you got a nice short signal here. You can ride all the way down. This would be a classic Bollinger Band W bottom, which we're not teaching today, but if you see one, it's a nice example. Get your buy signal, ride it up, a little confirmation, and then you get to that weakness in the upper band with negative indicator action, which leads to a downturn. Another little rally, some resistance, and we've got some buy signals here that you can keep an eye on and see if this is kind of coming to an end of that current swing. So there's a number of ways that you can access these through the Bollinger Band toolkit on Metastock. You have the templates that we've just been looking at, which include all of the indicators formulated specifically for these methods with the right defaults. They also each have their own expert, which we'll show you in a second, that has a lot more detail and gives you those kind of little buy and sell. I don't really like to call them buy and sell signals, but flags.
Alerts.
Alerts.
We like to call them alerts.
There you go. And you also have the option to run all of these as explorations, so you can get your daily watch list of things that might be a method 1 volatility breakout, might be a method 3 reversion, and you can use your own view of the market for which of these methods you want to be looking at any given time. If you think things are getting shaky, maybe reversion play, a reversal signal is what you're looking for. If you think we're mid-strong bull environment, maybe some volatility breakouts to the upside. So you can use these to find a set of setups that make sense in the broader context of what you're looking to do when you're trading and investing. This is a little example that didn't show up the way we were showing you the charts. For all of these methods, there are experts, which is one of the really unique and great features of Metastock that we don't see on other platforms, is the opportunity to write these little experts. And so for any one of those signals, you can always add the expert commentary, and it'll give you this little, this was just another random one that came up in the screen. It was Elevance Health, and it'll say, there currently is a live method 3 reversal signal. If you'd taken a long, these are where your stops might be. If you'd taken a short, these are where your stops might be. You might want tighter or wider stops depending on your given trading strategy. And it'll tell you a little bit about where we are in terms of the method, that it's currently a buy signal, why, and some of the ways that you might be able to take advantage of that. So they're just nice little ways to kind of frame what you're seeing in the chart if you want to combine your visual learning with some more of a written commentary style. So I'll let John wrap us up for the day with a few words on the Bollinger Band system.
So we've talked so far about the toolkit, which gives you a vast variety of tools so that you can do your own work, your own analysis, make your own decisions, find your own trades, fine tune it to your risk and reward parameters. But a lot of people don't want to do the work. They'd rather have somebody do the work for you. So many years ago, I wrote an article for Technical Analysis Stocks and Commodities. It was an introduction to Bollinger Bands, and I used RSI as an example of an indicator that you could combine with Bollinger Bands to find positive setups. John Slauson, who worked at Equus at that time, really liked that article and asked me to work on converting it into a trading system, and we did so. Created this Bollinger Band system. The interesting thing is it must be 20 years old now. I think it's at least 20 years old. And it's still working. It works exactly as originally specified. Each day it produces a number of buy candidates and a number of sell candidates for you to take a look at. It produces the stops to go with them. It's just a really, really useful system. The interesting thing is it's very picky. We typically run it on the S&P 500, but the Russell 1000 is probably a better universe so that you get a few more candidates to choose from. And the bottom line is that this does all the analytical work for you. The system produces a box, and it shows you why it is making the recommendation that it is, and the stops to go with it. So you want somebody to do the work for you? Give the Bollinger Band system a spin.
And the only thing that we've talked about with some folks who use it over the years is it does suggest stops. Stops are quite personal. So depending on your risk tolerance and how much room you like to give a trade to breathe, you might want to either broaden or tighten those stops so that it kind of works for you.
Yeah, like everything else, you just adapt it to suit your personal needs.
And so I think we've left, hopefully, about a couple minutes, maybe 10 minutes for some Q&A. I'll stop sharing for the moment. And Jeff, maybe you'll let us know if we've got any questions in that we can.
Yeah, we've got some questions. Let's see. Let me go ahead and Kenneth said, this isn't really a question, but it's a comment. He says, I like to use my Bollinger Bands where I overlay the 20 SMA, 2 standard deviations over a 20 SMA with more standard deviations. So there you go. You were talking.
So that's actually pretty popular. That's a pretty popular idea. Some people plot Bollinger Bands with 1, 2, and 3 standard deviations to give them, a greater sense of the dispersion of price action around its trend. So that's a perfect example of somebody adapting Bollinger Bands to suit their purposes. Kudos
That's exactly
to you.
what he's saying he likes to do too. Actually, he did have a question. I didn't see it until I drilled into it. I blame the new interface. But he wanted to know, he's like, can I do this with Metastock? And you absolutely can. You can put 1 standard deviation and a 2 standard deviation. You can control the moving average length. Anything you want to do in Metastock, you can with that, Kenneth. Good question. You had talked a few times about confirmation and wanting confirmation in the trades. Ahmed wants to know what is the best form of confirmation.
So for me, price action is the best form of confirmation. We have and the best form of price action confirmation is what we call a sign of strength. It's simply a bar that has greater than average range, greater than, if you're looking for positive confirmation. Now, you can turn this all upside down, but if you're looking for positive confirmation, it has greater than average range, greater than average gain. So what you're looking for is a big fat bar on the chart that confirms that the new direction is up or the new direction is down. Pretty straightforward, but by applying those rules, there's actually 3 parts because it tries to be tries to be fancy. So you want greater than average range. You want greater than average change. So if the stock on average is up or down 2 or 3%, you want it to be like up 4% or something like that. And then if you if you start, let's say you have a price at 90, a signal that occurred at 90. Often what will happen is the next day you'll start out to the downside and reverse back to the upside, right? And be just barely up on the day. But because you have greater than average range, it is confirmation, even though you don't have greater than average change. I hope that's clear.
That makes sense to me. Yeah, that's clear to me. Hugh wants to know, when you're taking a signal, do you wait for the close to be outside the Bollinger Band before entry?
No.
Okay. Let's see. Dave says, I'm an AI software developer. Would you be interested? Oh, I'll send this over to you a little bit later. Looks like if you want to do some AI, Dave wants to help. So let's see. Theodore wants to know, have you read all the books behind you, and how many have you memorized?
Oh, you have no idea. There's so many more. How many have I memorized?
That's what he said. Yeah, I was going to ask you the same question if you've read them all.
I really know the contents of 20 or 30 books. I haven't memorized any, and I've read the majority of the books behind me.
What he has is really good recall for when something comes up. He's like, there was something about that in this book. And he'll be able to go pick out the book that he needs to find the piece of information.
So the reason I say I've read the majority, because a lot of the books I bought and read the one chapter that I was really interested in. And then, so I can't say that I read the book, but I did get what I wanted from it.
Here's another one that'll test your memory recall ability. Neil wants to know where he can get a copy of the John Slauson article that you mentioned. Now, I know if you have a membership to Stocks and Commodities magazine, you get access to all of their articles. You could actually search for John Bollinger and probably find it that way. Do you remember kind of about when it was published?
But it's also posted on my website, so we cut a deal with Technical Analysis of Stocks and Commodities a long time ago. So if you go to bollingerbands.com, it's there for you.
Well, there you go. That would be easier to find too. Very good. Thank you for the question. Reg says, I like the idea.
I would really recommend that Technical Analysis of Stocks and Commodities membership. The ability to sort back through all of those articles, it's just really incredible, because so many really, really interesting people have contributed to the magazine over the years. It's just a wealth of knowledge, those articles. So I'm a long-term subscriber, and I actually have every issue of Technical Analysis of Stocks and Commodities that was ever printed.
I don't, but that's cool. Reg says he wants us to program the big fat bar indicator for you.
It's a relatively simple set of criteria, I think.
Equus has a really powerful programming language built into it that's really simple to use for something like that. So that might be a fun way to learn some of the internals of Equus, but Jeff will probably suit you up.
Yeah. Well, I think we just abbreviate it BFBI. Big fat bar.
There you go.
Thanks, Reg. Let's see. I like this question. We're getting a lot of questions, but I do think this one's a good one. Which books do you recommend for prospective traders? Thanks, Theodore, for that one.
I really like the Edwards and McGee book. It's
I think it's on your desk.
The two of them are over there. I have two books to recommend for you. I just pulled them out the other day. Zoe will run them over to you. So this is sort of the Bible of technical analysis. This is Edwards and McGee technical analysis of stock trends. And this is the 5th edition, that big yellow 5 on there. It's the last edition that Edwards and McGee published. After that, there was a big gap in some years, and then some other people took over. So this is the one I really like. And then if you like market history and you want to reach back and see what people have been thinking about, this New Methods of Profit in the Stock Market by Garfield Drew is really a terrific book as well. And then, for the systematic traders, the Martin Zweig books are pretty great. And there's so many great books.
I think you have a reading list on BollingerBands.com. It's a pretty long one, so you can kind of pick out what interests you, but there's a good subset to choose from.
Yeah, I'm an inveterate collector, so I actually have the original. I have the original leather-bound Wyckoff course from 1931.
Cool. That's awesome. I think
If you can find this, it was also published in a regular edition. That's a fantastic resource too. Richard D. Wyckoff.
Theodore says, "Holy mackerel! Every issue ever printed." I think he's just jealous.
Oh yeah.
We're gonna leave the stack over there. If I pick up this stack, it's all gonna go terribly wrong.
Yeah. I
John,
actually did too, because in the first couple of
You
years,
have to look at it.
in the first 3 years, they published a bound version of them. So I have my first 3 years of the bound versions, but after that, I have every issue that was ever published.
Nice. That's all the questions. I want to say thank you. I'm going to talk a little bit. We did have a question about how to get Metastock. That's my job. I'll cover that in a second. But I want to say thank you, both of you, John and Zoe, for coming in here, spending some time with us. I enjoyed it. Thanks for being here.
Thank you.
Oh,
All right.
Our pleasure.
I'm going to talk a little bit about how to get the Bollinger Band Toolkit, all that kind of stuff as well. A big thank you again, John and Zoe. All right. So let me go ahead and share my screen so you can see where. I do like the new interface, but they make it so you can put anything anywhere. And so sometimes finding things is even more challenging for me. Let's try this. All right. And now you should see that. All right. In terms of getting Metastock, John says, wow. John says, thank you. We love you. I think you're talking about John. Martin Zweig on Wall Street said he uses hundreds of indicators. All right, let's talk a little bit about how to get the Bollinger Band Toolkit, and I'll answer your question about how to get Metastock and what the cost is. So thank you for that question. I think Theodore. Okay, Bollinger Band Toolkit 2 is basically a collection of all the indicators that John talks about in his book Bollinger on Bollinger Bands. You can kind of see a complete list here. For the purpose of not reading them all out loud. I won't read them all out loud, but everything that's kind of discussed in that book, it's a really good companion to that book because he goes through all the indicators. He talks about them. He talks about how to implement them, all that kind of stuff. Scanning, we talked a good deal about. I love the ability to scan in Metastock. They showed some stocks that are very, very fresh that they just found on the scans. And these are the scans that are included. So you get squeezes, the bulges. You can find stocks that are back in from above, or back in from below. They did create. John sat down, and when we released the Bollinger Band Toolkit 2, he created 4 different methods that are very, very specific to the Bollinger Band Toolkit 2 that include scans, and they're more designed to be custom methods that you can get. They have commentaries in them. You can test them, all of that kind of stuff as well. So here's a list of the system tests. I'm not going to kind of go through this. It's a huge methodology, a breakdown on the systems and what they show. This is repetitive to what Zoe and John were talking about. They went through all 4 of them. But in total, there's about 4 experts, 10 explorations, 9 system tests, 47 custom indicators. This is an add-on that you can get for Metastock that's $49 per month. That's what you pay for it. If you do it as part of the conference that we're doing, if you buy a month, just like with Metastock, we'll give you the second and third month for free. So it's fairly inexpensive. As with all of the subscriptions that we do, there's no commitment to keep it. If you decide you don't like it, if it's not helpful, you don't have to keep it. You just cancel your subscription, and that's that. So you can do this. You can give us a call, 800-882-3040. You can call metastock.com/saleschat if you have questions, metastock.com/conf-promo. The question that you had, Theodore, about Metastock and about how to get the Metastock add-on or the Metastock product, well, I have that. It's actually right here. We'll just jump to it real quick. Metastock has been rated 32 years in a row the best software in its price category. The two price categories, we have the Metastock Delayed, which will give you a 20-minute delay. You can scan during the day. It's $75. You get a 3-for-1 on that too. So like it's $25 a month to try it out till February 11th. Had to think about it. In addition to that, we could add Bollinger to that. We do have the real-time version that's full real-time. It includes the news package that we kind of talked a little bit about earlier. It's $210. So you can do that. You can get it with the Bollinger Band Toolkit. You can do that by giving us a call, 800-882-3040. You can go to metastock.com/conf-promo or metastock.com/saleschat. So there you go. Let me kind of just scroll up a little bit here. There's another question. How is it for retailer traders to actually use all of these indicators? I'd have to say, as an admission, I don't think you need to use a lot of indicators. Somebody had a comment earlier about the 100 they uses 100 indicators. I myself use a few indicators. The thing I like about Metastock is you do have access to all of the different indicators that are available for you. And I'm sure you're going to find something that works well for you. I'm going to give away a book real quick. The person that I normally have, does it require Metastock subs option to have the Bollinger Band Toolkit? Yes, it's built for Metastock. So it uses Metastock to do all the scanning, the expert advisor, that kind of stuff. Dale, great question. Thank you for asking it. Thanks for the question. Okay. Is Greg back online? Greg, are you back? No, he's not. He's having some internet issues today. So I'm going to give away another prize, though. And what I'm going to do, audience participation is huge. And so I'm going to randomly pick somebody that's said something today, like a question, could have been a compliment. Hopefully it's a compliment or a comment. But I'm going to give away this book real quick. Steve Bigelow's High Profit Candlestick Systems. Steve was a good friend of mine, just passed a few years ago, but a great business partner of Metastock. We sure loved him. And so I'm going to give away another one of his books. What I'm going to do is I'm just going to kind of scroll through these list of questions. There's tons of them, tons and tons of questions. I'm going to make sure I'm showing all of them. And I'm just going to I'll scroll a little bit. I'll stop right here. And Stephen S., I'm just going to go ahead and put this out here, asked the difference between the 747 price and the 997 price earlier. Well, I just won a prize for that. Okay, so Steve, we've got your information. I'm gonna go ahead and put you on the list. I'll get your address. I'll make sure I have your address so we can send this out to you. Very cool. Our next guest is a twofer, another twofer. We've got Jake Bernstein. Jake Bernstein is well, they're all friends of mine, but I've known Jake for a number of years. He's written a prolific amount of books on trading the markets. I think his most popular is How to Day Trade Futures. Could have that title wrong, but Jake is somebody that looks at a lot of technicals. He's very, very good at seasonals, and over the years, I've developed a lot of respect for Jake. So Jake's going to speak. He's going to come on and he's going to talk with Brian Latta, which is this guy over here. Brian actually took some of his momentum systems based around the moving averages and made a very elegant indicator that helps you determine long-term and short-term strength whether range is expanding or contracting, whether you're looking at overbought, oversold. I call it the Swiss Army knife of indicators. They're going to talk quite a bit about it today. Let's go ahead and get you started, Jake and Brian. How are you doing?
Doing good. How about you?
I'm doing good. We've got we're having a great session today.
I noticed that, and I love the new interface. It's great.
Yeah, they did a pretty good job with it. There's been just a few learning curves, though. Brian, are you with us as well? I can see you're here, but I can't hear you quite yet.
Audio check. Testing.
There he
Perfect.
goes.
All right, now I can hear you.
Yeah, thank you so much for introducing us, Jeff. It's always a pleasure to do these events for Metastock. Because number one, you got a very... Can you hear me?
Yeah. I said no problem. I love having you.
You got a very educated audience, very serious traders, which really helps me. I want to thank Brian for basically filling in for me and doing most of the show since I'm losing my voice. I just wanted to say one thing about indicators. You made a comment before you introduced us. There are so many indicators, literally hundreds of them. The good news about the fact that there is so many indicators is that there are so many and you can find the one that you want. But remember, 95% of all indicators are derived from price, which is why they all look like price. What you really want to do is use an indicator that's not directly related to price. Something that's independent of price will give you much better results. So for example, you can use the Commitment of Traders report, which is a function of activity, not a function of price. You can use the advanced decline line. That will help. But when you're using simple moving averages and crossovers, there's problems because they're usually late. But I'll let Brian deal with that. He's much better eloquent at that than I am. I've known Brian for a long time. He's a great coach, a great strategy developer, great person to have on your side. And he explains things so clearly, and he's got a fantastic voice. So here's Brian.
All right, Brian.
Thanks.
Let's go ahead and get your screen share going. First of all. And,
no problem?
No problem at all. What I would like you to do is, I can see it now.
There you go. That's my desktop. So as long as everybody can see my desktop, that's actually a picture of Carmel in the ocean from Point Lobos, which is just to the south. So let's get into the presenter mode. Everything should be good now.
Everything looks great. I'm going to get out of the way. I'm here if you need me.
And Jake, please jump in at any time. I know you're a little voice challenged after doing your annual forecast this weekend, but just as a reminder for everyone here that may have missed Jake's annual forecast, it is a must-see. It is well worth the price. Jake's ability not only to predict what's the future is going to be looking like with different stocks and futures pricing, he shows how to do it. So for that, if you haven't seen Jake's annual forecast, definitely look for that. We'll put up some contact information at the end of this presentation. So
thank you, Brian. That was very nice of you.
Actually, it's one of the things I look forward to every year, hearing your predictions on that, and always great to see how many of them are right and how many are wrong, since I haven't really seen one wrong in a long time.
Here's the good news is that most of them that I talked about yesterday are already starting to happen today.
They are, and that's actually very exciting stuff. I do also, like I said, appreciate the fact that you show how to do it. You don't just make predictions, but you show everybody how you're making the predictions so they can learn to do it for themselves. So, and that's also really what I did in taking some of your work in the past on the moving average channel, was basically take a look at how fast price is moving up or down through that and develop the expansion contraction indicator to show, as it says here, strength when the markets are expanding up or down strongly. We'll see that in the indicator when the markets are contracting, or it's also coinciding with weakness. We'll see that on there. It'll show trend reversals, and it's doing it not only long-term but short-term on here. So we'll have short-term moves, good for several days, may last several weeks, could go a few months, and also long-term trends, usually good for several weeks, could go for months, and from time to time have gone up to 2 years. So ideally, when we take a look at a chart, it's a blink, and we can very easily see if we're up or down, strong or weak. if we're overbought or oversold, which personally I don't like that label, overbought or oversold. I have a tendency to call it, say, limited upside when we are in some type of mathematical value that's overbought and just not a price. And the same thing with oversold. Ideally, we're calculating that mathematically and not just because it's at a certain, say, range limiting indicator like stochastic, which is a 0 to 100 scale, has a problem because it might be overbought while price continues higher for days or weeks or months. And so overbought is a bit of a mislabel on there, but this indicator will show minor support, major support, and resistance levels. And about the best part of this is I designed it so that it's taking information on each day and is therefore non-lagging or concurrent with pricing, as we would prefer to not use non-lagging indicators. Want to focus on non-lagging indicators, and in that particular case, use something like Williams accumulation distribution, expansion, contraction, and pricing levels on that. So we will go a little bit into the metastock charts and the fact that there is an expert advisor that's got the setup, conditions and rules and examples on that. So let's just get right over into the basic disclaimer. Again, past performance is not indicative of future returns. I would not trade a systematic process without knowing how it performed in the past. Preferably, we're trading performance proven strategies, and that's what drove me to Jake back in 2014 to become a client of his and buy some of his trading programs and the software and the coding and the programming on all that, and learn how to do it myself, because that's just a type of person I am. So there's a lot of Sure, go ahead, Jake.
Thank you so much. The most important thing about the disclaimer is not the fact that it's a disclaimer. What the disclaimer really does is basically says, once we teach you what to do, it's up to you. And that's the weakest part of the chain, because once we leave it up to the individual, they will fail to understand it, they'll misquote it, they'll misuse it, they'll miscalculate, they won't do what they're supposed to do. So we can't guarantee what's going to happen unless you do exactly what we say to do, in which case we stand behind the track record. But if it comes to doing it on your own, people just don't want to do that. I'm not sure why, but that's the human nature. Let me say one more thing. I'm a real trader. I trade practically every day. Not specifically day trade, because I don't really think day trading is for most people. But we know what we're talking about. We've been doing it for a long time. I've been trading for 55 years. It's quite a bit of time. Probably as old as John Bollinger. Maybe he's got me beat, but I'm probably the oldest guy in the room. I'll turn it back now to Brian.
Thanks for that, Jake. Well, I do appreciate the fact that you've been around a long time, but more so that you share everything. And I do listen each time, even with the session this last weekend, and still learn new things from time to time. So for everybody else, don't stop learning. It should be a lifetime process of working on your systematic process in your trading plan. Rules to get in, rules to get out of loss, rules taking profit. Jake, in his 50 plus years of that, not only has rules-based trading programs, but also publishes the online capital market reports, and as I said, has done the annual program, and that's actually been great. So you can find out more about Jake at Trade Futures. If you're looking to pick up anything, Seasonal Trader or the program you just did this weekend, that's all at Trade-Futures on that. I myself have been in this a little bit later. I didn't really start till closer to 2000. And I'm drawing on some experience in the past when I worked in Silicon Valley back in the late 1980s. I worked in an electronics company in reliability assurance as a data analyst, and we were implementing a statistical process control. So that is a little bit droll and boring, but what it says is everything is a process. If you optimize the process long term, again, another process I learned from Jake on his setup, trigger, follow through, long term back testing, optimizing of systems on that to help develop multiple audited trading systems, third party verified on all that, and I wrote about it on the book on trading. All that is available on expansion contraction, including the coding for expansion contraction and multiple platforms, all for free on that one. As Jake says, he and I basically work on trading and coaching individuals, and on that, we just want to get right into what expansion contraction is really all about. I'm going to show several pictures here in a moment, but for right now, as I said, it's not lagging. All indicators, or I'd say most indicators, are lagging because they need many bars to plot one bar, and expansion contraction measures price differences from Jake's moving average channel on each bar, and therefore is non-lagging. It's also different from most indicators because I've added a second filter on there, which is a trend filter, and that gives us the opportunity to not only see short-term swings, which are defined by this red and green line combination above and below the median or zero. Short-term swings, again, could go for several days on a daily chart, may last for weeks, and could go for months. The duration on the trends, long-term back-tested, tend to be 24 to 32 days on average. And that's, again, back when we talk about long-term trends, ideally would go for weeks to months, and may last longer. But on all of this, you can see short-term swings are identified, again, red above green on the lines. It's a lot like the directional movement index in the way it looks, but has nothing to do with it. We'd be bearish when we see short-term red above short-term green, bearish short-term. And the larger area in the background, the cloud or the cone, is the long-term trend. And just simple as when it's red, we're in a long-term downtrend. And so therefore, if we're short-term bearish, long-term bearish, we'd be in the strongest part of a move down in that particular instance. Also, where the expanding cone or cloud in the background peaks would be a major resistance. And of course, there'll be other areas where it peaks and drops. These would be minor supports and resistances. Being non-lagging, typically the extreme moves are at a major support or resistance, and the minor are short-term minor supports or resistances. And we can just see that with the cloud, and we're going to see that cone and cloud here on the charts here in a second. But for the overbought and oversold conditions, what I did was take long-term moving standard deviation calculations. Those are shown with the either large dashed or dash dot or small dash lines way over there. And of course, just describing the components here, we're generally interested in what's trading above the median. So on that one, we'll also see then when we're possibly overbought or oversold from moving standard deviation type calculation. Typically above 2 standard deviations may be considered to have limited upside in this case on the green cloud, and at or near a major resistance in this case, we'd start to see the market back off and drop. So did all the definitions on all there and all the coding. That's all included in the different versions of the indicators, all on, again, expansioncontraction.com, and the different versions are free. There are some paid for versions on there, but again, the basics are free. I also had it coded in there to show where the dark green bars on pricing are going to show the strongest part of a move up, because sometimes looking at an indicator and trying to determine the look of the indicator and the definitions have it might make that a little bit more complicated. So again, we'll just go right into an example chart here on a weekly QQQ chart. We can see what I'm mentioning here on the bars are color coded to a darker green, to where we're short-term, long-term, bullish and trending. And again, since this is a weekly chart, we can see some long-term moves. This just happens to be the Qs on a weekly setup back in February 2023 that lasted all the way into the first quarter of 2025. So when I was mentioning that sometimes we'll get long-term trends, ideally it's obvious, we're either green or some lighter green shaded bars on here to show that the what the indicator at the bottom is telling us is to be bullish and to stay in and buy the dips. You will see a little bit later in the trend as we moved into the third quarter of 2023, some additional smaller Bs. Those would be considered to be continuation setups for an uptrend, and price goes up, and then we make a pullback. We've got not only Jake's buy on the dip, but also on this process, we have buy on the dip or continuation type trades. And they're just labeled in this case with smaller case Bs that will show some examples on there, but that would allow us to get into a trend trade. Notice it says the trend's bullish, the trend's strong. Short term, we're in a strong upswing on that one. And although the range had been contracting a little bit and the range was weak, that typically happens in a downtrend transition to an uptrend. We end up going into a contracting weak downtrend and can break out, and in this case, move up into a longer term strong uptrend. So on the flip side, we'll see S's above the bars that are identifying the sell trigger on that one. And that again is with the short-term red swing line of expansion contraction above the median, and the red cloud or cone in the background showing. It's going to plot all the bars and make them red as long as we're in a bear swing to a bear trend, and we'll see a transition period, and then that'll flip right back. So sometimes we've got longer term trends, sometimes we have shorter term trends. On the basic net results over time, yes, there might be 1 or 2 day sudden reversals of pricing, but historically, the setups have been showing significantly longer term trends. And if you're wondering about whether it works on any time frame, well, we're on a Q's 1 minute chart here. On the 1 minute chart, you can see a buy setup right after the open of the day that would have traded slightly higher. I've just marked this, obviously, if the price had gone down lower in net and we didn't hit any kind of profit targets here. I did just show that there might be a loss after getting a breakout strong up. Price traded briefly higher and then made a stronger swing to the downside, which coincided with the sell trigger to go short. And although this is just a 1 minute chart on here, that trade originated pretty close to, we'll call it 10 o'clock just for easier math on there, that lasted till after 11 a.m. So that was a hour-long 1 minute chart type setup on that. So are there times where there's some instability and choppy movements up and down? Yes, but we'll also see some clear trending patterns on that. And that actually goes on almost any time frame. I have tested it down to tick charts on that, and still very stable on that to give us longer term trends or swings and shorter term losses when we are wrong. I did pull up an example here for an Amazon daily chart, again with the arrow pointing over to the buy trigger. The triangle on top was just a part of the expert advisor there that would have shown the entry pricing, the first target, and the stop pricing, and the price extremes on there for the rules. If you want the actual rules, all of the tile slides were presented last in the June presentation that both Jake and I did. And so therefore, if you're looking for the tiles and the PowerPoint presentation that had the specific rules that generate the trades we're going to be talking about, they're in the June presentation and can be found on the YouTube channel for Metastock. And you definitely want to make that part of your favorites and review that from time to time. So these were the example charts here. And with that on the quick example charts, I just wanted to say in here, the way I look at it is that we'll always be right now, and we'll always know when the conditions are weakening or have reversed because it's just clearly defined. And Jake's rules-based trading methods are really the process that I learned and how to code systems and back test them with this process. And as I said, expansion contractions back tested well with the win more often and make more than you lose on average. And again, testing in top weighted stocks. And ideally, we're trading strong trending sectors over time if you needed to rotate into strength, ideally we've got strong trend definitions, which you will have either with Jake's coding or expansion contraction. And that means typically, even if you've never traded before, this ought to help you be more consistent and have better entries and exits merely because it's all coded. So I am popping up a weekly Palantir chart. Notice that the expert advisor shows that there's a May 12th strong buy in an uptrend, strong upswing, expanding, and the triangle marking that. Again, this is back on 5/12 of 2023 on this weekly chart. And of course, you can see that Palantir has been green the whole time. We've seen no red, even though there's not enough data to plot expansion and contraction. The coding still plots on the bars. So I will have to say about the only thing negative about expansion and contraction is it does need 500 periods of data to plot the standard deviation formulas for overbought and oversold. But in lieu of not being able to plot due to a lack of data, fortunately, we still get what's most important, the buy and sell setups, plenty of BS on the charts, B's for buys, S's for sells. And on that one, we can pattern out here sometimes that these are long-term trends. And since I mentioned up to a couple of years, I figured might want to post an example of that. I have switched to a daily SLV or a silver chart. Again, starting far left on this daily chart, there is a buy setup. It's programmed in on the chart. You'll see the B, the expert advisor. In addition, here we'll show you all the additional factors. There is a scroll bar here for you to be able to scroll down and see additional information on that. Just in the interest of showing plenty of different example charts here, I wanted to show long-term, short-term, and to see how these all work. So silver, I'd still show from the May of 2025 still being bullish. There is a lone sell setup on here. The rules that we've shared on this one with a sell setup like that are considered a weak sell setup without Larry Williams' accumulation distribution confirming a downtrend. One of Jake's trend filters that he uses and that I also use is the Williams accumulation distribution uptrend downtrend filter to help identify when we might have a false positive on expansion contraction going short term, long term bearish for just a bar or two. And I know Jake typically waits for 2 bars on an entry. And I'm still interested, as I said, with Williams accumulation confirming within 2 days of a sell setup. If not, and aggressively took the trade 2 days later. In this case, either a no trade if you're conservative, or if you did take the trade 2 days later, it's a small loss. 3 days later is another buy trigger and able to take advantage of the trend that occurred for the next 3 months. So different markets, different results, but still long-term, the potential for some bigger moves. Plotted a weekly Archers-Daniels Midland chart. I switched this one last minute after hearing Jake this weekend, and he'll know why, but we have on the weekly chart, at least back in the summertime, plotted out a buy here, but what I do want to at least show is even with the current selling on a weekly chart, long-term Archers-Daniels Midland is in an uptrend, and we'd want to be buying at or near support in an uptrend. And this is, as Jake has mentioned on his setups, once we have a buy trigger, we're buy only until there is a sell trigger on those instances. So even though Archers-Daniels Midland was making a pullback this weekend on the weekly chart and has traded down in the range, Will AD still positive, above average, that's bullish. Long-term expansion contractions, cone or cloud in the background, that's uptrending. Short term, we did go bearish with this last week's selling, but due to some long-term predictions, Archers-Daniels Midland is in a weekly buy type setup on that one, and take advantage of some long-term predictions on that one. So hopefully, Jake, you appreciate me popping that one in there. Also popped up a strong sell setup on a 3-minute QQQ chart. So again, I'm trying to show many different markets, many different time frames, similar stability. The triangle is just sitting over the S here, which shows at 3:30 in the afternoon. We popped up here on this 3-minute chart with a sell setup, and it was strong in a downtrend on that. As you can see, going into the end of the day, it sold off. Into the next day, it sold off on that one prior to bottoming out around noon, and then promptly short-term bullish for about 10 bars or so, short-term bearish. So in here, just a little bit of false positive on here, but if you've got a bigger winner and say a small loss and a small loss and then a bigger winner, I'm okay taking small losses. If I'm buying at support and the market fizzles out going higher and trades lower, we're just going to have to take those small losses on there. And unfortunately, it's where a lot of people don't want to experience losing at all. The general characteristics of this have been in the 60 to 65% win rate, which is not perfect, but I would still prefer to be trading in the 60 to 65% win rate with a better than 1-to-1 profit to loss ratio, because that is a positive outcome over time, and we want to make sure we're following that. Pulled up Bitcoin on the weekly chart. It's also made somewhat of a pullback, and so showing the error factor here again, because Bitcoin doesn't have a lot of data on here historically, and is even not plotting Williams accumulation completely. But Bitcoin did just make a dip here on the weekly chart. And again, it's just a pattern of price that would suggest that Bitcoin is either at or near support, and we might bounce and trade higher, or that it is at or near a support and we could break out and trade lower. Right now on a sell setup with Williams accumulation distribution, it does suggest that Bitcoin might have a little bit further downside. That ideally here, and one of the patterns with expansion contraction is that we should know within a week or two whether or not this is a corrective sell-off and limited downside, and possibly to bounce back to the upside. But that is what it is right now. There's a sell trigger on here on Bitcoin on the weekly chart, and that is suggesting, at least currently, that we're in a bearish pattern, and that's what we'd expect to see for the next few weeks on that pattern. So I do like to show numbers, and I did want to get in. I'm going to pop up my Trade Navigator charts here real quick. As the previous sessions, I've been showing tables with the results, but since we're towards the end of the year here, wanted to run up with the sell setups on Trade Navigator. I'll run these examples where we can see the buy setup, what the result would have been, or in this case, a sell setup, and what the result would have been. Put these results up here on the chart, win or lose, based on the setups that were posted again in the June Metastock presentation. Those rules, as I said, it's whatever happens next on the setups. And I just wanted to say, well, here we can see them on the chart. Do we get buy setups where price doesn't trade significantly higher and we get stopped out? Yes, we do. Apple in here, which had 5 losses in here and 10 wins, was still right in the 67% win type rate. And although this year's performance isn't as good as last year, on that one, I did want to just like literally go in, and if somebody says, well, how do you know what happened on that? Since I don't personally trade the stocks, I am stock options and currencies, while Jake is futures and stocks on there. So trying to show the stock results, and a little bit while later, I will show some option results on some current open positions that you will see in here where there are some red and green lines. Red lines identify the stop out and the amount on that one, and 1 target, 2 target. Apple happens to be floating several trades right now from the time frame that it got in back on the 6th of August. The first trade got higher, made some profit, pulled back, which is a buy the dip type process coded in here. And that one also went up and hit 2 profits, made a new high, Price pulled back down to the range, and another coded buy set up with the B. Take the trade, has hit a couple of targets and priced up to a new high. This is still buy the dip on each of the corrective sell-offs. This Apple is strong up and floating gain, which I'll show on a table here shortly. So let's not labor too long on the charts because I know there's a lot of information and I don't want to get into the too much information. But again, the buy setups will show whether there were a gain or a loss. There was a sell trigger here that just literally went flat and popped back up into the range. But as you can see on here, we've got more wins, fewer losses, and a positive outcome here for the stocks on this. And just again, wanted to show the actual trades being walked forward as this got back tested and now basically being walked forward on here in this small basket that's been the same basket I've been recommending, except for once last August. We did rotate out of Microsoft and into Palantir due to Microsoft not trending strongly anymore. We want to rotate into strong trending stocks, and Palantir was. So here's NVIDIA for the year. Also, again, just not doing as well as last year, but still acceptable on here. This is a great example of getting some consecutive losers in a row. If you have a 65% win rate, it is statistically normal for you to have once out of every 100 trades, 5 or 6, maybe even 7 losses in a row. The most I've seen is 6 losses in a row, and they're generally smaller. And this is a great example where we got a small loss at a half risk and then a stop out and a stop out and a stop out. So yes, it can happen. It's still a part of a positive outcome, as I will show the table with the wins and losses and the net gains on here coming up. But since, how do you know if you're going to make money following a system? Well, you should test it out because you got to prove it to yourself on that. And if you don't prove it to yourself, I'm going to say it's more likely that you don't follow the rules when you should. So Palantir, as I said, this one has been doing really well. This all has just limited out as price pulled back on here, but we've got mostly wins and 1 loss on here at the beginning of the year. So I'll have to admit the beginning of the year was a slight drawdown. Palantir popped up quite nice, but both Palantir and NVIDIA providing a substantial amount of gains over the last year based on the B's or S's and the buy or sell setups and getting up and taking the next trigger, getting up and taking the next trigger, and getting up and taking the next trigger. I'm a big proponent of take the trades and multiple setups once you have no risks. If you could take 1 or 2 or 3 or 4 positions in a single move up, that does multiply the gain. The only factor on taking a new trade is that the first position should be at break even. You don't want to have any risk on when you're adding a new position. This is really all about risk management and having a systematic process of when to get in and where to get out at a gain or a loss. That has been proven. On the Qs, year-to-date results, again, not quite as good as last year. We are moving into the strongest part of the end of year, the Christmas rally or so, seasonality. I'll suggest that we should see some further upside on that one. As you can see, initially for the year, the Q started out flat, made a pretty strong sell-off into March and down into April. And then since the 25th of April, we've been plotting multiple trades in here and multiple gains. And I am going to show the tables of the results, but I also wanted to show the charts on here so that you can see that they're clear setups on the charts. The setups are similar to the ones that are showing on Metastock, although Metastock's got the expert advisor on that, and they do, as we're running through what has the past done, continue to walk it forward. So again, more winners. There's definitely a small loss on a swing sell that 2 days later, a few days later, filled a buy, and basically the SPY has got multiple positions in here, all trading, and it's floating a gain on there. I'm going to show those numbers and again on a table in a second, but I wanted to show the charts from where the table is derived, because if you look at the table and just say, well, okay, That's all good and fine, but how did it actually play out through the year? Wanted to show the charts on the basket. So Tesla's year end also started out the year with a pretty decent gain on the sell-off. Did have a few losses, a couple of one stop out, two stop outs, and three other losses. So 5 losses here out of the total trades. Tesla is not doing as well as it did last year, but still, I'll have to say my objectives on the trading plan were to make 100% a year, limit my drawdowns to less than 20% on 2% risk based on a $100,000 account, and no more than 6 trades at any one time with risk on that. I'm going through some of the parameters that we would go through in coaching. It's all about the number of trades you take at risk at any one time in any one market because of sudden reversals like a black swan event, COVID being what I'd consider the last one. We also had the flash crash back in May 6, 2010. We also had the financial crisis. So when things change, they can change a lot. You want to know when it's changed and that it did change and how you're going to take that with the next setups. And you've got to have the coding or the programming in this case. So popping, as I said, using the multiple setups that we went through on the June session. Again, if you're looking for those actual slides, all of the rules, when to get in, where to get out of the gain or a loss are there. So results so far, again, I showed Apple was up 8.64, but currently on the stock charts, it's floating nearly a 6% gain. So no exit on that. Amazon made a huge pop and hit some profit, but right now, after dropping, limited out, break even. And NVIDIA did the same thing, so has managed to get up this year. Currently, don't have a position in from this weekend's close. Today is a different story with some buying again. Hughes is up 12% in the books, floating a 13% gain. Tesla showing 6.58, but is floating a 4.79% gain. And Palantir, as I said, was doing one of the better results and currently went out this weekend on all of the trades, which I'll show some option statistics here in a second. Also, we're still in a drawdown on the Aussie dollar. This one has just not really been trending. It is currently showing a small gain as of Friday's close, but it didn't want to go through and show for 2025 what the current results are, and floating some gains on, some significant gains on 4 of those positions. Also, last time, again, this slide I didn't change because this was the last 3 years closed as of the last session. We were doing September to September close, and we did this in October. So we're just one more month into the new year. But I did want to show the win-to-loss ratios over the last 3 years again are also in positive. As I said, Microsoft was in the basket until it went weak trending in August of 2024. Microsoft is available to trade again because it is strong trending again. NVIDIA showing the best gains over the 3 years on that one. And you can see that the win-to-loss ratios and the profit-to-loss ratios are in line over the last 3 years with the backtesting results on that. Also showing the currencies, how well they're doing over time on that. And the Japanese yen has had some more small losers on that. So really weren't up that much this year. Of course, it was running in about the 85% win rate before and has had some drawdown on that. But we have to be okay that sometimes the markets continue to trend, sometimes they don't. And when they don't continue to trend and we consolidate, we might see a period of drawdown. So while I've got maybe 5 or 10 minutes here at the most, I did want to at least pop through since I mentioned I like stock options. And in the book on trading, I also outlined that all of this has been back tested. So when I'm suggesting a buy trigger on 8.6 on Apple that was originally taken, we can take a look at the back tester results. So rather than say this was the exact trade, we can at least prove it with a 2-week expiration, shorter dated debit spreads traded and rolled into as long as you don't have an exit, showed to be the best option strategy for pay less, make more long run over time on that one, and all those results, et cetera, all back tested and shown. Again, it's a risk of 309. I showed it in the little table below on a $100,000 account. Risk of 309 per contract would have been 6 contracts traded. And since it was a gain of $2,705 total return on that, on the 6 contracts, that would have been a gain of $16,230 on that one, or an 875% gain. There's the 875% return. So just wanted to see clear setup on the charts. What is this shown that it would have done had you gotten in and rolled over every 2 weeks? Still 5 wins, 2 losses, 71% win rate, all acceptable numbers. I did say there were several trades open, and we'll also have this trade open on Apple. I didn't move the start date on here, but that Apple secondary trade was on 9/10, and all of these individuals can go back and confirm on that one. But as you can see in here, $330 risk per contract, like cheaper options, because everybody has a tendency to be able to trade a few $100s worth of risk over time. A lower win rate, really, because of the instability of pricing through that during that period of time, but still a 316% gain. So again, I'm posting out a 316% gain on that one. On options, anything over a 300% gain, I do consider a bigger winner. And then on the next trade on here, we're just showing that it's up only 170% on the same thing, 451 risk, $766 risk per contract, trading $2,000 risk, trading more than 4 contracts, and that in itself was just 170% gain. You see it here and in the math on the bottom. And since I just wanted to total those 3 up, as you can see on here, trading no more than, well, I'm going to say $2,000 plus or minus $200, merely because the average loss is in that $1,800 range. And so I'm okay if it's a little bit over $2,000 risk per contract. But here's the net on that one, was a 27-to-1 on the 3 trades, taking a trigger, adding on when we buy the dips, and holding on to the positions and rolling them over till we get an exit. And so far, there is no exit on those. QQQs, that also has some trades which are labeled here 425 on the expert advisors, got the small triangle and the B set up on this one. And as I mentioned before, with this loan sell set up in here not being confirmed by Williams accumulation, this still has multiple trades. So back on there again, I'm labeling it. You can see the risk on the platform was 727. It's a 400% gain floating on that. It's only a 60% win rate on rolling these. But again, that's what the back testing showed. We should be in the 50 to 60% win rate, and 1 2/3 to 2-to-1 profit to loss ratio on here. More wins, fewer losses, bigger net gains, smaller net loss. We want to see all those. 434% gain on this floating position that's still open. And as I mentioned, there's a second trade in here on the Qs from June 20th. That's also $516 risk, up 188% on that one. So I did just label that out here on the chart so we can see maximum risk, risk per contract, net gain. And again, I'm running these results from the back tester, which in essence is at the close of every day. So it in its perfection is not seeing exactly what the actual trade results, but this is also exactly what I can prove on this. As it's not so much this is what I've done, this is what I can prove. And I'd rather trade what I can prove than just say, I've done this, so you can too. At least from a coaching standpoint, you want to have 100% proof and objectivity of all the rules and everything you did. So again, that's the third trade out here that's showing when it got in, how much it's up, how much you risked, and I totaled this all out. This is running up 200% up. And near the end here, this is just a small gain on here. It did require a larger amount of risk, and it's only up just a little bit, but these trades are all floating. and still running. And I just wanted to total this one up based on 2% risk, the number of contracts you could trade. The net gain on here, 390%, were all off the previous slides, and at least on the cues from the original setup. Back here on 425, taking the original trade and taking some add-on positions, we can multiply the net gain in a trend significantly using some low-cost options. And just to kind of round that out, Palantir did pop off and closed out, and I just wanted to run this one. Palantir started on April 9th and had multiple trades. And here's some losses. The last two trades did lose on here. So you can see 1.88 and the 2.21 loss on that one. So we can lose. The losses are going to be small because we're capping them right about 2%. And the gains in some instances can be significant. So from the April trades that just popped out with Palantir, that was also a pretty decent gain on that one. So just kind of wrapping it back up here, looking at the end of time. So we've got some time for some questions and such. The expert advisor on this, as well as the rules we've got, we do have clearly defined setups and triggers, which are Jake's setup, triggers, and follow through. And of course, I just relabeled that. We got A, B, C, D rules of when to get in, A, B, C, D rules to when to get out at a loss, and A, B, C, D rules to take a profit. And if we include some rules of when to add scaling in or scaling out of positions, that would be ideal on that one too, along with those clear risk parameters, small fixed risk, far preferred taking fixed risk type trades. But if we've got all of those type processes that have been back tested, and as you can see, we're just walking them forward now for 3+ years. On that one, we can see that the expert advisor benefits will show us on the charts exactly what we need to do on that one. And so if you're checking your charts once a day, you'll know whether or not there's a setup to get in or out, whether you do something or not. Are any of your rules true to take a loss? The reason that there are more than one, say with options, we might have a time-based rule to get out, or we might have a reversal, or we might have a price extreme to take profit at. So you just want to be clear in advance that your rules are like literally getting out of the loss. They're risk limiting, ideally fixed on that one, and options will allow you, when you're a buyer, to have fixed risk losses on that one. That's definitely one of the best parts of the excessively smaller amount of capital required to hold the position. Is the benefit there, and fixed risk. If we have the rules of when to take profit, ideally they're profit maximizing. And again, just from over time for me, I've found that if I've got bigger stops, I'm stopped out less often. And if you think of this, ideally, if your first profit target is hit 60% of the time and your stop loss is only hit 40% of the time, you've got a 60% win rate or better. And if you think about why are those setup conditions doing so well, just took that into consideration. Wherever you're getting in, wherever you're getting out of the loss, you're more likely to hit your first profit target than you are to hit your stop loss. And that we have other rules in there to stay in and maximize, even add to a winning position, ideally, instead of just making a small gain on a single position over several months. You can, with the same risk, add to that winning trade and make it significantly bigger. So I'm just popping in here. Sure, go ahead.
You know, you can do things the easy way, you can do things the hard way. When you get to be my age, you want to save as much time as possible, do things the easiest way possible, and that's by following the rules. Everything is clear. You always know what to do. You never have to interpret anything. As soon as you have to start thinking about something, interpreting something, that's the first indication you're going to make a mistake. So I like it easy in any time frame. If you don't believe me, go ahead. Take it in the next 5 trades. Take the challenge. See what it does for you. I think you'll be impressed. I'll turn it back to you, Brian, and you're done great, by the way. Thank you so much.
Thanks for that, Jake. And again, on the trade challenge, knowing my past challenges, I'm going to say take the one trade challenge. If you can follow the rules exactly for one trade, wash, rinse, repeat, because it is harder than it sounds. And I'm going to also say there are times when I've not followed the rules exactly, and a couple of times regretted it, and a couple of times it was okay. But when you're actually trading real money, real trades, the idea is to keep most of a big winner. And some of the rules I've got from Jake, which really helped, was keep 75% of a big winner, and the rules around that to do that. So if you've ever been in a big gain momentarily and tomorrow it's gone, and you look back and go, shoot, I should have taken some profit. Jake and I both got some rules for that that I learned from Jake, just to make sure that when we are trading in liquid markets, there are times when all heck breaks loose and things get crazy. And I do like the fact that we've got the risk limiting, profit maximizing rules, as I said, all back tested and proven to be consistent on the positive results in strong trending markets, in strong trending sectors, I should say, in very liquid markets. So the expert advisor on here does have some of the system tests on here that you're welcome to use on that. And Jeff, also, if you're back here in time, and I'm trying to get you back on time, if we got any last second questions, we'd be
Yeah, we
glad
do
to
have a few.
handle those too.
We do have just a couple questions. Maybe really quickly we could go through them.
Go ahead.
Can you hear me?
Yes.
Oh, okay, good.
Yep. You haven't cut us off yet.
Theodore wanted to know if will this work on precious and industrial metals?
Yes.
Okay. And he wants to know how you do you use bracket orders when you place your trades?
In some instances, yes. Now, remember, I'm an option trader, so I can just get in. I don't need to have the profit targets and the stops. The risk is the option premium. If you're trading stocks or futures and you want to place the get in now, the stop loss order, and your profit targets, yes, bracket orders are great.
All right. And then the last one was, he said he noticed a lot of Mag 7 stocks in your examples. He wanted to know if it would work with mid and small cap stocks as well.
You name it.
That art. Go ahead, Jake.
You name it. Stocks, futures, they daily, weekly, it works at all frames.
Right. You're looking for the strong trending markets. In other words, strong up or strong down. Ideally, Jake's got strong trend definitions. I've got strong definitions because I've learned from Jake that's critical too. So if you're trading in strong trending markets, you're more likely to get more winners, fewer losers, bigger average winners, smaller average losers, as that distribution of data is just shown on the charts. That's something I learned from Jake too on that. Strong uptrend, right? Bigger weekly candles up, smaller weekly candles down, and more up weeks than down weeks. And we get that distribution of data that helps us with the win more often, make more than you lose. And ideally, since it's color coded, if it's green, you're long. If it's red, you're short. And it's that simple. Okay.
Very good. I think that's the questions that we've got. I want to say, I'm going to go ahead and kind of talk a little bit about the add-on and how to get it. But before I dismiss you guys, I want to say thanks for all the work you did. Thanks for coming and spending some time with us. Much appreciated.
Thank you, Jeff.
All right.
Thanks, Jeff. Yep, we love doing these.
All right. Well, we'll see you next time. Thanks, guys. Okay, just 1 second here. Okay. All right. Very cool. All right. They do a really good job of talking about it too. Like I said, I love exactly all of the things that this does. Comes with an expert advisor, which gives you new trend recommendations, buy and sell recommendations, gives you your stop losses, your profit targets, gives you this. I liked this because I kind of came up with the idea of kind of like with all the stuff that it's giving, how can we kind of display that in a way people can kind of easily digest it? And so we kind of came up with a dashboard view. And so you see here, it'll give you your long-term readings, your short-term readings, your range, your strength, your weakness, your major and minor support and resistance, your targets, all that kind of stuff, all at the very top before it kind of goes into the details and explains everything for you. It just gives you that overview. I love kind of the way that works. So in addition to that, of course, you're going to be able to do scanning and explorations, be able to find the stocks that have the right opportunities right now. Here's the scans that you can run, new buy signals. We can look for divergence with it. You can look for breakouts. all that kind of stuff is just put in there. It does have system testing. You can test and see, and as you can see, it worked really well in system testing when you kind of go in and back test it. So all of that kind of stuff is available. We sat down, and we want to make sure when you get a product, you understand how to use it. Jake and Brian and I sat down and did a recorded training session that's available as soon as you buy it. Jake and Brian talk about how to use JBXC, and I just talk about how to use Metastock. I'm pretty good at it. And so all of that's available immediately as part of your purchase as well. And normally, $5.99 would be the purchase price for JBXC. Here at the conference, we're going to do $4.99 for you. We are going to back that. It's a one-time cost, so you buy it, you own it forever. If you don't like it, if it's not helpful, 30-day money-back guarantee. And a free trial Metastock. If you haven't tried Metastock and you want to try it out as part of the purchase, we'll get it here for you today. So you can do this at metastock.com/JBXC. You can give us a call at 800-882-3040. And you can also go to metastock.com/saleschat. So again, huge thanks to Jake and to Brian kind of spending some time with us. As we kind of move on to the next one, I want to say thank you to AAII and Stocks and Commodities Magazine and another of our sponsors, the Traders Forum. Traders Forum is a site where you can kind of go in, you can learn about technical analysis, you can chat with other traders about stocks you're interested in or the kind of coffee you like or what. There's all kinds of topics up there, but lots of lessons on technical analysis and how to trade. All that stuff is free. It's thetradersforum.com. You can go join, get a membership. Join. I'm in there all the time. I'd love to see you in there. Thetradersforum.com. All of the specials, all the offers, everything we're talking about today, you can do at metastock.com/conf-promo. If we missed a question, you have a question, you want to see a chart, something like that, give us a call. We'd love to hear from you. You can call us in the US and Canada at 800-882-3040 or metastock.com/saleschat. Again, Metastock's been rated number 1 32 years in a row by the readers of Stocks and Commodities Magazine. And we've talked all day about how scanning is helpful and that kind of stuff. Just found some stocks I wanted to buy because of scanning. In any case, yeah, find out about it there. Our next guest today is John Thomas. I remember we have had John on a number of times, and the things I really like about John is his macro view of the market. Kind of the takes that he takes are quite a bit from a different perspective than a lot of the technicians that we're kind of talking to and with. John does a really, really good job and has been doing it for a number of years, and we love to have him on. John, let's get you started. Oh, I think I have to send an unmute request. Let's go ahead and do that. All right. John, you should have gotten an ask to unmute.
All right. Can you hear me now?
Yeah, way better. That's. I thought I was going to have to pull out the dad joke for a minute.
GoToMeeting has completely
changed.
Completely changed their outlook here.
Yeah, they tried to make it look like Zoom, I think.
Yeah, you think?
Just
you to go to
maybe a little.
Setting, but it's not telling me what to do.
Okay, so down at the bottom, you'll see mic, camera, and share. Just click on share.
Yeah, I've done that.
Okay.
Let's do it again. Share. Requires permission. Go to System Preferences to grant permission.
Okay, and it doesn't give you a link right there?
No.
Okay.
Well, it does actually.
Okay.
Now what do I do?
Can you grant the permission right there?
No. Well, it's going to privacy and security.
Okay.
And GoToMeeting already has permission. It's already blue. Asking me for my password. Quit and reopen. No, let's do that later. Okay, any luck yet?
No, but I'm going to share my screen real quick. Okay. And then I'm going to ask you to reshare your screen.
Okay. Okay, well, I see you
Yeah,
on
hi.
my screen. It's same thing. It's asking me to go to system preferences. Now
Okay.
everything is blue,
Okay.
so it should work.
Yeah, let's get the. I just made you the presenter. I don't know that that should make a difference, but let's have you try it again.
Okay, system preferences. Yeah, go to meeting is all blue. Let me try that again.
Okay.
Let me try share again. Let's see. Share screen. Nope.
Okay.
Can you
No.
see it?
Give it a second. It usually takes a few seconds to come through, but it sounds like it's going to work.
There's a drop-down menu now on the share button.
Okay.
But it's not working yet, so let's see.
Yeah, you should be able to click share screen.
Yeah,
and
I've
then it
done
should
that.
ask you what screen you want to share.
I've only got one.
Okay. And then you should just be able to hit the share button.
Yeah, not happening. Select
Okay.
screen you want to share.
Uh-huh. You see that?
Yeah, but it doesn't give you any choices.
Okay. Click on, there's nothing in, it doesn't even give you a screen one.
No.
Okay. Up at the top, do you see where it says applications? So
Nope, no active applications. Let me go into settings. Would that have something?
It sounds like you have the ability to it because it's coming up with that new thing.
Yeah.
But you don't see anything that you can click on and then hit share?
Nope. Let me try it again. Yeah, I'm getting the same thing.
Okay.
Keeps telling me to go to system preferences, but it's all blue.
It sounds like you've got that all blue.
Actually,
can I ask you to just join the room again and
let me
just
log in and log out again, see if that works.
It can be a little tricky
I'll be
sometimes
back
with
in a
that.
sec.
Yeah, no worries. How are you doing? That's just you and me. You know what I think we'll do right now, as we're testing this out, is we should give away another prize. So let me go to the prize list here. And I actually have one prepared. I was going to announce this, and then kind of the moving between presenter and myself, I actually forgot to announce it anyway. But we during Jake and Brian, while they were talking, I kind of went in and pulled a new prize. The prize that we're going to give away is a 1-year complimentary subscription to Wendy Kirkland's flagship trading newsletter. It features a list of every stock that she likes to look at. It's a 12-month subscription. The value of it is $468. I already went in and did a little bit of a random number generator with the registration list. And Christopher C. in the United Kingdom won that prize. So I'm going to send your information over to TradeWinds, ask them to kind of fulfill that prize for you. But congratulations, Charles. If you're listening, make sure you say hello in the chat and all that kind of stuff. John still isn't back in the office, which means I can see him logging in right now. I'm going to give away one more prize.
I'm back.
Okay, let's see if you can share a screen.
Share my screen. Is required
It's going to work.
Allow. Now I have screens to choose from.
Yeah, there you go.
Woo! Okay. Yeah. That was it. Yeah, nothing like them doing a major upgrade and not telling you. This happens all the time.
Yeah, well, I can see your screen now, though.
Okay. Let's drink this. Okay. Slideshow. Play from start. How's that looking?
Way better than just me. You look great.
Yeah, I keep telling people, why don't I turn on video? And I tell them I have a face made for radio.
Yeah, me too. But I do it anyway. All right, John, we can see you. We can hear you. Sorry about this snafu. Thank you for everybody for hanging out. I was almost about to start telling jokes, but we avoided that.
Oh, well,
John, it's
heaven
all you.
forbid. Yeah. All right, I'm going to show you how to play from the year-end rally. We had our pre-rally sell-off last week, gave everybody great entry points. We should chop around here for a little bit, but once the government shutdown ends and the money spigot from Washington gets turned back on again, a lot of that will end up in the stock market. So we should be able to take advantage of that. I'm going to show you exactly how to do it. This is a long-term view. The recent sell-off has created a great entry point for the year-end rally. Successive interest rate cuts by the Fed, quantitative easing, and massive money printing will combine to drive all asset prices higher. The global economy is being fundamentally remade by artificial intelligence, and those companies in the forefront, like the Magnificent Seven, will deliver the best investment performance. Look how they're doing today. Never underestimate the earnings power of U.S. tech companies. Notice how notice how well the big tech rally has lasted. Trade wars, inflation, recessions, politics, government shutdown, and exploding national debt are just temporary distractions. Keep focused on the big picture. So take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I'm in the early retirement business. Your early retirement. Learn what to do and what to buy, when to buy it, and why. So how'd you like to trade for a living full time? Why listen to me? Well, 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and 18 years now publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working. 51.05%. That's been our average annualized return for 18 years versus only 28.14% for the S&P 500. And by the way, we are up every month. I think the last time we had a down month was 2 years ago when we had that big December meltdown. That brings us up 812% since inception and 60.7% year to date. And if you notice, a year ago in November, we caught a massive move in the post-election melt-up. So don't listen to just me, listen to one of my happy followers. Okay. This is getting trickier.
Okay, go for it. Hi, my name is Wilson, and I've been with the Mad Hedge Fund Trader, John Thomas, since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80-90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
All right, Wilson, thank you very much. And let's see how he did it. He made 482% on NVIDIA, 811% on NVIDIA, again, 421% on Berkshire Hathaway, 412% on JP Morgan, 394% on Palo Alto Networks, 350% on Vertex Pharmaceutical, 113% on Silver, and 87% again on JP Morgan. Of course, the moves, his profits were far greater than the moves on the underlying stock, and that's one of the many things we can teach you how to do. So this is our secret weapon, the Mad Hedge Profit Predictor. That's a market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. Took a team of 1,000 hours of mathematicians doing calculations to create this indicator. And as you can see, we're in strong buy territory right now. When we get down to the low end here in the 20s, that's a strong buy. When we get up to 70s and 80s, that's a strong sell. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. If you don't go to a gunfight with a knife, if you are trading against algos alone, you will lose money. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of market timing indicators. You can see we get lots of buys at market bottoms, sells at market tops, buy, sell, buy, sell. It's like having a money printing machine. And I'm not the only one using algorithms. I was on Miami Beach a few years ago and saw this mega yacht, and guess what it was called? Algorithm. Some 80 to 90% of all current trading is algorithm driven. And this is the last 12 months of our indicator. You can see we got a very strong buy signal here. We made a fortune on that run up, and we're getting a similar very strong buy signal here. And guess what we're going to do? We're going to make money on this run up. So listen on and see where the big winners will be and where to put your money. Why cover all asset classes? Well, information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do and therefore interest rates is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. It will point you to where to trade and the winners and how to avoid the losers. Give yourself every advantage. Know what's happening all the time, everywhere. So, what happens when a euphoria wells off? Well, people certainly found that out over the last 2 weeks, and the people who use these tricks that I'm about to show you actually made a lot of money on the sell off. And let's see how you do it. First of all, there is an ultra short ETF called the SDS. That's a 2x short S&P 500 ETF. And whenever the S&P 500 goes down 10%, this goes up 20%. And as you can see in the spring meltdown, it tracked fairly well. When the S&P 500 went down 19%, this went from 16 to 28, which is almost a double. And if 2x isn't enough for you, there is a 3x ETF aimed primarily at day traders. And you can see again, during the spring meltdown, this thing rocketed from 18 all the way up to 38. Again, great downside protection for your portfolios, great trading vehicles if you're just out to make money on the trade. Another traditional method is to sell calls against your position. For example, in October, we sold short the Tesla 470 calls for $38. We collected $1,000 for each option as long as a stock stayed below 370, which it did. So 60% implied volatility in the options makes these very profitable. And this is why Tesla is the most traded stock in the market. You can also buy volatility. It turns out that when markets go down, volatility goes up. It went from, just in the last week, we went from 17 to 24. In the spring meltdown, we went from 15 all the way up to 60. So that was a 400% increase in volatility. And there are ETFs that you can do that. You're being long VIX like the VXX and other instruments that are out there. You can also sell short IPOs, and like everything else these days, there is an ETF for this called the IPO. And during the spring meltdown, we saw the IPO collapse from 48 all the way down to 31. And then when the market rallied, we had a near double from 31 back up to 52. So again, another portfolio protection instrument. We also have momentum. Turns out when stocks go down, momentum collapses. And in the spring collapse, it went from 230 all the way down to 170. And then if you want to play the rebound, we got a similar return on the upside when it went from 170 back all the way to 250. So you can short the MTUM and then buy it on the way back up. There's also hedge funds that you can buy to take advantage of the market volatility. And this particular one is called the SPHB. You can see we had a complete collapse in the spring meltdown from 95 all the way down to 70. And then when we had the Liberation Day bottom, we went from 65 all the way up to 105. Still, there's one more to go, and that's the HDGE. And this rises sharply when stocks go down. You can see we went from 15 all the way up to 20. And then you can short it when the stock market recovers. So again, another hedge, long side hedge you can play here to protect your assets. So, and if all else fails, you can always go to 90-day T-bills, which provide the best protection and allow you to sleep at night. These are currently yielding 3.76%. They are government guaranteed. They have endless liquidity. They trade like water. You can use 100% of the collateral of your T-bills as margin for stock and options trades. You lock in guaranteed income. They can be sold at any time and you earn interest up until the day you sell them. They will survive any bear market, but you have to ask your broker how to buy them. They're too difficult to buy on your regular stock trading platforms. So stocks, we certainly got a wake-up call last week. Hedge fund dumping of stocks happened at the fastest rate in 2 years. Alphabet beat. Amazon rockets on their earnings. Palantir beat, but the stock tanked 20%. Bank of America downgraded gaming stocks. AMD beat, but the stocks hated it. Starbucks is selling their China subsidiary. Snap shares rocketed 25% on a potential Perplexity deal. Robinhood beats, but again, the shares fell 18%. I just bought those back this morning. DoorDash cratered 23%. It turns out that low-income people are just not buying burritos anymore because of the high prices and the inflation. And finally, Netflix announced a 10-to-1 share split. So these are all different things that we can trade around, and you can too. So let's go through some of our favorite picks for the year-end rally. We think financials will do well thanks to the trading boom, the M&A boom, and lower interest rates. And JP Morgan is the gold standard there. Our algorithm is predicting $400 a share next year. We got the buy signal here in April, like we did for practically everything. Buy JP Morgan on dips. Citigroup, another one of those, waiting for an upside breakout. We're looking for $130. Berkshire Hathaway, heavy exposure to Apple, heavy exposure to financials, looking for an upside there. And you can see that the Warren Buffett retirement is priced into the market now. That caused this $100 sell-off here. The new managers are now taking over with the same strategy, and we're looking for $600 a share in Berkshire Hathaway. Goldman Sachs, another big winner from the M&A boom and trading. And Morgan Stanley, where I used to work, continues its long-term uptrend. We're looking for $200 a share there. BlackRock, you get a hockey stick effect on their earnings. As assets go up, fees go up, and as markets go up, they get more assets in. So great play on the upside, and it just had a major 20% sell-off. Interactive Brokers is a double win. They're making huge amounts of money from same-day options trading, which are now 56% of the total market. They're also moving into the betting markets. Second half of the barbell are all the traditional technology plays. NASDAQ, we're looking for it to reach 30,000 sometime in 2026, up from the current 23,000. Microsoft, we skipped one. Tesla, been grinding sideways for 2 months while we've had the EV nuclear winter and the loss of subsidies, but we think it'll bottom out at some point and then go up 10 times by 2035. Microsoft sold off big on earnings, rallying now. We're looking for $600 a share there. And by the way, these are all pictures of various planes that I have flown in air shows. I'm one of maybe a dozen or so pilots left who can fly a B-17 bomber. Meta, of course, 25% sell-off there. Got all the way down to 600. We're looking for $1,000 a share next year, and that's me next to a B-24 Liberator built at the Ford plant at Willow Run in Michigan. Amazon, fantastic earnings. We're looking for $300 a share there, and that's a B-26 Marauder. NVIDIA also sold off big on their earnings, and we're looking for $250 a share there. They're the gold standard on high-end graphics cards. That is a P-51 Mustang, which I fly about once a year in Florida, the crazy horse. Alphabet, another great earnings run. We're targeting $300 a share there. Palo Alto Networks, also looking for $300 a share. Cybersecurity never goes out of fashion as AI accelerates. So will the demand for cybersecurity. Bonds had a slow grind up, no volatility. The options have an implied volatility of only 10%. So it's really been dead in the water the whole year. No trade here. Debt crisis is postponed until 2026 when the government has to borrow or roll over $10 trillion. There still is a big overhang on this trade from the exploding national debt, which at the moment is headed for $42 trillion. U.S. yield curve is steepening. The only thing that can save the bond market is massive Fed buying through quantitative easing, which will start in 7 months. So avoid all bond plays for the moment. Here is the TLT. We got a double top here from the spring at 92, sold off 3 points. But look at this range for the entire year. It's 10 points, 82 to 92. No play there. Here is the yield play. We see it eventually reaching 3.5% when more Fed interest rates kick in. After that, we don't see much downside in rates. Foreign currencies, we've just had a rare dollar rally, but we see a prolonged decline continuing once the Fed cuts interest rates again. The recent bin is because of flight to safety, because the stock market has been collapsing. With the government shutdown, the Sell America trade is back on too. Australian dollar tanks on China retaliation. We may see another 20% move down in the buck as more interest rates loom. You want to buy all the non-dollar plays, the Australian dollar, the euro, the British pound, Canadian dollar, and so on. Australian dollar taking off like a rocket here, and we expect it to appreciate through next year. That's the FXA. The euro also had a great run in the first half of the year. It's getting ready to gear up for another one. And so the same is true with the British pound. Energy and commodities. Of course, the sanctions against Russia are a big deal. They cause prices to spike 5%, but they're slowly bleeding away from there. You can see this picture of their largest export terminal. The entire middle section is missing from a Ukrainian missile attack. Anyway, there's a global oil glut which will overhang prices for the foreseeable future. And we think oil will break the $50 line eventually. Here's our long-term oil view. We peaked at 150. Peaked at 130 in 2022. We think eventually oil goes down to $10 and is replaced by alternative energy and more a nuclear and more efficient use of cars. Comico is our favorite energy play. We've been in this for a couple of years. We've gotten a 5-bagger on this already. Stock has risen from $20 to $110, and it's recently taken off because the U.S. plans to build 80 new nuclear power plants to power AI data centers. Precious metals, we had a fantastic year. It was up 50% at one point. It just gave back 10 of that. I sold all of my gold and silver at the all-time high. Not willing to rush back in quite yet. Precious metals and related mining stocks are retreating after a parabolic move up over the past few months. Charts suggest that gold and gold miners are due for more prolonged period of consolidation to reset their bullish long-term strengths. And the downside support you can find at 39.27 and below that 37.66. But the long-term play in gold and silver is still on. Here's our recent gold chart. You can see we hit our first support level and we're going to go sideways for a while or break down to the second level, which is only 4% lower. So, but we're eventually looking for $5,000 for gold or $10,000 if I'm wrong. You like gold, you have to like gold miners, the GDX, which goes up twice as fast as gold. Also, if you like miners, you should like Barrick Gold, the world's largest gold miner. It's had a tremendous run this year from 17 up to 36. One of my favorite gold stocks. We see it going higher. Same with Newmont Mining, which just rocketed all the way from 42 to 97. Another great play. Of course, if you like gold, silver goes up twice as fast, and you've seen it this year go up 26 to 49. That's the double. And we think it has more to go. Should hit $100 an ounce sometime next year, a gain from here of 120%. And of course, silver miners are the high beta play in the silver trade. And Wheaton Precious Metals is one of the best royalty streaming plays you can get in both gold and silver. So buy Wheaton Precious Metals on dips. The hard truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. It's the easy solution to that problem is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. You need a real pro to guide you through the market maze. The markets are not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10x return from the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our trailing 1-year return, 78.65% as of Friday. And if you look at our performance, it's basically a continuous line straight up. Small dip, sideways, small dip, sideways. The only reasonable dip we got here, which is about 8%, was on the Liberation Day bottom. And of course, after that, we took off like a rocket, been grinding up ever since. Richard made millions of dollars religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast, and occasionally he lets me fly them. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money left over to send 3 kids to college. And Bob turned $500,000 into $27 million in just 2 years. And let's see how he did it.
Hi, this is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right, so what do we do all this? Well, stocks, we buy dips. Bonds, we buy dips. Commodities, buy dips. Energy, stand aside for now. Currencies, buy dips. Precious metals, buy dips. If you are not up 78.65% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 51.05% average annualized return for 18 years. Most people will take that. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite on the Queen Mary from New York to England. Once you're there, you can take the Orient Express from London to Venice, Italy. This is the very long view. And here's where the big money will really be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create another economic boom that will last another decade that started in 2023. Up 20 times in 18 years. That's what happened from 1982 to 2000. Are you ready for a replay? Well, if we get that kind of return from the 2009 bottom, that takes us up to 120,000 by 2030. That's the last time we had an identical demographic setup to what we have now, except this time it's different. We are already 3/4 of the way there with the Dow at 47,000. We just need another 2.5 times move, and we will be at our Dow 120,000 target. Except this time it's different. We have an AI tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI based products and services are just starting to roll out. The development of functional quantum computers means that computational ability is about to increase a trillion-fold at no cost. The world's major computational challenges will shortly be solved. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So he'll show you how to play the next 85,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 78.65% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month for us. You can see we made 16% buying the S&P 500, made 8% shorting treasuries, 14% on the Russell 2000, 12% on Amazon, 7% on Apple, and then, oops, we lost 21% on Biogen. We stop out of losers very quickly, usually at 2% of capital, and move on to the next trade, which you can see all made money. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going into 2026. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how it works. Our algorithm predicted an imminent upside breakout in NVIDIA, so we sent out a buy signal back here at 473. These are all pre-split prices. This is what it looks like. Buy NVIDIA at 480 or best. And for a 10% portfolio weighting, you need to buy 21 shares for a $10,000 exposure. What happened? Well, in 22 days, NVIDIA went up 45%, as we all know. So we sent out a sell alert to sell NVIDIA at 693. And on this trade, we made $4,500 on a $10,000 investment in just 22 days. So here's a history of our 10 baggers, stocks that went up 10 times after we recommended them. We got Zoom, which went up 10 times, Lam Research, 10.6 times, Square, 25 times, Moderna, 40 times, NVIDIA, 100 times, and Tesla, 178 times. That's the granddaddy of them all. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With the Global Trading Dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly webinars like this one with an interactive Q&A. Special reports on urgent investment topics. Invitations to strategy luncheons around the world. More educational videos and webinars than you can consume in a lifetime. And access to an 18-year database searchable by investment ideas and ticker symbols. This is a one-stop shop. It's for individuals who want to understand what is happening with their retirement funds, for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get, our global market comments in your inbox every morning before the market opens. And you get our Mad Hedge hot tips, the 5 most important things that happened today and what to do about them. This is not what I'm going to charge you. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge customers who get my personal cell phone number. And I'm not going to charge you $3,500. That's the price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it cost me millions more. 6 months for just $997. That is a 71.5% discount to the website price. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. That'll take you to the dedicated sales page, which is only available today. And Jeff, you can go ahead and post the link. I'd appreciate it.
Done.
Yep.
Yep, already done.
Okay, thank you. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. 6 months for just $997. Buy now and you'll instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 90% of these trade alerts make money immediately. And just to give you a tease, this is the chart of the stock that will be in the trade alert headed your way once you subscribe. I'm not going to tell you whether this is a buy or a sell. You have to subscribe to the service to find out. Buy now and you'll also receive my free video course, Options Trading for Beginners. That's a 12-chapter course with everything you need to know about options, written for the basic beginner. So, who is John Thomas? Well, if you're going to spend the next 6 months with me, it's best to find out who I am. My family origins were very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in rural California in the old days but hunting, so I picked a job as a paper boy for the Los Angeles Herald-Examiner, found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of research, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And all I ended up with, after 10 years of government service, which I trot out on Veterans Day, which is today, it turns out. No, tomorrow. It's tomorrow. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and yes, the years have not been cruel. This is my original ID card from Morgan Stanley. I served as a tank commander and pilot in Desert Storm in 1991. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it has a really big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction to leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account, turn it into $5,000, that is more job satisfaction than I can get anywhere. In the little free time I have left, pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So let's go flying for a bit. All right, when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter squadron at Biggin Hill in England. After doubling his money in his first year, concierge customer Peter Monk upgraded his service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which are today worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big, fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well as I've done for thousands of other followers over the last 14 years. I look forward to working with all of you. And let me just check our store to see what has come in. We've got John from Douglas, Georgia, just signed up. Michael from Corpus Christi in Texas. Jeff in Plattsburgh, New York. Seth in New York City. Ian in Cambridge, England. And Jay in St. Petersburg, Florida. Okay. That's about it for me. Jeff, have any questions come through?
All right. I don't see a lot of questions right here. Theodore said, except for the ME-262, it was the world's first fighter jet from Luftwaffe. So,
Yes, it was. The ME-262 was the first fighter, jet fighter, and I had the pleasure of spending a week on a cruise with an ME-262 pilot. His name was Adolf Galland, and we traded a lot of stories about flying old planes. It was a fascinating experience. And we've had another order come in, and that's from Angelique from South Africa. Thank you, Angelique. Check your inbox for that trade alert. and I work hard. I'll promise to work hard for your money. And
Another question we have is, how will the yield be affected if there's a federal debt default?
Prices go, yields go up and prices go down a lot, like down by half. If you look at other countries that have defaulted, like Argentina, for example, you can usually buy their bonds for 20 cents on the dollar. I doubt we'll ever get that low on a U.S. default, but, down 20, 30% is entirely possible. And that is why bonds are not rallying now. Usually when Fed goes into an interest rate cutting cycle, bonds take off like a rocket and rise 50 points or so. Not happening this time. We've been stuck in a narrow range, and that's because the national debt has soared from 20 trillion to 42 trillion in just the last 8 years.
All right. And then, yeah, that's the questions that we've got. I'll go ahead and I've got the links up there. John, I want to say thanks for coming in. Good job as always.
All right. Well, thanks for inviting me, and look forward to working with you in the future.
All right. Thank you very much, sir. Oh,
Okay,
and happy
bye.
Veterans Day.
Thank you very much.
All right.
Tomorrow.
Tomorrow, right, tomorrow. All right. See you later, John.
Okay, bye.
Bye. Okay. Go ahead and do this. Let's get some things shared with you. Hold on just a second. Let me share the screen here. And as we kind of move on to the next presenter, I just want to say thank you to one of our sponsors, AAII. AAII, been a great sponsor of Metastock for a couple of years now. Very well respected, well reputed organization. Do a lot of really cool things like if you've heard of the AAII Investor Sentiment Survey, that's something they do. They do a lot of research on stocks. They have an active trader division. Rondeau kicked us off this morning as part of that active investors division. So you can find more out. You can find out more about the AAII if you go to aaii.com. In addition to that, I want to say all of the offers, the extended trial, if you buy a month, we'll give you the second and third month for free. All of the offers that we've had for add-ons, everything that we've done from Metastock today. You can find all of those offers at metastock.com/conf promo. If you have any questions, you can let us know at metastock.com/sales chat or ask them in the comments. I've been really good at keeping up with questions today. So, and then 800-882-3040. There you go. Thanks for being here, everybody. I do want to announce a new prize winner, so let me kind of go over and do that. While we were kind of between speakers, I kind of went in. We used a Google random number generated number to give away a prize from Larry McMillan. Okay. Now, before I say how the prize, if you're watching this in GoToWebinar, you're already registered. You've already got a number. If you're watching this on YouTube, what you'll want to do is it's in the pinned comment at the very top of the chat. If you click on that, you can go and register. It's metastock.com/traders-conference. Just click on the link. You can register. You'll be eligible in the drawing between every speaker. I try and do them between every speaker. I missed a couple this time, but I want to congratulate the prize that we're giving away. I've got the winner on the other tab. We're going to give away Larry McMillan's top 3 newsletters. If you're familiar with Larry McMillan, he wrote what's considered to be one of the best books on options trading, and a very, very good guru. He's going to come in and talk about what he sees in the options market tomorrow. He always looks at kind of like his indicators and kind of gives a feeling for what's going on from a perspective of what are the options doing. Great gentleman, very, very smart, does a really, really good job. He does 3 newsletters. We're going to give away a complimentary subscription to all 3 of them. And I already gave it away because I'm going to give it to Doris Z in the USA. And Doris, if your email starts with Sweet Home, you just won. And if you're won and you're in the room, say hi. I love it because you just won a prize. All right. Congratulations, Doris, though. I've got your information here. I will send it over, and Larry's company will reach out to you next week to kind of fulfill that prize. So with that being said, hope you're having fun. I hope you're enjoying yourself. Our next speaker is another good friend of mine. Started trading. She had a book. I understand it was like an eclectic bookstore. I think that's exactly the way it's worded in her biography. But then I've said that before, and then she's kind of corrected me. Maybe it was an art supply store. I'm sure she's going to correct me again. So, but Wendy started trading options after there was pretty much a natural disaster that went through, and she does a really, really good job with it. She's going to talk about her methodologies to identify trades, and we're going to go ahead and get her started. Wendy, was it a bookstore or was it an art store? Or was it both?
It was an art store. My husband and I carved decoy ducks and birds, and then we carried other art and so on. But we were carvers, and that is what the shop primarily carried, our main focus. And then there was the flood, and that was a page turner.
For sure. Now, do you still do the carving?
I don't. I do some crafty stuff, but we kind of quit doing that for when I got involved with the trading and so on. It was like a page turner.
Sure, I gotcha.
Kind of started over, and eventually we closed the shop. So.
Okay. Let's go ahead and I can hear you. You sound great. Let's have you share your screen. And it's just a button at the bottom that says share.
All right.
All right, here it comes.
Hey,
I can see it. Yeah.
All right.
How are you doing today, by the way?
I'm doing pretty good. It's been a busy trading day.
Yeah.
And so it's nice that I was scheduled to come in at the end of the trading day instead of in the middle of it. So
well, I'm
really
glad
good.
you got you in here. And I can hear you. I can see your screen.
All right. And I'm going to go ahead and make it full size or whatever here, and for me anyway. And we'll go ahead and get started. There we go.
Looks perfect. I'm going to get out of the way.
Awesome.
It's your turn.
All right. And so I'm going to discuss what I have created, in a sense, for Metastock, and called Proprietary Pinpoint Indicators. And for anybody that doesn't really know who I am, as this says, I've been trading now for about 22 years, and I have 8 advisories, and I'm just so happy to have things set up here with Metastock so that they help really, really pinpoint and show the trades. That I've written numerous books and have a little new novel series out. I stay busy. But the elements of successful trading, whether it's stocks or options, futures, forex, and so on, is pinpointing equities that have consistent big moves. So I'm going to show you how to do that. We're going to zero in on equities that are overbought or oversold, and find equities that have, in a sense, formed a top and a bottom and are reversing and starting a new trend. And then you enter the trade when it's given a confirmed entry signal. So I don't know if everybody here listening knows what options are. And so I wrote just a quick little thing here to share that options, there's 2 types. There's call options and there are put options. Call options is when you think the price of an equity is going to rise. Put options is when you think that the price of a stock is going to go down. So that is what part of what sets options apart and makes them so special, because normally if you own some stock and it drops in prices, like you're saying, darn, I'm upset that has happened. Where options, you can make that choice. If you learn to look at charts and are able to read them, you can say, oh, I'm getting in because I can see that it's getting ready to go up. And you can get into a put option because you can see that it is getting ready to go down. And if you do that, you are going to benefit from the call options and the price of the stock going up. And if it drops and you have a put option, you are going to benefit from the fact that the price has dropped. So that is what we teach, what we trade. And so here's an example of option pricing. If you were to have purchased Bristol Myers, BMY, and the pharmaceutical company, and its stock was priced at $46, and you're interested in, we'll say, the contracts at the 45 strike put, that means you think that the price of the stock is going to drop. And we're looking at a 30-minute chart pattern, and you pay $1.65 per share for a 100-share put, and it expires in 3 weeks. And so you have paid $165 per contract, and we'll just stretch this a bit and say that you bought 4 contracts. That's $660. And then we're going to say the strike price drops to $43. So it was 46, now it's 43, and it did that the next day. Your premium is now $2.33 per share, and you can decide to sell it on that quick drop, and the transaction happens behind the scenes. You paid $1.65 and you sell for $2.30. You keep then the 68 cents per share difference, and you have 400 shares and realize a gain of $272 on your $660 investment on the 4 contracts. That's 41% profit for holding a trade one day, just buying, getting in, experiencing the drop that you anticipated, selling, and moving on, saying thank you very much, and off you go for the next trade. So finding equities with big routine, big moves, the best way to do that is through the average true range. It's an indicator, and it tells you what equities move on average. So this is Micron, and it moves on average $11.06 as far as a move. That's well over what the 2% move would have been on its price of $4.75. So you are going to start creating a list, or actually we do it for you on the site, but we're talking about theory here, not what I'm going to cover at the very end of this. So you're going to focus on stocks that have 1.5% to 2% moves on average every day, because that's what you want to zero in on is the high percent movers. All right. So you're going to create a watch list of equities with big moves. That this is Netflix, 2% is $20, and so its average is $31. So that is well over 2%. And you can see that over here on the chart how it's right across from the $30 line there. All right. So proprietary indicators, the next one that we're going to look at is the Commodity Channel Index, CCI. And this is a very easy indicator for traders to be able to read and understand, that I have used it for years. And you can see that there's two blue lines there in between the overbought and the oversold. That if the little red line moves above here, the blue line, that is moving into overbought. If it drops down here below the blue line, that is oversold. Often, when it gets to a point of being well overbought, it is going to pull back. When it gets way down here to well oversold, it's going to rise again. And then there's periods of time, like right in here, where it kind of goes back and forth, just kind of above and at the overbought line. And it takes time where it's moving up. So again, this is something that we are incorporating in what is going to be provided by Metastock on the charts as you're looking for equities that are going to have moves. So then we have the PPO, and it kind of shows you when things are bearish and when they are switching to be bullish. And you can kind of look here and see on the chart just where the red line crosses down below the blue line. That is where it is bearish. When it crosses up, that is bullish. Then here it goes kind of flat, bullish again, just kind of flat. And that is, you can see price rose, where it flattened out here, rose again. And you can notice that the CCI is kind of the first to show that the direction is changing. It's getting ready to rise here. And then it right here where it pulled back that little bit, this pulled back a little bit on the CCI, and then it headed back up again. So we're incorporating these indicators and having them work with each other, I guess is the way to kind of show. So then we have the Kirkland oscillator. And this is what we actually are going to incorporate within our trades. So this is US Steel, and again, you can notice that the CCI here was bullish, and then it drops down, new direction, comes down here a little bit, new. And so the Kirkland PPO here dropped, rose, went flat, rose. And so the Kirkland oscillator, this is the main one that we're going to be using as far as trading. That here it came down, went up, and here it dropped. So had I been in a trade, I'm just going to say that would have gotten in when it started to rise. When this started dropping, would have gotten out. Then when this rose again, I'd say, oh, it's starting to head back up again, and I could have re-entered and gotten in and ridden this back up again. So these are the main indicators that we're going to talk about. We now have the Kirkland oscillator, took the ATI one, ATR, average true range one off, just knowing that we are only focusing on equities that have big moves up between 1.5% and 2%. So here again, we're seeing the touch zones where you can see the red line here down below, crossed up, touched, crossed up, here it crossed down, crossed up. And so just looking at this last little bit, when this crossed up over the lines, this is where there's this big rise. So again, this is pointing us in the direction of solid strength moves, solid moves. And so putting this all together, the CCI shares when an equity is overbought, oversold. Above is overbought, where it's like, it's up so high. Then it comes down, 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 hits oversold, and then rises again. So the Kirkland PPO shows you a new trend. Here's a new trend again, starting to show up. Here it was dropping for a put. Here it is rising for a call. So the Kirkland oscillator says, all right, this is giving you the opportunity to enter a put trade, and then drops down here and you can exit. And then when it starts rising and getting close to the lines, then you can consider getting into a call trade and ride it up. Ride it up. So the trade setup from the start lets us check out that particular trade that we've been talking about for Zillow. You can see that there was this nice rise, overbought area. You can see the PPO climbed up, pulled back a little bit, climbed up again. So the oscillator was still climbing, and that is where you closed it. Then it came right down here and it touched. That is a possible re-entry. Got up here and then started heading down. And again, it is the area that you would close it. And so you can see that this rose, and when this started pulling back, that's where you would have closed. Then it started back up again, right in here, started dropping. There was some places where it looked like maybe it was going to rise again. It didn't, and that is where you close it. So this is Walmart, and can see right here, this is the CCI. It went from being negative here, crossed up, rose and rose and rose, and then started heading down. So this is the PPO, Kirkland oscillator, crossed a bit before, this one down here crossed a bit before the PPO, but I marked it on here, and right here started heading up, 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 up. And so it would have captured this whole rise. Then it kind of flattened out and started to head down. Here's another example that this had a nice rise in here. You can see that it went from being oversold, it went up here, was overbought, created a little tiny fin, and then kind of went back and forth, big fin here. And so this kind of just touched this lower area and then rose again, bigger drop, and then some little swings. So here it is suggesting that the Kirkland oscillator is still climbing, right here, climbing up. And then this is where we would close the trade, come back down here, sat right on the lines. And I don't know if it, I guess it didn't, I don't know if it just switched or if it was just maybe went a little bit smaller. Anyway, closed the trade, possible re-entry, came up, and then closed the trade here. So I guess it did shift. we benefited right here, little pullback, rose again, and made another profit right in here. So the indicators really, really help you to zero in and to be able to focus on benefiting from the rises, seeing the little pullbacks, perhaps getting back in again, or doing put trades where it's a big enough drop that you can benefit from getting into a put and earning money based on owning a put because prices dropped because you anticipated that was what was going to happen. All right, so let's review actual first and second add-on trade here. This again is Zillow. And so we're going to say that we entered right here when it crossed above the Kirkland oscillator, got up here, and then started tapering down. And this is where we did the exit. Then there was the possibility of a re-enter right here when it started bouncing up off of the Kirkland oscillator, bounced up and went up, and then started sloping down again right here. And this is where we would exit. So looking at the candlesticks, this is where it rose, started tapering down. That is where we did the exit. Here it rose, started tapering down. There was one nice candle there, but then it started heading down. That is where we exit. And so you can start seeing that we are talking about, if I go over here and I'm just looking at the last one, that we're looking at a little bit above $50 right in here. Maybe it was 52, and going all the way up here until it kind of hit the above $65 and started sloping down toward that level here when we closed. That is awesome. That is awesome. So here we go. We get to see the trade results. And again, I'm going to remind you that we are looking and focusing on equities that have 2.5 to 4% equity price moves. Those are the ones that we are going to zero in on, the ones that have the high ATR. And again, this is Zillow. And so purchase calls after the market open on August 9th, when the Kirkland oscillator crossed through the touch zone for $3.30 per share, or this should be $3.30 per contract for the September 20th 50 strike call. And let's say we bought 2 contracts so that we're spending in the $600 range. And the total would be $660. And we settle after the move on August 26th, when the contract was worth $8.15 per share, or $815 total for each of the contracts, or $1,630 for our 2 contracts that we bought. That is a gain of $970, or 147%. That is just terrific for just a few days. The price when we entered the trade was $50, and when we sold it, it was $56.50. So about $6.50 rise in price. That's a 13% increase in the stock's price. And what we made in the option was an increase of 147%. So for an investment of $660, we controlled, in a sense, $10,000 worth of stock. And we benefited from its move for a period of time, like a month or a few weeks. And had we placed that same investment in options, we could, meaning the $10,000, instead of buying the stock or owning the stock, had we placed that in options, you could have purchased 33 contracts and earned $26,896 profit. I mean, that is just amazing. But many traders in the room, many traders that I work with day in, day out, they don't want to invest $10,000 into one trade. They want to focus. Maybe they have $10,000 in their account and they want to take 10% and take that $1,000 and invest it in each of the trades that they're going to be participating in. And so they could have a couple trades open for a period of time, and then they close it, and then that money is back into their account, increase their account, and again, they can just keep investing the same amount. So this is the second trade on Zillow. And when the Kirkland oscillator popped back up on the entry line on September 10th, when it was at 54.50, we purchased the 55 strike call with the October 18th expiration date for $2.59. And we purchased 3 contracts for $777. And we held and we sold it then on September 25th for $12.75 per share. Per contract then is $12.75. And when we pulled back, that's when we exited. The strike price was $66.60. That's a gain of $12.10 per share, or we gained $10.16 per option share for 300 shares. That's $3,048 for the 3 contracts that we paid $777 for. That is awesome. So it is just a difference between well, I'm looking at my note here and saying that if we had spent the same amount, we could have bought 14 shares of stock and made $169.40 instead of the $3,048. It just, options are amazing. And it is like renting these more expensive stocks and benefiting from their price moves. So here's another call trade, and this is an example on a 60-minute chart instead of a daily chart. This is Walmart. And again, you can see on the CCI that it crossed up, heading up, moved from being negative down here, down below the 0 line, up here to being bullish. The PPO, you can see it took a little while longer, but it crossed up. And the Kirkland oscillator rose just a little bit ahead of the PPO. And so entered on the 22nd. And right there at that little arrow, and you can see it rose and rose and rose. All right. And so this is showing us how it all played out. Rose up here, and then you can see pulled back and flattened, and then really started pulling back. So right here on the CCI, you can see that it is weakening. It crossed down below the 100 line. It was still in bullish territory, but it was weakening. And so that is a sign that if you have made a profit and it is weakening, it's like, okay, let's go ahead and consider taking our profit. So you can see here on the PPO that crossed up, started heading down, and headed down here. The Kirkland oscillator looks quite similar, started rising a little bit ahead of time, rose, 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 and when it started heading down here is when went ahead and got out. So I have a lot of traders that share, and they often will say, Wendy, I find that trading is so complicated and so difficult. I want it to be simpler, more understandable. And so you're going to see when we wrap this up, the way Metastock has done it, it is very, very easy. But by easy, I mean obvious. So even this, what I have set up with the Kirkland oscillator and the PPO and all, is not terribly complicated, but wait till you see. So let's see how this played out. So if you had purchased Walmart on the 22nd, when the oscillator crossed through the touch zone for $1.40, that would be $140 per contract for the November 15th 82 strike. And let's say we bought 5 contracts, and that's an investment of $700. And we sell at the end of the day on October 24th. So we got in on the 22nd, we got out on the 24th, so we're in 2 days. The call contracts were then worth $2.63 or $263. So for the 5 contracts, earned $1,315. So that is a gain of $615 or 88% in 3 days. The $1,315 was $615 more than the $700 you paid to initially get into the trade. Walmart's price when we entered the trade was $81. When we sold, it was $83 approximately. So that's a $2 change in price. That's 2.3% increase in the stock's price over that trade period. And yet the option increased 88%. So again, that is what is the benefit of trading options, call and put. For an investment of $700, we controlled equities worth $40,500 worth of Walmart stock. Had we placed that same stock investment in the options, you could have purchased 289 contracts and earned a profit of $76,000. I mean, the point of that is just to show you the leverage and the benefit of trading options, because you can control or your money is being controlled by a larger stock investment. All right. So let's look at a put trade, and a lot of traders, they have difficulty understanding put options, because if this is New Mount Corp, and so if you could have bought it anywhere along here, and if you'd bought it and all of a sudden it had this big huge drop, that would have been awful if it had gone from, maybe you bought it at 52, rose to 58, and then all of a sudden while you were holding it, it dropped to 48. It's like, oh my word, it dropped $10, less than what I paid for it. You know, that is awful. And yet here you can buy put options and benefit from the drop. So here we look at the indicators here, and we can see that, oh, it was up here, it was overbought, started dropping. Oh, looks like it's heading down. And then based on the CCI here, you can say, oh, okay, it's starting to rise now. So stepping down to our other indicators, can see that this is sloping down with the PPO, and then this is the big drop. Look at the white space between the lines. And so here's the Kirkland oscillator right here saying it's time to get in. Entry. Drop, 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 drop. And then right here, flat, started heading up, exit. You would have benefited and gotten paid for owning a put option because the price of the equity dropped. So here's the results. You purchased a put at the end of the day on October 23rd, when the Kirkland oscillator crossed through that touch zone, and you paid 98 cents a share, or $98 per contract, for the November 15th expiration for the 55 put, strike put. And let's say bought 6 contracts for a total of $588. And that big drop happened quickly. And so you sold 2 days later on the 25th, when the bid premium was $7.58. The put contract is now worth $758 per contract, or $4,548 for the 6 contracts that we had, and that is a profit of $3,960, or 673% over 2 days, because you have learned to read the charts, read the indicators. It is showing you that price is going to drop, and you zero in and get a put option and make 673% in 2 days. That is awesome. That is amazing. So the strategy finds equities that are ready to move, stocks with consistent big moves. That's because we're zeroing in on equities that have the 1.5% to 2% average true range. You're looking for stocks that are overbought and oversold, which means they have a way to go to recover. They've, and this is just so simple, but they've put in a top and a bottom and are reversing and beginning a new trend. That is what these indicators are pointing you toward. And then you wait for your confirmed entry, which kind of cuts out all the false starts and the shakeouts and so on. And you get in, and then when you make a profit and you see it starting to weaken and start heading down or up, whichever, whether you're doing calls or puts, then that is where you close. So Metastock has simplified the chart, and they provide a scan so that not only have they set everything up for us, but and so you can see here that there's the CCI, here's the Kirkland PPO, and then the Kirkland oscillator. And they have this where it tells you it's bullish, bearish, bullish. It zeroes in. Well, as we go along here, you're going to see that it even gives more information. But before I do that, let me step over here and just share that it gives information about the company. So we're looking at Citigroup, and it's showing you what its average true range is, what the PPO at the moment is bullish, the Kirkland oscillator is bullish. It tells you about the chart and what is happening or has happened recently. It is sharing information that you can read and get involved in, or you can just look at the chart and read the indicators and say, okay, I can see that it's getting to rise. I'm going to go ahead and get a call trade or a put trade, whichever direction it is going. So here is the Kirkland oscillator, and this is GE. And when you look at the colors down here, that is pretty obvious as far as up, 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 up. You can see it rising above the Kirkland oscillator, rising, rising, rising. Again, shares the information as far as its average true range, saying what the PPO evidently is just turned bearish, but the Kirkland oscillator is bullish. It is just a very clear way to gather information. So this is a more intricate version of the chart than just the one indicator. Again, that it has the CCI again here, bearish, bullish, 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 bullish as this is rising. Has the Kirkland PPO on it. Has the Kirkland oscillator here above, above, above. Yes, there was a little place here where it got a little bit weaker, but it didn't cross down and go bearish. It just was this little place right there where it paused and then rose again. And of course, we haven't had it on the last couple charts, but the ATR is the initial one that we talked about, where you want to focus on trades that have moves that are somewhere between 1.5% and 2% on average per day. That you don't want to trade stocks that just barely move, that they move up 2 cents today and then they move up 5 cents and then down 3 cents, and so that is not how you make money. All right, well, Jeff, are you ready to kind of take over and talk about your end of it as far as sharing?
I am. I am. Let's see. I do have a couple questions and a comment as well.
Sure.
Let's see. Ahmed wanted to know, how much time decay do you like to buy? So I think what he's asking is what expirations do you like to buy when you're looking at options?
To me, I kind of, if you want to say, I mentally take in what is going on. And so if I am thinking about the market conditions that we have been going through lately with tariffs and with the government being closed down and that kind of stuff. This is not when I would be getting into a trade where I'm thinking, ooh, this is going to last for 3 months, or 4 weeks or whatever. I'm more into what is happening this week. And so I figure I'm going to be in a trade just a few days, but I buy a little extra time so I don't have as much time decay, because that is something that you can consider, that if you have just a couple days before a trade expires, you are going to get hit by time decay, where if you have a little more extra time, it might drop a couple pennies or a nickel or something, not the greater amount. So I like a little extra time, but I don't buy way out beyond what I think I might be in as far as a trade.
Very cool. And then one more comment we had, let's see. Matthew Barnes, I was trying to find it. Matthew said, the Smoky Mountain Grandma, a true inspiration. Love her books.
Thank you. It is just funny because I help traders every day, talk about trading. I try to encourage them, but I am the Smoky Mountain Grandma. I'm a great grandma at this point, but
is that new?
Yeah, not too long ago.
All right, very cool. Always fun.
Twins,
very cool.
as a matter of fact.
When was it?
Yeah, I said they were twins, so I'm a twin. Got two at one.
Autumn has a question. Where can I learn about time decay with options? Do you have a good resource for that?
Well, you all provide some information about that.
We do.
It's something that I write about and all, but time decay, how do I say this? Like if you had an equity that expired in 2 weeks, this week, each day, it might expire a nickel, and then eventually be 6 cents, and then go to 10 cents. Well, when it gets super close, then it starts dropping more and more, faster and faster. And so when there is not very much time, the price has to move a great deal more to offset the bigger jump.
Right on, yeah. We actually are going to learn about that. You'll learn about the Black-Scholes models, and then we probably won't go too deep into those today. But the Black-Scholes modeling techniques talks a lot about the Greeks, theta being one of those. I think that kind of covers all the questions, Wendy. I appreciate you coming in. It's always great to have you.
Oh, well, thank you. I enjoy it, and as you know, I love sharing. So.
Oh, here's a really cool comment that I just got in. Ahmed says, this is my favorite presentation so far.
Oh,
although they've
nice.
all been phenomenal. So I think that's a really accurate comment. The only thing I take objection to it is I also presented today. All right, great job, Wendy. I really appreciate it.
All right. Thank you very much. See you again.
All right.
Bye.
Very cool. Bye. Okay. Let me go ahead. Let's go ahead and do some sharing here. Let me share my screen. Wendy does do such a great job. And I appreciate that comment and that compliment. Let's go ahead and talk a little bit about and just kind of recap the automated swing trader, what it is, what it does, and that kind of stuff. First of all, Wendy talked about how to find the stocks with how she uses average true range to find the stocks with the greatest potential. Makes perfect sense. The more movement you have, the more range you have, the more likely stuff is to move. How to find stocks that are in a turning point, avoid whipsaws, and how to find stocks when the trend has begun. All of that kind of stuff is kind of built into kind of the strategies that she uses. I'm just coming back over here to the question. Don't worry. I'm only here to entertain. I'm not offended at all. But appreciate it. As part of it, you're going to get the indicators you need to run. That includes the PPO, the oscillator. You're going to get the expert advisor, the scan, the templates, and then a couple of templates, a clean one and then a full one that has all the indicators on it. You also have the ability to go in and scan for anything that you're looking for. And this is a relatively inexpensive add-on. Wendy talked a little bit about scanning. It's all built into the scanner. You can kind of go in. You can actually sort it by average true range. I'm noticing that this slide is not exactly to my liking, so we're going to go ahead and kind of make it a little bit more. Maybe we just try something like this. There we go. All right, a little bit more visible. So normally it's $4.99. It's $3.99 as part of the conference special. We are going to back it up with that 30-day money-back guarantee, so you can try it, see if you like it, run all your explorations. We'll throw in a free trial to Metastock if you need it. That Metastock will include the installation appointment, unlimited support, all the stuff we talked about earlier. So $3.99 is what you pay for it today. To get it, you can give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/compromo. That $3.99 is a one-time cost. It's a one-time cost with a 30-day money-back guarantee. So if you buy it and it's helpful for you, it'll just help you over and over and over and over again. If it's not helpful, you get 30 days to decide. 800-882-3040, metastock.com/saleschat, and metastock.com/compromo. So as we kind of get to, we're actually moving a little bit ahead of time, which is cool. I do want to say thank you to all of our sponsors, AAII.com, Stocks and Commodities Magazine. You can find out more about Stocks and Commodities Magazine or technical analysis of Stocks and Commodities Magazine at traders.com. And I do want to talk for just a second about the Traders Forum. The Traders Forum is a place where you can go, you can chat, you can share ideas, you can learn about the markets. It's completely free. Lots of lessons on technical analysis. We're talking a little bit about Black-Scholes because of the question about theta decay and time decay. And we're actually going to be doing a lesson pretty soon on Black-Scholes model, how it was put together. They won a Nobel Prize on economics for the Black-Scholes modeling technique. So we're going to go in and talk about how the Black-Scholes model works. And that's the next lesson we're going to do. So that's free too, by the way. We do lessons like that all the time. A couple weeks ago, we talked about CanSlim. We talked about all kinds of different indicators and methods and just kind of look at them. All that kind of stuff is for free. And also we chat. We talk about the stocks that we like, why we like them. TheTradersForum.com. You can join for free. So look forward to seeing you there. Come, say hi, pop in any case. We've talked a lot about Metastock today. It's been the highest rated software in its price category for 32 years in a row. I love how flexible it is, how you can scan, test trading ideas, identify those stocks that have the best signals. All of the offers that we're doing today are available if you go to metastock.com/conf-promo or metastock.com/saleschat, or give us a call, 800-882-3040. I did do a prize. Let me go ahead and let's see if I can find the prize information real quick. I did pull up another prize. And with this one, John Thomas just spoke right before Wendy did. Actually, it's kind of funny. We gave away Wendy's prize right before John Thomas, and right after Wendy's session, we're going to give away John Thomas's prize. So John Thomas talked about the subscription that he offers called the Mad Hedge Fund Report. And I have a little bit of a blurb on it. Let me go over here. We're basically going to give away a subscription. It's a 12-month subscription. It's normally a value of $9.97, 6 months, sorry, $9.97, 6-month value. You're going to get a complimentary subscription to the Diary of the Mad Hedge Fund Trader if you are lucky. It's called the Global Trading Dispatch. It's a $9.97 value. I already pulled the list, and Mark in the USA, if your email starts with my, you just won. So congratulations if you're listening and you won. Tell us in the comments. We love it when you're here and you win a prize, because that's awesome. You don't have to be present to win. If you are watching this on YouTube and you want to make sure that you're eligible to win a prize, there's a pinned link at the very top of the chat, which is probably over here, but it might be over here. I don't know. At the top of the chat, click on the pinned link, and it'll take you to the Traders Conference page. If you register, you'll also be in the drawing to win all of these prizes we're giving away. So there you go. Let me kind of come back in here, gain my bearings a little bit. Okay. How do you enter the raffles? Nicola, I'm glad you asked. You're in, because you asked that question in GoToWebinar. The fact that you're in GoToWebinar tells me you've already registered for the event, so you don't even need to be present. You might even win, Nicola. So there you go. All right. Very cool. Our next presenter has been a friend of mine for a number of years, Greg Capra. The thing I love about Greg is he's got these patterns that he's created. He's been using them for decades now. Greg has just a straightforward approach to the market with a very sensible approach to the market, something that really makes a lot of sense when I'm listening to him when he's talking about it. And so we love bringing Greg in here. We keep bringing him back because he does such a great job. Greg, let's go ahead and get you started.
All right. Thank you. Thank you.
You bet.
Got some fancy new software here.
Yeah. Well, they've actually had this software for a while, but we've been hesitant to change. So, but let me do this. I'm going to make you the presenter. All you have to do is click that little share button at the bottom, and it'll give you the options.
I think it's loading.
Boom, boom. Usually does take a second or two.
Yeah, share your screen. We're experiencing difficulties with the video conferencing and are unable to share your screen. Okay.
Well, that's a new one. What did it say exactly?
I just share screen.
Okay.
I'll try it again. Maybe it was in between you or applications. I'd rather share the whole screen. I think that's...
Yeah, share the whole screen should work.
Yeah.
All right. I see something.
Yeah, I think it was in between you turning it on.
Okay. No problem. I'm gonna go ahead and turn off my camera, mute my mic. I'm here if you need me. Your turn.
There we go. All right. Well, thanks for having me again, Jeff. And I enjoyed doing these. You're welcome to ask questions as we go along. Today I'm going to be talking about swing trading and how I do it. And Jeff said I've been doing this for a few decades. And the system, I don't like to call it a system, a method, has stood the test of time, bull and bear markets, some really severe ones. So a little bit about myself. I started out in the late 80s. I knew absolutely nothing. Dangerous to my financial well-being because all I could think about was the money, of course, and I had no method. Anyway, we all go through that. It's a path that we all follow, and I think it's unavoidable, but it is something somewhat unavoidable for all of you since you're here in these great webinars to hear different strategies and different points of view and how individuals have done it over the years. I can only show you my way of doing it, which is uncomfortable. You got to find out what you're comfortable with that fits your own personality. It's a big part of being successful at this. So, look, I started out, trial and error, eventually created the first service, 1994, and some of you might be familiar with it if you were around. It was called a Pristine Day Trader. And we sent out faxes, thermal paper that came out of that little machine that's probably in the Smithsonian about now. And eventually we had hotlines and first chat room ever. You couldn't talk, but you could type. It was the first ever chat room. And we used to do I used to do lots of seminars in different countries and in different hotels. And today everything is online and it's great. Master Trader used to be a brokerage firm way back when. And that's where had gotten the name and that URL. And when I sold it off some years ago, kept the URL. And as you can see, I used to do trader challenges, and eventually sold all of those recordings to another company. Basically, they say offer you can't refuse. They wanted it so badly, so here you go. But I educated hedge fund managers and specialists and prop traders over the years, and still a lot of them are subscribers. I have one subscriber in our chat room that I did private mentoring for. I think it was 1997. Great trader, and yeah, great having him in the chat room and sharing what he does every day. And so some of my students, you search the internet, I have no problem listing them because they were really fine people and went out there creating their own services or working for other companies and do a fine job. You could read about them on the website if you choose to. So this was me back in 1990, I think, 1999. It says it right there. And so that's me in the middle. And the booth that we had is a giant booth, and it was called the T3s, Training, Trading, and Technology. And, as you see, that was the Pristine Day Trader, and Master Trader was the brokerage firm, the first online brokerage firm. And today I continue to educate many individuals from around the world. And I'm going to tell you exactly how we do it from a swing trading perspective. So my approach is about reading what other people are doing. And the charts tell us that. They really are just pictures, like this says, of other people's beliefs and expectations. And so a little story, how did that bell ring? Sometimes we call them aha moments, light bulb moments. And as I'm searching for what makes sense, what works, trying to read the charts and going through, as many do, the indicator-based methodology, which just didn't work for me. And one of the things, and I'll share with you because we do this, and you might think, you guy's been around for decades, he probably was gifted or whatever. I wasn't gifted at all. And so one of the patterns that I eventually locked onto was like, how did I sell the low of that move that was moving down? And I thought there must be a picture of what selling the low looks like. And as I started keeping a journal, I realized there's the picture. That's what it looks like. And so it's about prices beginning to escalate or moving faster, and individual bars. That's what I call it candle language. They speak to you and it's not about the names of candles, whether it's a Harami or a dark cloud cover. I'm not about names and all that. Names are more or less shortcuts to communicating with others about what the picture is that they're looking at. So, for example, if you know what a head and shoulders top is, and I said, oh, look, there's a head and shoulders top in XYZ, you would visualize immediately, the two shoulders and the head. And you'd say, oh, yeah, that's a head and shoulders top. And I know a head and shoulders top is a distribution pattern. And if it breaks the neckline, it's going to go down. So when we talk about candlesticks, it's really about what those individual candles or grouping of candles communicate to us and what that means. But in of themselves, they really don't tell us how to trade. The takeaway here is to understand it's communicating to us what others are doing. What are their beliefs? What are their expectations? And based on those candles, what they're most likely to do next. So as we build this method, this trading plan, another one of the concepts that I learned by looking at patterns and keeping a journal and trying to figure out why is this pattern, and I call them pictures, right? Because, we try and say this is what we're doing and make it sound pretty fancy, but all we're doing is we're people that look at pictures and what recurring themes, and those pictures communicate to us what happened and what's likely to happen in the future. And so As I looked at those pictures many years ago, trying to figure out why is it that this picture, which to me at the time looks the same as that picture, why doesn't react the same way? Because when we look at charts and we see that picture and it says, hey, that's supposed to go up. Well, why didn't it go up? And why did that one go up? And so through looking at what I call, when I created this name, techno fundamentals and the three-legged stool. And so you've got the technical analysis part, which is it going up, down, or sideways? And how do you figure that out in your own way? And then there's this intermarket analysis part, which is pretty in depth when you talk about how do bonds influence stocks and commodities and currencies, and how does that all influence each other? So if I could just, I guess a real simple way of doing that would be to say, hey, if I think semiconductors are going to go up, well, interest rates have an influence on that. And if I'm going to trade, say, well, not trade people, maybe trade Intel anymore, but it was the go-to semiconductor at the time. But if whatever semiconductor stock I was going to look at, it probably would make sense to take a look at the semiconductor index and then see, is the stock I'm looking at, is it showing relative strength or relative weakness? That could be really helpful information. In addition, there's market internals. So without going out and looking at many different charts of different ETFs, which I do that as well, we look at market internals that give us a big picture of what's going on, and I like to use the analogy on what's going on under the hood. And so when we look at breadth, as we know, this market, and even last year, the breadth has been pretty anemic because you've got these big cap stocks that have been moving the market, and breadth has been terrible. And so the biggest or the best bull markets are when breadth is expanding. But what if it gets too good, or on the way down it gets too bad? And this gives us a historical measurement. And I don't like the words overbought and oversold, because overbought can stay that way for a long time and oversold can stay that way for a long time. So I found them to be misleading terminology. But what about extended? And extended could become more extended as well. But what about sector rotation? Money rotates from weak to strong, and sometimes from the strongest into the weaker to find out value. And so when we can take a historical measurement of when breadth reaches an extreme one way or another, what it tells us is that the majority have participated in a move, either up or down. And that's valuable information. In of itself, it wasn't the whole tell-all. You had to combine it with sentiment. But when you combine sentiment and breadth together, that's when you get something powerful that comes together, when they're in agreement, meaning you've got the majority of stocks or markets that are moving up, and now option traders are buying hand over fist call options. Nothing wrong with call options. Options are great. But when something has moved to an extreme, for an example, let's just use the analogy that something's up 15 days in a row and it gapped up tomorrow after being up 15 days, and now you're ready to buy call options. Well, you need to get some education, because that you're probably not going to make money, especially if they are going to expire in the short term. So the combination of this three-legged stool, techno fundamentals, as a swing trader is extremely valuable. So let's put this in perspective. Swing trading. I'm not an investor. I'm looking to get in at the appropriate time, 2 to 10 days. Now, you could hold for longer, and I'm going to show you a really simple way of doing that, but it's not day trading. And one of the traps that we all fall into, especially once we get our eyes and little hands on intraday charts, is to start looking at those 5 and 2 minute charts or those smaller time frames, and they will mess you up as a day trader. Because if you haven't done it, you'll do it. If you're looking at intraday charts, you will sell your great looking swing trade because you saw a red candle on a 5 minute time frame. Don't do it. You have to let these things swing or breathe. The bigger picture, the higher time frames will take care of that, and what's happening in smaller time frames eventually will come into alignment with the bigger picture. That's the thought process behind it. And I like to say that what I do and what I share with other traders and investors is a thought process. We're thinking. It's not a computer doing this, it's you doing it. So you need to be able to make decisions objectively. So the technical analysis is the same. We're just changing time frames. All of it, what I'm telling you is universal. And that's one way of saying it's the truth, because it applies to investing, it applies to swing trading, it applies to day trading, and if you so choose to do it on a 1-minute chart, good luck to you, but it'll work. But you got to, and I'll share with you the right way to think about it. I'm not going to get into day trading. So why would you want to do swing trading? Well, flexibility. There's a lot of opportunities in the right markets as long as it's moving up or down. And income. We want to make money. And so what we teach has been a time-tested approach. I said I've been doing this for decades. I don't use indicators. There's nothing proprietary about it. It's something you can start doing tomorrow. And as Jeff will share with you, I've shared with Metastock, and it's a great add-on to find these opportunities and trend following and so on. It's awesome. All right, so let me show you some examples. We have to define the trend. How do we do that? I'm going to tell you. Nothing proprietary about it. I need to know where buyers and sellers are. You say, oh, Greg, how are you going to do that? Are they going to tell you? No, they've already put it on the chart. All I need to do is look to the left. I don't need any fib lines. I don't need any VWAPs. I don't need anything fancy. It's right there on the chart. And we're looking to capture the middle of the move. There are challenges, right? You can have overnight gaps. You could be surprised. Some news can come out and things happen. Earnings. Well, if you know the earnings are coming out, don't have a position on, or you could hedge it with options. But you need to be aware when earnings are coming out. Advantages. I said flexibility. You don't have to watch the screen all day. You can even look at it on your phone. You can set alerts, see what's going on. Unless you're stopped out or you're getting up to a profit area, or you maybe want to be raising stops, there really isn't anything to do. But, see what's happening. So more frequent opportunities than investing, and we can profit and up and down. Sideways markets are going to need to be wider sideways markets because we need things to move. If there's a lot of overlapping bars, there's not much we can do. So in this example here, and Jeff, does this have a pointer? Oh yeah, it's got a little draw thing here. I got it now. Cool. Let's see here. All right, laser pointer. All right. Can I do that? I'm trying to figure out how to do that here. Oh, here we go. Look at that. That's pretty sharp. All right. So look, when prices are going sideways like this, you're either in a position or you're waiting for something to happen. Over here, where we get this, I'll just call it like a little poke bar, where it pokes down and it pulls back up again. I know that there were buyers down here. Why? Because it was going down and it went right back up again. So if I'm over here and I look to the left, I know that that's where the buyers were. And in candlestick terms, I do not even know what this is called. I forget whether it's a hammer or an inverted hammer or whatever, a shooting star, whatever. To me, it was a bar that went down and it came back up in an area where there was another bar that went down and came back up. And that communicates to me that buyers were there. And now, because the trend is up, it says it's going to go up. So I should be a buyer. I'd want to put my stop down there. Now, to advance my slides, I have to turn this off. Say, okay. Okay, there we go. All right, so now let's put together the macro time frame with the micro time frame. What is moving? What's the big picture? I'll just call it a macro chart. So from a swing trading perspective, it's going to be the weekly time frame. And you could look at monthlies, but the weekly time frame is good. At the end of a month, look at the monthly time frames because mid-month, the bar isn't done. So you could look at the bar and get some impression about what is, and it's not even done yet. So here we have, I like this thing. I just got to get used to it. Here we have, and you can see here, I already put it on here, but it's moving up and down. And over here, this is the daily chart. And in a smaller time frame, you get more ebbs and flows and more wiggles. You want to see wiggles, go to an intraday chart. I want to keep the wiggles to what's manageable. And swing trading, it's manageable. And I can sit back and let it swing and move around. So as it's coming down, and as prices pull back, this is where we want to look to be a buyer. The blue line, the light blue line, is the weekly time frame. It's pointing up. That's all I need to know. The weekly trend is up. I don't need to look at it all day long or day to day. It's just up. It's not going to change too quick unless something drastic happens. So in the smaller time frame, and it's buying, I'm looking to buy pullbacks. I could buy breakouts, of course, in that chart that I showed you. But I'm looking to get on board as prices pull back, ideally near the 20 MA. That's a guide. It's subjective, but works pretty well. A simple 20-period moving average to get on board when prices retrace toward there or a support level. At this time, I've got what's called that macro time frame, the micro time frame. They're in alignment with each other. And if I get on board at the right time, odds are those two time frames moving together. And as you think about time frames, you should think about them from the point of view of other traders. So there are those trading on a weekly time frame. They believe it's going to go up if it's in an uptrend. And those are trading on a daily time frame. They're looking to get on board, and they believe it's going to go up. So now you've got a larger group of individuals, institutions with the same belief, and they're going to help each other push prices to the upside. Now, advantages of trading with the trend. I've explained some of that to you already, but there's a higher probability of success. Right? Higher probability of success. Already more people working together. Institutional conviction. Right? Flow. Momentum works in your favor. We want that. Easier trade management, pullbacks, so you can get clear entry points, stop placement. We're going to look at some candles. So we're going to insert those candles into the appropriate place to tell us where to get in. And those pictures. Cleaner chart patterns or pictures. Right? The trends, they're more reliable. Consolidations, breakouts, continuation patterns, they're relatively easy to read. Your struggle is going to be reading it and seeing it, but the software helps you to find that, puts you in the right place at the right time. Less emotional stress. Well, it is, but if you want stress, don't learn about money management. Just put on a big position. No matter how much the odds are in your favor, you'll have stress. I guarantee you. Right? And we're looking to ride the wave. Right? We want to keep it simple, stupid. So, wide range bars. What's a wide range bar, Greg? It's just a big bar. When you look at the chart, you say, that one's big. It's a lot bigger than the ones that preceded it. You don't need a compass. You don't need a protractor. You don't need a measuring tape. It's just visually, that's a big bar. And big bars display emotion and commitment. Big commitment to the upside, big commitment to the downside. We like that. If there's volume associated with it, awesome. Doesn't always happen. And volume, I refer to it as a secondary piece of information because of all these decades, I've seen markets advance on low volume. And you have people saying, oh, this is not a bull market. It's low volume. Well, who cares? It's going up or it's going down. Usually when the volume comes in, it's near the end. That's the capitulation. But topping tail bars, now call it what you want in candlestick terms. For me, it went up and it went down. This is closing below the opening price. This one closed above the opening price, so it's a green candle body, but it was about retracements. It went up and it went down. Now, if I can take this big, and let's say it's a big red candle, and I can put that, let's go back for a second. I tend to talk too much, but I hope you're enjoying this. If we took this and turned it upside down, right, and we took that, we're turning this upside down, and we put that candle in the top of that curve as it starts to curve lower, maybe we just stay with the long side for now, right? If we took this candle and we inserted it into where that started to flip up again, that would put the odds in my favor that I'm getting on board at the right time, right? Where do they happen? Location. That's the key, right? That's the success key. That's the location that if I take this candle, or what if I had two bottoming tail candles in the same location when the trend is up on the weekly and daily time frame? Please put that in my eyesight as much as possible to buy that because the odds are in my favor. You're going to keep it simple, right? It's about momentum. Is it increasing? Is it slowing? Is it reversing? Right? So this is slowing momentum, little candle ranges. Sometimes you get little candle ranges next to big candle ranges. If you had, for example, a little candle range, and we were to take this, let's assume it's in a downtrend, and I took this and I dragged it over here. That's called a breakdown. That's a trade setup. Nothing proprietary about it. Right? Macro time frame, micro time frame, pattern should go down. Keep it simple. Right? So let's talk about turning points and pivots. What's a pivot? Well, it's just how support and resistance and trends are created. Before your eyes, they're created. So once there are three bars to the left and right of the pivot bar, a pivot has been created. Here you go. 3 bars to the left, 3 bars to the right. The one in the middle, that's a pivot. What do I do with that? Absolutely nothing so far. You just recognize that support has been created. Is it in an uptrend or is it in a downtrend? If it's in an uptrend and it's in an area of support, that's something I want to pay attention to. And again, we can insert candlesticks into these little bars. Right? One of those could be a big green bar. It could be a bottoming tail bar. And put pivots, those are reference points, the shifts between supply and demand. Now, we've got a pivot. Do something here. I don't like that color. I think I like this one better. Got a pivot. That has now created support because it's a low pivot. Remember I showed you that chart before where there was a bottoming tail bar, but it wasn't marked as a pivot, and then it got retested? I know that there are buyers going to be down there. And if it's in an uptrend, 2 time frames in an uptrend, and prices come down to a pivot low, I know there are going to be buyers there. Now I need to see the picture for them. Green bar, bottoming tail bar. Maybe it's a down bar and an up bar. So when we look at candlesticks, and I showed you a bottoming tail bar, well, what if it's a red bar followed by a green bar? Same thing. It went down and it went up. It's retracements. So now let's define a trend. We had the pivot. There was a retest, and now it took out the high pivot. 3 lower highs to the left and right. This is moving up. See how I drew this here? Of course you do. I drew it specifically for a reason. This is resistance. If this is support, this has created support, this has created resistance. What does it do at resistance? Does it go all the way back down, or does it go sideways? Sideways tells me, it communicates to me what other people are doing. They're not looking to buy the pullback anymore. They're saying, I think that's going to go up, and I'm going to buy it where it is, even though it's at resistance. I don't care. That tells me that there's strong demand and there's a strong belief that it's going to go up. Now, if it's in an uptrend, micro's up, macro's up, it should go up. So we're creating a thought process and a belief system. And I always tell students and traders, what is creating your belief system? Is it a bunch of squiggly lines? Is it an Ichikumi cloud or who knows what? Or is it objective information that is coming from a stock exchange, what other people are doing while they're placing trades, and it's then put on your software platform for you to look at? I like that much better. Right. How can I speed up the analysis? Help me see what's happening in multiple time frames without even looking at them, and help reinforce my belief system. Moving averages are subjective, meaning, here's an example. If you put a 50-period moving average on your chart, on a daily chart, and you change it to a weekly chart or a 60-minute chart, is it in the same place? No. It moves around, which makes it subjective. And it can be confusing when that happens. It's like, that was supposed to be support or resistance. How could it be support and resistance if I moved it around by changing the time frame? But the way I'm going to explain it to you, I like to call them smart moving averages, because it's a smart way of doing it. And I use the simple ones on charts. And this is how you do it. Right? It's really simple. Everything is simple when you know how. Calculate the number of bars in a lower time frame that make up a higher time frame. So weekly chart, 1 bar. Daily time frame, 5 bars. Multiply that number by the moving average in the higher time frame. And so let's look at that. Show you an example. Right? Smart moving averages. Monthly time frame, 10-period moving average, same as the 200 on the daily time frame. 20 bars, 20 trading days times 10 equals 200. Weekly time frame, 10 MA, same as the daily 50 MA. 5 times 10, 50 MA. Daily time frame, put on a 20, put on a 50, put on a 200. Now I know what's happening in the weekly time frame. I know what's happening in the monthly time frame by only looking at the daily time frame. Makes it easy. So I know what's happening in multiple time frames when I'm looking at the daily. And what I'm interested in is the 20 sloped up? Is the 50 sloped up? The 200 could be flat because it moves really slow. Is the 20 pointing down with the 50 above the 20? And are they pointing down? And the 200 up above? Or possibly, are they all intertwined with each other? What I'd call a spaghetti screen, like all the moving averages are overlapping each other. That's a picture of, it's trendless in multiple time frames, but it might start to trend at that time where you have moving averages intersecting the prices, and it's just a sloppy mess. It communicates, stay away. Sit on your hands. Right? It's a term that we sit on your hands. It means you can't touch the mouse, right? And press the button, do something stupid, right? Because nothing's happening. But it might start happening. Sometimes you get converging moving averages, which communicates that multiple time frames are converging. Again, when we look at multiple time frames, it's communicating to me about what other people are doing. Let's say, for example, something that's been going down. Right? Something was in a bear market and it's been going down, and all the moving averages are pointing down. And now the moving averages start to flatten out. And they just start to slope upward a little bit. And that might take weeks or months, depending on the length of the bear market. And so as that begins to happen and begins to slope up, that's where you can see multiple trends coming together. And it communicates to us that you have more individuals that are either washed out, right? They're just exhausted from the downtrend and they've sold. And there's been this period of accumulation. and that could form a head and shoulders bottom. It might do some kind of a pattern that communicates to us the bottoming process that aligns these moving averages where they start to turn back up again. And that begins the new cycle of starting to turn higher. So it gives us a visual of what's happening in multiple time frames, and that you have this period of accumulation. And as it starts to turn up, you start having more individuals and institutions. Like we're reading what other people are doing. It's not about the moving averages. It's about people. It's starting to turn back up again. So here's an example. And so we have this, turn that on, these converging moving averages coming together. Right? Here are the pivot lows and the pivot highs. Resistance, support, retest. The 50 was pointing down, the 20 was pointing down, the 200 is pointing down, and now prices start to move up. So the moving averages have to be dragged along. It's the prices we're really interested in. The moving averages, as I said, are a visual aid. They help me look at charts, and as I scan through things, or I tell the software, look for this. That's where software is great. You don't have to look at 5,000 charts or 2,000 charts. I'm telling the software, go out and find this picture for me, or find this trend. And it puts it in my face, and then through your ability to cherry pick, right? Because software puts you in the ballpark. Sometimes it hits it right out of the park and tells it, yeah, that's what I really want. But from my perspective, you need to be able to cherry pick a little bit to tell the differences between the greats and that's good, and then how to manage it. So here it's bottoming out, and the moving averages, they come together, they tighten up as multiple time frames come together, and then eventually, right, it breaks out. Now, with the candlesticks, I said, look at the big wide range bars. And you have that here. Here's a big wide range bar. Is there volume here? Yeah, there was a pickup in volume. That's good. That's institutions getting on board. And you could apply this to anything, an index, a chart, a stock, an ETF, futures contract. It doesn't matter. It's all the same thing. It's about people. Now, here's the resistance point. Remember I told you about the bars going sideways at resistance? That's going sideways above all the moving averages. See that little pivot there? It took 3 bars for the software to put a dot on there. And you can visualize this. You can just see it on your own. Thing is, it's going sideways. Look at these red candles. They didn't produce anything much to the downside, but I don't know that until over here. Point being, sideways price action at resistance is bullish. It tells me that there's strong demand, and the likelihood is that it's going to go up. And so it breaks out. You buy the breakout, it's going up. Here's a red bar. As a swing trader, I'm taking my money, right? From here to here. You might say, well, what about this, Greg? This was great. Look for a new setup. Take your money. Trail stop. Get out. So, the markets are crazy. People are crazy. Sometimes you get that. It craters back down again. So as a swing trader, we're looking to get the middle there. And then we look for new setups again. And here you have it again. Here's resistance. Here's support. It pokes back up again, and it goes sideways at resistance. Here's another new move. It's going up, it's going up, it's going up. The odds are in your favor. Right? Smart moving averages, multiple time frame guidance, pivots show a support, resistance, wash, repeat. Another example. It's trending down. So we can sell at resistance too we get a candle pattern like that. Now the 200 was facing up, which means the monthly time frame is in an uptrend. I want to know, what is the average monthly return for this swing trading? I'm going to show you. I'm going to show you. I'm going to show you last month. In a minute, not yet. Thing is to understand why we're doing things here. So this is facing down. This is the weekly pointing down. This is pointing up. It could have kept going down. This is just a line in the chart that I put on there, and it pokes back up again, and the whole process begins to repeat. So when it breaks out above resistance, pullback. This was, the other slide I showed you about this, right? That's what this is. That's this. And now you get a little reversal candle. This is one of those crazy wiggles. It was going sideways. Why did that happen? Could be earnings report, and then it went back up again. Some kind of whipsaw, could have been the market. I can't tell you. What I do know is that the moving averages are pointing up. Tells me don't short it. That wouldn't be a smart thing to do with multiple time frames that are pointing to the upside. So trend change. Let me cover that. Right? Trend change. How do I know it's a trend change? Remember we looked at that slide with the pivots, just the lines and the pivots. So pivot high, that's resistance. It broke down. So you might think, hey, isn't that a head and shoulders bottom, Greg? Call it whatever you want, right? It went sideways, it went down, and went sideways, and it came back up again. That made a bottoming pattern. Call it whatever you want. Make up your own name. Doesn't matter. It says it's starting to go up. It's okay to buy a pullback now. And the moving averages were lining up. Right? Just be a minimalist. Right? All time frames are up. That's your bias. What do you do with your bias? You look for buying pullbacks. You look to buy breakouts. And Juan, you wanted to know. There's last month. We're pretty active as swing traders. Some people, and this was a pretty active month. Things are more erratic, we get more active, and sometimes things are so whippy we don't do a lot of trades, but this was a pretty active month, 82 trades. There's your losses, there's the gains, and that's the difference. 76% success rate. And if you're a subscriber to the Weekly Options Trader, every trade is in there, open and closed. It even shows you the entry price, the exit price, how it was managed. There's text in there that tells you exactly what subscribers were told. And they're updated through text messaging and as real time as it could possibly be, besides having nightly videos about what's happened that trading day. In addition, I do extensive analysis on the weekends of the sectors and the broader markets. It's awesome. Right? And then here's the results. There it is. Some months are better, some not so much. I mean, that's honest trading. Sometimes things get erratic and choppy and stops get hit. But we managed the trades and the losses and the management as well, as far as telling you, hey, bring up the stop, take the money, right? Here's reaching our target and so on. A few more examples. So converging moving averages, it tells us it's all coming together. Pivot highs, pivot lows, a little bottoming process. Tells me odds are it's likely to start moving up. And it's about wash repeat. Pivot low. It didn't go down there. In a strong uptrend, it won't go down there. And so as prices push up, odds are they're going to pull back to what we call minor support. Sometimes they go through it and it gets in between there. But as it starts to form these patterns in what I call bar by bar analysis, it communicates to you what's happening. Right? So this just a breakout. There's a wide range bar breakout. I would have thought that would have gone higher. And so we're always looking for the mystery of why things don't just, do this for me. I don't know, market environments, uncertainty, economic reports, government shutdowns, tariffs. Over all these decades, it's just wash, repeat. There's always something to worry about, something coming out. But what's consistent is what we do, right? So what was resistance becomes support. It comes down there. I'm looking for buyers to show up here as it starts to move up. And this is what we call, I don't have a lot of examples of it, but this is what we call a 1, 2, 3 pattern, right? Big wide range bar, and little inside bar, and it takes out the highs. And that tells me when to get on board. Not every candlestick or every price movement tells me to act. So certain situations, I would say, are just not actionable. But we have to start with, what's my bias? Well, the moving average is pointing up, multiple time frames moving up. My bias is it's going to go up. Where am I going to get on board? During pullbacks, during breakouts, maybe a continuation pattern, which we haven't covered, but I've got an hour here, and we're covering a lot. So I thought I'd throw in a chart of a commodity. These are bond prices, right? So it's bonds, not a commodity, but it's bonds. What we're referring to here is applies to everything because it's about people trading. It's about people trading. Hey, Andre, you want to know what is the, I already answered you. Okay. People, humans, we're all the same. We all have emotions. We're all greedy. We're all fearful. We're all looking to make money. And these pictures that we look at have existed for decades and decades before I did this. One of the books that I read, it's still around today. It's like a giant Bible. Patterns of Edwards and McGee. It's a book with I don't even know if it has candlesticks in it. Anyway, I read that book decades ago, and look, at that time I didn't know anything. I was just searching for the Holy Grail. And there's pictures of different patterns. I don't even know what they called it in that book. But it's the same thing today. So support, resistance, trends, it's the same thing, just different market environments. Things get more volatile and crazy or whippy. And so whippy patterns communicate uncertainty. When prices are trending and things get tight, that tight patterns communicate certainty and conviction. And wide range bars like that, right? That's conviction. Those institutions are coming back for that. How are they going to come back for it? It's going to form a picture that communicates to me that that's what they're doing. That's what we're after. And it's applicable to whatever you're going to trade. Apple Computer, IBM, NVIDIA, S&P 500, it doesn't matter. It's all the same stuff. A little bit about money management. It's so important because, look, when I started out, I had no idea of money management. Took some horrific losses doing stupid stuff. And eventually you get a wake-up call, you go out of business. And so this basic information will keep you in the game. Just realize you're dangerous right now when you're learning. You're searching for something. And so this basic information, share sizing. So when we say a stop loss is wherever it is in this letter or in our green room, the live trading room, if I say the stop loss is here, that means according to your account, you have to share size accordingly, because if that stop gets hit, we're exiting the trade and we're going to take a calculated loss. Meaning if you're willing to lose $300 on a trade, and these numbers are just for examples, I have a $100,000 account. Let's just say for your swing trades, you put on 4 swing trades in a day. And of those 4 swing trades, or if you're a day trader, you could do the same thing. I'm willing to risk $300 on a swing trade. And in our tracking sheet for the letters, it's based on a $300 risk. So those numbers that I showed you are based on a $300 risk. So $1,200 risk per day. Maximum loss per trade, $300. Maximum losses per day, 4. You lose $1,200, you can watch, but you can't trade anymore. Well, you can. You can break the rules if you want. You do. But now this gives you some guidelines as to, hey, if my stop is 40 cents and I could take a $300 loss, I have to share size accordingly to 750 shares. Now, in my courses, I talk about, in my advanced money management course, I talk about adding to positions with the profit and raising stops to maximize how much money you can make. That's where you really start to make some money. So initially, we look at things just like I'm explaining to you. This is my entry point. This is my stop. Ideally, it's going to go up. But when we catch a winner where things are trending and multiple time frames are in alignment, and I get a secondary entry point, and I entered here, and this is my profit, I now take that profit and calculate how much I can add. And now your profits can increase exponentially while I'm still bringing up my stop. I'm not playing with a situation that I'm going to, decapitate my account. So what we covered, right, was bias, macro, micro, multiple time frame alignment, trade setup, patterns, longs at support, shorts near resistance, risk management, discipline, and rules. Without this, I like to associate this with your trading psychology. You don't need a therapist. You need this. Without this, your brain's going to be shot. You're going to be a basket case. Every day on 9 o'clock, Dan and I, that's my partner Dan. I'm the good looking one on the left. And on YouTube, Facebook, Twitter, we do a pre-market review, broader markets, and what's happening there, our open trades, trades of interest. If you're interested in credit spreads, I give the extreme, what I believe to be the extremes of the day. So that's great. We do a Master Trader Live every other Wednesday. That's an hour presentation where we cover some trading concept and cover that. And so you'd want to check that out. It's free. Why not? This is what I'm offering today. Holidays are here, and you can go to mastertrader.com holidays, and you can check out courses. The advisory letter is a no-brainer offer there for an annual. You can do it month to month if so you're there monthly. You can take a trial if you want. Anyway, the prices that are offered at this time are incredible. They come around once a year. We do it every year. And if you're interested in what we call the ultimate bundles, you can get multiple courses at a very low price. And you need education. Without the education, you're just shooting in the wind. We all do that. And if I had whatever, every time I heard, Greg, I'm going to buy the course after I make some money, it's laughable. Because would you become an accountant or a lawyer without learning how to do it? Or would you go get an education and gain some experience and, experience? And this is unlike anything else you're going to do, because it's money and it's emotion, and sometimes you associate that with some losing all your money and death and who knows what. But it is emotional. But you have a method. You're protected if you're using money management. It's about protecting yourself from financial ruin. Money management will do that, and education will teach you the right way to do it. And with Metastock and the add-on that I was able to create with Metastock, it puts you in the ballpark of what we talked about here. And that's putting the odds in your favor. And If there's any questions, happy to answer them or review any of the slides. I know Jeff's going to cover a little bit, and you can email me, greg@mastertrader.com, if you have questions. Check out the site, mastertrader.com. Look around there. Check out my blog. I write a lot of great stuff. Check out the chart of the week. I did a whole thing if you're interested in preparing for the trading day. I did a video there on the chart of the week over the weekend. So a lot of great education at the website. Check it out, and I hope to talk to you soon.
All right, Greg, thank you. We do have one question from Juan. He says hi, by the way, too.
That what?
Juan had one question for you.
Okay.
He says hi. He's like, he was curious what to know what the average monthly return with this.
Well, I showed him the 1 month as I was going through that. That's right there. That's last month. But if he wants to email me, I can definitely get him other months. I just thought doing the presentation to show what last month was. Here it is.
All right. Very good. Already written. Thank you very much, Greg. Appreciate it.
You know what? I covered a lot of stuff in a short amount of time. So I try to provide as much valuable information in the time that we had together. And so when you get the recording, just watch it again and then start looking at the charts and, start assimilating that information.
Cool. One more comment we had was from Maverick out of YouTube, and he's like, I like Greg Capra. He teaches a common sense trading. So much appreciated.
All right.
Cool. Let me go ahead and I'll go ahead and turn my camera on. I'm going to share my screen. I want to talk a little bit more about the add-on, and let's go ahead and do that. Greg, big, huge thanks for coming. Appreciate it.
Thank you, Jeff. Bye-bye.
All right. Cool. I'm going to go ahead and do this. And I want to talk a little bit. Okay. I think I went one slide too far into this. When it comes to the strategies that are built into the master trader methodology, they really fall into two categories. And I'm not going to read through all of them because there's quite a number of them, but you have setups that are designed to follow trends, keep you the right side of momentum, that kind of stuff. And then you have guerrilla or reversal setups. I just want to kind of give you a table that I put together that kind of lists all the setups that it's looking for. So you've got your master trader buy, your master trader sell, basing setups, the changing of the guard, the bullish and bearish topping and bottom tells, the changing the guard. All of those are kind of designed to follow the momentum. In addition to that, if you're looking for something that's more of a reversal, you can look at the climactic buys and sells, red and green bar ignored, the mortgage plays, the bull traps, the bear traps. Those would be more of your, but all of these are included. They're all part of this same package, a very, very straightforward way to actually kind of give you some setups that you can use. In addition to that, every single method, when you get an entry signal, is going to give you the entry parameters, why it's getting in, why it's recommending a potential long position. It's going to give you a stop loss. It's going to tell you exactly what you should do to look for your target setting and your trade management plan. All that stuff's included. So, and of course, scanning. Metastock and the scanning, I think, and I'm not, for me, Metastock, the ability to go in and scan and identify those stocks that exist is one of the best things it does. Here's a little bit of a scan that we ran earlier, but you can literally go in and find the instruments. And it doesn't matter where you trade. If you're here in the U.S., you can trade it. You can scan against U.S. stocks. Because of the market coverage that we have with LSEG, you can literally scan just about any market on Earth. There's over 300 different exchanges you can use just to find the setups. So it comes with a little bit of a trend indicator. As a special bonus, if you sign up for the Master Trader methodologies, you're going to get a 2-month membership to the Master Trader Swing and Option Trader Club. It'll include an advisory later, the swing trade options and intraday updates, videos, Facebook group access, all that kind of stuff. So that's included as part of it. We did sit down. We want to make, there's a live mic somewhere. We did want to make sure that everybody knew how to use this. And so we sat down and we recorded a training session where Greg Capra discusses the setups and how to apply them and how to use them in today's markets. And I discuss how to use them in Metastock, how to run the scans, how to use the expert advisors, how to modify the charts. Very, very good training session that's available instantly. So you get this, there's 16 total volume-based setups, price and volume-based setups. And it's good for swing and day trading, designed for scanning. In the manuals, in the documentation, it explains all of the patterns, what they're looking for exactly. Does a really, really good job. So normally it's $19.97 for this. At the conference, we're going to do a $9.97 price. We're going to back it with a money-back guarantee so you can try it, evaluate it, make sure it's helpful for you, go through the training. If you need access to Metastock, we will include that access to Metastock. You get the 2 months of the advisory center. You can do that at metastock.com/mastertrader, but you can also do it right here. So if you come up, let me just go ahead and paste this in here. Go to metastock.com/conf-promo. You can give us a call. You notice I'm kind of running this by myself just because Greg still doesn't have internet. So I have a hard time talking and typing at the same time. Go to metastock.com/conf-promo, and that'll do it for you. You can also give us a call, 800-882-3040, and you can do it at metastock.com/saleschat if you have any questions at all. So again, $9.97 is what you'll pay. That includes all of the stuff we just talked about. It includes a money-back guarantee, all the products we have, except for the subscriptions. The subscriptions, you just cancel them if you don't want them. All the one-time products, and again, this is a one-time product. If you try it out and you don't like it, it's not something that works well for you, cancel it. We'll give you a full refund. So metastock.com/conf-promo, 800-882-3040, or metastock.com/saleschat. So as we kind of move on here, I do want to say thank you to AAII. You can find out about AAII at AAII.com. AAII has been a great sponsor of the Metastock events. We really appreciate the work that they've done. And they've been doing it for a really long time. They've been a nonprofit. They do the AAII Investment Sentiment Survey. They do tons of market research and tons of fundamental research. They even have an active investor division, which was headed by Rondeau, who kicked us off today. So AAII.com. I want to say a big thanks to AAII for being part of the conference and for sponsoring us all this time. So we're going to go ahead and give away the last prize of the day. I hope you're lucky. So for the last prize of the day, what we typically do is we'll give it away to somebody that asked a question or made a comment or said something during the day. Audience participation is huge, especially on YouTube. But what I'm going to do is I'm going to look through the comments. What we're going to do as the prize is I'm going to give you 3 months of Metastock. So there's several parts of this. I'm going to give you 3 months of our Metastock real-time service. It's about a $300 value. I'm going to give you 3 months of the Metastock Zenith newsfeed. This is a professional grade newsfeed that includes data from just about 300 different exchanges around the world. And in addition to that, it includes all the Reuters news. It's really a software platform that they developed and designed to compete with Bloomberg. Bloomberg's about $22,000 a year. It's an institutional strength feed. A lot of hedge funds use the same data feed. So we're going to give that as part of it. There's a service called Learn Metastock. It's basically a site that's designed to give you training videos on Metastock and all that kind of stuff. I'm going to give you 3 months of that as well. And what I'm going to do is I'm just going to come in here to the comments. Let me make sure I've got the comments loaded here first. All right. And I do see a couple questions. Oh, Daniel asked, what's the amount of capital you had for the October returns? I don't know, Daniel. But you can email Greg. And Andres says, great presentation. Thanks, Greg. Yeah, Greg does a great job. David says, how do you sign up for the gift? Well, you just have to make comments on this particular one. What I'm going to do is I'm going to scroll through today's comments. I'm going to kind of look over to the side, and whoever I randomly pick as a comment is going to win. So I'm going to go ahead and look over here. Boom, boom. We've had a lot of comments today, too. So, all right. Earlier today, I remember this question because I answered all of them. But earlier today, Paul said, how do I get 3 lines on my Bollinger Bands? It was during John Bollinger speak. And here, I'm just going to Because of that, I gave him an answer. You just right click if you don't have see 3 lines in Metastock. You go to the properties and you can make it whatever color you want. So easy to do. Paul, because you asked that question, you won a prize. You won 3 months of Metastock. So I'll drop you some information in terms of what I need from you. If you're still here, can I see if you're still here? I'm not sure. If you're here, still here, let me know. Actually, I can. Yeah, you're still here. Paul, congratulations, you won. All right, let me copy that info off to the spreadsheet. And then as I do that, want to introduce our last guest. Alla, our last guest today, that is. Alla Peters Plocher talks a lot about Fibonacci and the numbers that she uses. She's been joining us for a number of years. She's going to talk a little bit about her Fibonacci system and how she uses it to help her identify trades. Alla, can you? Oh, I need to actually also turn on request.
Hello, hello. Can you hear
Oh,
me?
yeah, I can hear you. Yes, okay. I was worried you wouldn't be able to turn on your mic. So, but
Yeah,
I can
I'm
hear you.
good. I'm good. We're good?
You're great.
Yes,
I'm going to get out of the way. I can hear you. I can see your
yes,
screen already.
fantastic.
Take us home.
Fantastic, amazing. Yes, thank you so much for having me. And
Of
it's
course.
my
Always a
joy.
pleasure.
Thank you, thank you, thank you. Hello, traders. In today's webinar, I will be focusing on simplicity and predictive precision of the proprietary alpha Fibonacci method. But first, I would like to remind you a very important disclaimer. I'm here to empower and educate you. I am not here to provide the financial advice. I'm here to share my students' performance and testimonials, and also to encourage you to trade with risk you can afford to trade personally, and to never, ever, ever trade with risk you cannot afford to trade. Past performance does not guarantee future results, and absolutely no software on this planet will ever guarantee any performance. It is absolutely essential to recognize this is US government required disclaimer. So let's move to the fun part, shall we? You will witness in this webinar how Alpha Fibonacci predictive, precise, and very simple system had been traded by traders from complete beginner to hedge fund manager to JP Morgan trader in US and globally since 2011. How Alpha Fibonacci proprietary system identifies precise entry stops and targets across all instruments, and how you absolutely can use it on Meta stock trading platform. You will witness how you can remove pain and speculation from trading with Alpha Fibonacci simplicity, and I will gladly share a very special bootcamp offer, as today, this morning, I was teaching bootcamp, and I will share what my students shared in the very first day of the bootcamp. Briefly about myself, I arrived to US a very long time ago. I am US citizen. I came here from USSR as a classical pianist. I received my medical license and worked in Johns Hopkins psychiatry and research for years. But becoming an entrepreneur and becoming a founder, I found absolute passion and obsession with Fibonacci, and witnessing how powerful my proprietary systems I started developing since 2004 had been playing out in 2008, I chose to launch my proprietary software and website and system instead of working for financial institutions. Since 2011, I have been empowering traders in live online classes where fathers bring in their children, husbands bring in their wives, fathers bring in their children, brothers buying courses for their brothers, and this week student purchased a private mentoring for his friend. So this is a family affair at Fibonacci Trading Institute that pretty much from US and globally in more than 60 countries for traders of absolutely of all levels, all backgrounds as system applies to all instruments and can be traded on all platforms. So what played out in 2004 was very fascinating and powerful event. I was looking on one chart, making assumption it was that particular chart, but then I recognized, my goodness, it was completely different instrument. So this changed everything when I recognized that pure price is the answer. So when I will bring to your attention a very important test, this is how I develop my systems. I start with complete white canvas. When I recognized more than 20 years ago, 21 years this year, that no matter what instrument I look, pure price remains the same. No one in this room can tell what instrument this is, or what instrument this is, or what instrument this is. But in fact, every single one of these instruments completely different. Completely different. This is gold weekly. This is Bitcoin weekly. This is Nvidia. This is Euro. And this is Amazon. But if I change to S&P to any chart, what would remain constant? One thing very clearly. This is pure price. So when you trade one, you can trade them all with alpha Fibonacci system. All you need is to insert proprietary levels on the platform of your choice, such as MetaStock, and apply proprietary rules. And when you do, you know far in advance where market heading to. You know far in advance where to buy and sell market from, as shared by traders all over the world. So when Goldman and top financial institutions expressing a very strong interest in my work, it's because system is predictive, system is proprietary, and very, very simple. This is what I was teaching this morning in the boot camp. Students knew well before this played out that on S&P mini future, this was an intelligent and strategic place to buy. But when I worked yesterday with a surgeon that's incredibly busy and has very big difficulty to meet during the week, we witnessed very clearly how powerful this Sunday open was. But more than anything, when I worked with my students on Friday morning, with the power of the alpha Fibonacci system, you knew days in advance that this is a place to buy from. So if I take you back a couple of days ago, this is the power of the system. Here's this chart on retail chart going back to Thursday. Market selling off, an intelligent trader very much excited to buy the bottom. Friday, market stages phenomenal reversal and taking off flawlessly from alpha Fibonacci buy point. So it doesn't matter what chart you trade. Is it 5? Is it 10? Is it 15? You knew hours and days in advance where to buy from. And what played out this morning on S&P was overextended bullish rally that continued picking up this steam from critical key alpha Fibonacci buy point. All of this recorded on video. All of this played out during bootcamp that I will share much more about, as you will witness the power of these levels across all time frames, all instruments, such as weekly, which JP Morgan traders love to trade because institutional traders holding positions for months and years. This is bullish rally on S&P since the month of April. Extremely overextended and showing to you clearly where institutional traders started buying markets since Friday. But if I bring to your attention this chart, to the second week in April, this is what this chart looked like. While US at the start of tariff war, intelligent trader knows many months in advance where market heading to. So when bullish rally on S&P skyrocketing from 5,000 level, and you know months in advance where market heading to, this is what S&P looked like by the end of July. As you will witness the power of the system across Amazon, Nvidia, Euro, crypto, any instrument. You are never confined to trading single instrument. You can trade any instrument, any time frame you choose. And that's predictive simplicity of proprietary alpha Fibonacci system, where today on November 10th, we start seeing institutional reversal zone being reached, institutional profit taking in progress, while institutional traders continue holding longs. Profit taking is mild, but profit taking already playing out. And that's predictive simplicity, as you will witness next. Children of my students can trade. So this is just snapshot of very few pictures that I have thousands and thousands of photos with my students as I traveled the world meeting with my students, where Sam put his daughter through Harvard trading the system. Emmanuel brought his wife to the course. Both became prop firm traders. Richard retired trading the system. William is the one who 2 days ago purchased private mentoring for his dear friend. Ken, movie maker, made movie about Fibonacci Trading Institute celebrating 15 years, as you will see next. And students always inviting me to their weddings in very different parts of the world and in US. So this is pretty much our family affair. And when you come to the website and register to receive the invitation to the trading room, and you will listen to our traders podcasts, you will find it so fascinating, where you will see that if children of my students can trade this, anyone can. And you can clearly see students' performance. I will walk you through the website towards the end in detail. So this is son of hedge fund manager in London. His father brought him to the course. It's showing clearly when Dominic was born during COVID what he accomplished. And again and again and again, you can listen to all of this on our podcast channel. If 14-year-old can do this, anyone can, but father and son trading very different instruments. So this is the simplicity. Let's dive straight into it. This is Amazon. If you traded Amazon this year, you've been buying since the month of April. On the last pullback where Amazon played out, this was critical key, very late point of entry at 220 level. But if I take you back on Amazon to the month of July, you will witness clearly bullish rally on Amazon, drastically higher. But if I take you all the way back to April, as I always encourage to test my system going back many years, you knew quite well to buy Amazon, and you knew quite well where Amazon heading to. Amazon no longer at 170 level. Amazon is drastically higher. Correct? So that's the power and simplicity that you can trade on stocks, on futures, on any instrument you choose. This morning, Amazon showing very clearly profit taking as institutional reversal zone was reached. If I bring to your attention a very powerful event, one of my very favorite events this year, such as Tesla. Let's go back on Tesla more than a year. Let's go back on Tesla well before the election, shall we? Here's Tesla in September 2024. Elon Musk and Trump are the best of buddies and friends, correct? And many, many months in advance, well before Trump wins the election, you know where Tesla would crash from. Here comes the sell-off on Tesla at the start of 2025, correct? Here comes the crash. The start of the tariff war and fairy tale is over. Selling pressure is on, and you know many, many months in advance where to buy Tesla from. So when Tesla reaches alpha Fibonacci reversal zone, what was so powerful during the months of April on Tesla? Do you know? The earnings were catastrophic. The earnings were horrific, but alpha Fibonacci system spelled out. It's an intelligent place to buy Tesla from, and I dissect all of these trades with my students in live classes. Since the month of April, Tesla came out 3 times with horrific earnings, but Tesla more than doubled in value. This morning, Tesla reached 445 from horrific earnings and absolute Tesla burning on the streets and all the rest of the noise. You are witnessing predictive simplicity and precision that you can trade on any instrument you choose. That's it. So it doesn't matter if it's 5 minutes on S&P, 15 minutes on Nasdaq, rain charts, gold, oil, Bitcoin, or euro, or any instrument you would like for me to review next. If complete beginner traders can do this, if children of my students can do this, anyone can. 99% of thousands of traders that I've worked with since 2011 have been trying for many, many years. Being brainwashed that trading is difficult, trading is chaos, markets are complicated. Of course, markets are very complicated if you're clogging up price action with so many different indicators, with so many different systems, your brain cannot operate in congruent mode, as I teach tomorrow in Trading Bootcamp. When you remove all the speculative and all the delayed indicators and stop trading with random stops, entries, and targets, everything changes. Trading stops being complex. Trading stops being difficulty. You're no longer wasting your time by loading more confusing indicators. So this is a story of one of my favorite students who's been with me for 15 years. He brought his daughter to the course. Michael now is a prop firm trader moving across the country to live close to me. Emma right now is 17 years old. Showing to you simplicity and power of the alpha Fibonacci system. So when you take a look on this chart and you're witnessing that children enjoying trading this, and you can trade crypto, of course you can. And you know many, many months where to buy after the last pullback. Here's Bitcoin in the months of January. Let's take it back 11 months ago, shall we? Bitcoin in free fall, an intelligent trader excites it. You remember this level this morning on S&P, where S&P skyrocketed from? But this is exactly what played out on Bitcoin. after Bitcoin collapsed 25%. Not anymore. Finding buyers at this level and skyrocketing until 120. This is predictive precise alpha Fibonacci chess. Bitcoin right now is selling off as it reached reversal zone. 97,000 is key level on Bitcoin. That's it. So when you trade one, you can trade them all on any instrument you choose. Pure and simple. And absolutely you can do this on MetaStack. Yes and yes and yes. Alpha Fibonacci trading system removes complexities, removes noise, and allows trader to focus on simplicity across all instruments and all platforms. So pure price for entry and alpha Fibonacci for exit with proprietary retracements. So if I bring to your attention NASDAQ, this was NASDAQ this morning. As again, you insert Fibonacci retracement on MetaStack or any other platforms that has Fibonacci retracement too, and you knew where NASDAQ would skyrocket from. Again, I'm marking this level so you can see all that played out on retail charts, on day trading charts. Please pay attention. All of this since Friday, but I'm taking you back to Thursday. Today is Monday, correct? Because all of this played out live when I was with my students on Friday. So if I'm bringing to your attention how to buy the bottom on NASDAQ, you absolutely can. And it doesn't matter the chart you trade. Is it 10? Is it 15? Is it 5? Choice is yours. On Sunday open, NASDAQ opening up at critical key level, drastically higher. Let's convert this chart to 15. And this morning, NASDAQ skyrocketed from identical level where Bitcoin reversed from, correct? Pure and simple. But again and again and again, this will forever be the best to buy as low as possible without any delays. But if you obey the rules and you're buying and trading with institutional traders, the sky's the limit. But of course, if you will decide to trade options and QQQ and other derivatives on NASDAQ, you would be buying NASDAQ since April from 18,000 until 26,000 level. Day trading is not for everyone, but anyone can trade system long term across all instruments, all time frames, all platforms. So Terry came to me when he was struggling immensely. He was so stressed out when he called me. He said that he's been trying to conquer trading forever. Not anymore. Terry, my dearest friend for life. He's a prop firm trader, and I invited him to join my elite club of the graduate traders. As he says, within a couple of months, since the month of July through September, since I started trading with Alpha Fibonacci Trading Institute, my success has increased exponentially. I have gone weeks at a time without losing a trade. Alpha Fibonacci system prepares me to trade each morning with precision, allow me to take advantage of market moves accurately on entry, stop placement, and profit target. I'm an accomplished trader now, and with AFS, my learning about the market's behavior is rapid and sustainable. And that's intelligent, strategic trader who was never, ever imagined that trading can be that pure and simple. So all the pain, all the stress, all confusion, chasing market, losing money goes away. All I ask you is to make an effort and focus on this. You'll be amazed how beautiful and simple pure price is. And when you apply proprietary strategies and levels, I do not use standard. You know far in advance where to buy, where to sell, where your entry stops and targets are. If I right-click and you see the strategies I'm developing right now, they are exponential. I developed over 400 trading systems in the last 21 years. And every single system I ever develop applies to every instrument, every time frame, and can be traded on every platform. Software is never ever a requirement. Your intelligent effort is. So when Pablo came to me, he was just out attorney. He hated being an attorney, constant stress, constant pain. He had no idea what trading platform was. Here's Pablo now, prop firm trader, and he's absolutely obsessed with trading. Another complete novice. Prop firm trader trading multiple prop firm accounts, not just futures, but stocks and options, trading it all. That's it. And that's the reason I live and breathe what I do. And I wake up at 4 o'clock every morning, as I've done today. So when you trade all markets as strategic intelligent chess, you absolutely knew where to buy NVIDIA from. Let's look on NVIDIA going back years with the Alpha Fibonacci system, shall we? Here we go, taking you back by a year. You apply the levels, and you knew where to buy NVIDIA from. Here's NVIDIA exactly a year ago. NVIDIA overextended, setting up to sell off. You're ready to buy NVIDIA at the bottom. And when this plays out and rules are met, you take a trade. Despite tariff war, NVIDIA starts rallying. Flawless opportunity to buy. Rules are met, take a trade. And when NVIDIA skyrockets and reaches reversal zone, you should not be surprised when NVIDIA more than doubled in value, but now in bearish correction. That's it. Time and time again. Day trading not for everyone, but anyone can trade, system long term, and of course, you can day and position trade however you choose. Here's another of my favorite examples, Euro. Has anyone seen good news in Europe? Please tell me. With the power of the Alpha Fibonacci system, you knew where to buy Euro from, all the way at the bottom. Here's Euro taking you back all the way to 2022. 6 months after war in Ukraine had started. Here we are, Euro, at the ultimate Alpha Fibonacci buy point, allows you to buy the bottom. Here's October 2022, my goodness, 3 years ago, correct? Here we are. That's how you can backtest the system going back many, many years. And when Euro skyrockets and then selling off and comes to this level, guess what playing out? Identical event this morning on Nasdaq and S&P played out on Euro the day Hamas invaded Israel. You're not shorting Euro despite second war starting in Europe, Euro skyrocketing again. and again and again. Just to recap, putting this chart side by side. Do you remember this chart on S&P? Do you understand the power of this? You are not confined to any instrument. You trade anything you choose. If it's S&P, if it's Bitcoin, if it's Ethereum, if it's Euro, of course you can. Euro right now reached alpha Fibonacci reversal zone. Finally in bearish correction. That's it. And that's absolute flexibility you as a trader have to trade any instrument you choose. And this chart is a stunning reminder. When you use your limitless brain, the sky's the limit. With alpha Fibonacci system overriding catastrophic events in Europe. Here's another very important event, oil. I'm an incredible student in Saudi Arabia. I learned so much from my students. I never knew that traders in Saudi Arabia are not allowed to short the market. Oh my goodness, only to buy the market. So take a look on this chart on oil. This is April last year, April 2025. Let's go to March. This was extremely powerful moment because you know many months in advance where to buy oil from. And when oil collapses to the bottom, traders who trading alpha Fibonacci system, no matter if you day or position trader, you know where to buy oil from. So when oil skyrockets from this level and reaches reversal zone, what is happening during these few months? Trump and Iran in negotiations. What? Trump and Iran are the best of buds? How is that possible? Until it's not. Until US bombing Iran. What is happening on the news? CNBC is screaming, buy, buy, buy oil. US just bombed Iran. Oil supply will be under supply. But oil in free fall. With the power of the alpha Fibonacci system, you knew this many months in advance. And oil kept selling off until it reached alpha Fibonacci buy point. So you can trade this with various derivatives. And you can trade this as a day trade, of course you can. Right now, these are critical institutional levels on oil. And that's how institutional traders trade alpha Fibonacci system across stocks, commodities, forex, any instrument, any time frame you choose. Alpha Fibonacci system applies to them all. So alpha Fibonacci system guides trader to trade markets only with institutions as intelligent and strategic hedge fund trader, trading alpha Fibonacci chess on all instruments. So of course, Apple. Stunning and flawless bullish rally on Apple. You can see it on this chart. Stunning flawless bullish rally picked up by alpha Fibonacci system when Apple was at 121. And when Apple skyrocketed again from this level, no one should be surprised. As you witnessed again and again and again, as you learn in the course, this is critical key alpha Fibonacci buy point. Pure and simple. Months, weeks, even years in advance. All depends on the chart you trade. So when you trade at key institutional levels, you do not spend endless hours in front of the screen. So what would your trading be like if you traded with institutional alpha Fibonacci levels and strategies? So since we already reviewed Euro USD, why don't we go on US dollar? Shall we? Here is US dollar. So here's his US dollar in the last 3 years. Well before Trump even considered running for president. You knew where US dollar would crash from. So don't blame Trump. Market clearly preset, and I proved this for the last 21 years. And I prove this in live class every single time I teach. Here's US dollar 2 years later, 2 years ago, November 2023. No one has an idea, right? Who will run for US president or about tariff war? US dollar stuck at critical key level. And many months and years in advance, you understand when US dollar will reach reversal zone, expect sell-off and crash. And rules are met, you shorting US dollar from alpha Fibonacci reversal zone, you are not buying US dollar. Here comes the crash and sell-off in January 2025 after reversal zone is reached. By the end of March, US dollar in free fall, collapsing until finding critical key alpha Fibonacci buy point. This was the worst crash of US dollar in many years. Right now, this is key event. Intelligent trader understands. This is a crucial key level on US dollar. Bullish rally overextended. We can see additional selling pressure. That's it. Buyers are very weak on US dollar. So no matter what instrument you trade, is it S&P, is it Nasdaq, is it Nvidia, is it oil, is it gold, is it euro, is it pound, is it soybean, is it corn? If the instrument has a price, alpha Fibonacci system applies. Pure and simple. Do not overcomplicate trading. As traders like Sue, who lost a fortune before, when she came to Fibonacci Trading Institute, everything changed forever. She's not just trading futures, she's trading gold, Bitcoin, silver, oil. And that's the stories from all over the world. Patrick, I spoke with today. He says, I want to trade every strategy you will ever develop. So when students saying such big words, this is the reason I live and breathe what I do. And this is the reason I teach boot camp right now. Oh, one moment. Not sure what's happening. That never happened before. Here we go. Everyone with me? Yes?
Yes.
So when you come to the website, when you come to the home page, this is what's playing out right now. I just started teaching trading bootcamp of my course strategies. So the bootcamp value of $27.77 at no extra cost to new students who are joining group or private mentoring packages. So when you are signing up for any package below with a lifetime system for all platforms, with private mentoring, with group course, bootcamp is included in every package. Private mentoring with a bootcamp savings up to $10,000. So when you understand the power of this, and you can view videos 24/7, and you view our students' performance from traders all over the world, this never, ever gets old. This is family affair. I live and breathe what I do, and I'm very proud of our global community with very incredible human beings. I'm very fortunate to meet all over the world. So please view my students' performance, listen to our traders podcast, waiting list of my students to do podcasts, and review the information on our homepage. And again, When you click on the bootcamp link, you will see much more detail. So if you will decide to dive right into it, you will have 2 recordings from this morning. But if you cannot come to live classes, you have hundreds of videos of prior live recorded classes and a bootcamp available to you. And that's Alpha Fibonacci system. And just to emphasize, I've been teaching proprietary system for the last 15 years. This is a course system in bootcamp number 15. I have graduates of the course that sign up for all the bootcamps and all the strategies I have ever developed. So when you click on my students' reviews, this is a kind of sweetness that always comes to me during the most unexpected times. No tricks, only treats because of Fibonacci and your incredible vision. That's it. So this is William, as you saw his photo. So he just paid for his friends private mentoring. Everybody needs friends like William. That's it. So I'm launching Alpha Elite Club of incredible community of graduates and expanding into it much more next year. So if you diving right into the trading bootcamp right now, you will be amazed how it will change your trading forever. And this is hedge fund manager in London who brought his son to the course. And that's pretty much time and time again, this very, very big words. I see these things because you teach me. Pure and simple. So any questions for me, please do not hesitate to pick up the phone and call me. Simply click on Contact Us section, +1 925 257 4298 or info@fibinstitute.com. Any questions for me? Please do ask. Or send me an email, and again and again and again, simply sign up for the trading room that I will reopen next week. But again and again and again, if you consider joining us now, savings up to $10,000 and the bootcamp value at no extra cost. And this is the invitation for the trading room where you can sign up. Thank you, traders, so much. It's been my joy and honor being here with you. Always amazing being here with you, Jeff and MetaStock. Thank you, traders.
Thank you, Alla. Appreciate that. All right.
This is the link for the next week.
Okay. Fair enough. Let me go ahead and really appreciate you coming in and sharing that with us, Alla.
Thank you, Jeff. Thank you so much for having me. Thank you.
Of course. Every time. Now let's go ahead and do this. Oh, oops. That is not what I meant to do. All right. Okay. Let's go ahead and do this. Okay. All right. As we wrap up today, I want to say thank you for everybody for coming. It's great to have you. I hope you enjoyed the session. I hope it was helpful for you. I want to say thank you again to all of our speakers today. We had a great day. Started off with Rondeau, had John and Zoe Bollinger, just some great speakers today all around. So I hope you enjoyed it. I hope it was worthwhile. Thanks again to AAII, AAII.com. You can find out some more information about those. You can also find out about Stocks and Commodities magazine at stocksandcommodities.com, www.traders.com. My apologies. Big thanks to them for supporting the events that we've done over the years, and I really appreciate the work that they've done. Also, if you haven't yet joined the community, you can go to thetradersforum.com. You can join a community of traders. You can learn about the markets, learn about options, learn about different strategies. All that stuff is for free. There's tons of really cool resources up there. www.thetradersforum.com. And of course, all of the offers that we talked about today can be found at metastock.com/conf-promo. You can give us a call at 800-882-3040 or metastock.com/sales-chat. A big thank you for being here today, for being part of the event all day long. Really appreciate that. If you have any questions, let us know. Again, 800-882-3040. I look forward to seeing you bright and early tomorrow. Until then, be healthy, be well. See you tomorrow.